ने खपाया है, देशवासियों के लिए खपाया है, अपने लिए नहीं खपाया है। और मैंने इनके लिए इसलिए खपाया है कि मुझे मालूम है कि बहुत ही डिजर्विंग लोग हैं। इनके साथ 70 साल तक अन्याय हुआ है और जब उनके आंसू कोई पहुंचता है, उनके टॉयलेट की कोई चिंता करता है, वो भूल नहीं सकता है। कोरोना का कठिन काल चूल्हा बुझने नहीं दिया था, बच्चों को भूखा सोने नहीं दिया था। क्यों? एक सरकार थी जिसने कहा था अनाज के भंडार पड़े हैं लेकिन हम दे नहीं सकते हैं। एक ये सरकार है जिसका संकल्प है किसी का घर का चूल्हा मैं बुझने नहीं दूंगा।
ये जो इमोशन Welcome back. You're still tuned into Power Breakfast. Let's talk about some important updates from the world of trade now. The Biden administration has decided to impose higher tariffs, which would impact $18 billion worth of Chinese imports. CNBC's Megan Casella gets us a roundup of this move and the details as well.
The Biden administration is hiking tariffs on roughly $18 billion worth of Chinese imports. Now, these are going to be focused on what the White House calls strategic sectors. The list includes steel, aluminum, and battery components, which will face 25% tariffs. Solar cells and semiconductors will face 50% tariffs, up from 25%. And electric vehicles will see their tariff rates quadruple to more than 100%. Now, most of these tariffs will take effect this year, but some will be phased in over a year or two in order to give U.S. industry time to adjust. Now, this move comes as a result of the Biden administration's review of those tariffs that President Trump put in place in 2018. Officials said the conclusion of that review was that China had not sufficiently changed any of its behavior. They cited IP theft and overcapacity concerns. So as a result, they left all of those tariffs in place while adding these new ones. The key word the White House is emphasizing with these measures is targeted. It's why they say they feel this move will not contribute to inflation and why they believe it will not dramatically escalate tensions with China. Now, the White House economic director, Lil Brainerd, told reporters the goal with these tariffs is to ensure that the administration's investment so far in specific industries would not be undercut by unfairly priced Chinese imports. White House officials also emphasized that this is not a political move, but Brainerd did highlight Pennsylvania and Michigan, two key swing states, as areas that will benefit from these actions.
Okay, all right. Let's also listen into what Catherine Tai, the United States Trade Representative, had to say on these tariff increases.
So this comes on the heels of a review of existing tariffs. The decision has been to respond to continuing unfair trade practices that include intellectual property theft, forced tech transfer, and an overall economic system that has significant anti-competitive effects on the American economy and others. The overproduction that we are seeing China double down on in order to export their way out of their economic downturn. That over time has shown us that China is exporting its own economic challenges to the rest of the world.
Okay, all right. That is about what's happening with respect to U.S. and tariffs on Chinese goods. But let's move on and get in Manisha Gupta. She's joining in with all the update from the commodity space. Hey, Manisha, good morning.
Morning, Sonal. Thank you for that. Well, I'll start with the crude oil prices, where we have seen further gains come in. There are signs of demand from China. There are supply disruptions due to wildfires in West Canada. Also, there is decline in U.S. inventories, whether it's crude or gasoline. So that tells you that the physical demand seems to be picking up, especially ahead of the summer season demand there. And then there was OPEC a report yesterday suggesting that they are looking at a strong world demand in this year to the tune of 2.2 million barrels per day and 1.8 million barrels per day in the next year. So they are looking at stronger demand growth in this year and the next as well, and that led to some support in prices. But as always, it is the metals that have continued to steal the limelight. You have LME copper prices trading at 2-year highs, but it's a record highs for copper on Shanghai and in the New York markets there. It is bullish long-term demand and tight supply, leading to prices going higher. And then there is a very strong smart money, hedge fund money that has been flowing in metals, especially copper, which is keeping the prices where they are.
Okay, all right. That is what's happening in the commodities space. Thank you so much, Manisha, for joining us with all that update. And with that, it's curtains down on Power Breakfast today. But do stay tuned. Bazaar Morning Call comes up next with all the market action.
पंद्रह साल से ज़्यादा वक्त गुजरात में, 10 साल यहाँ केंद्र में, एक बहुत ही कड़े प्रशासक के तौर पर आपकी एक इमेज जो है निकल कर आई है। लेकिन हाल के दिनों में ये दिख रहा है कि आपका एक कोमल मन है जो रह रहकर बाहर आ जाता है। आप बहुत इमोशनल आदमी है लेकिन उसे दुनिया से छुपाते हैं।
ऐसा है कि अब टीवी का जमाना है तो लोगों को पता चल जाता है। ये कोई बाद में आई हुई चीजें नहीं होती हैं, जन्मजात होती हैं। और वो शायद मेरी स्ट्रेंथ भी है, दुनिया के नजरों में वो वीकनेस भी है, और विरोधियों के लिए ताना मारने का एक अवसर भी है। लेकिन मैं इन सबसे से परे हूं। मोदी आपका बच्चा है, आपने इसको बनाया है, आपने इसको पाल करके बड़ा बनाया है। कुछ कमी रह गई मैं ठीक करूंगा, अच्छा होगा तो आगे बढ़ाऊंगा।
We just barely managed the top line growth of around 4% in the last year, but there were certain reasons for that. And one of the major reasons was the challenge on the supply chain, challenge on the material, which was beyond our control because of various geopolitical happenings. We missed the guidance of 14,000 crore. So I don't know whether it's because of the election year or not, but yes, there was some more tenders which were deferred, especially in the metro and the rail sector, where around 3,000 crores of orders were deferred, which will now happen sometime between June and September.
Morning Call, broadcasting live from the CNBCTV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Oberoi studios. I'm Prashant. With me, my colleague Sonia. Sonia, good morning.
Hi.
And Nigel is joining us from the NSE. Morning, guys.
Hi, Nigel. Good morning. Prashant and Nigel, it's been, a couple of good days, a couple of bad days. Thankfully, we are at the better end of the stick now. But Nigel, you're at the NSE, so good morning.
Well, morning, guys. Happy to be anchoring actually from the NSE. I started my career at the NSE, so a bit of deja vu playing out here. And, it looks like a good session is in store. So let's hope we can build on to the gains that we've seen in the last couple of days.
Absolutely. And I think, yesterday we got follow-up, and I think it'll be interesting to see if you're able to build on that in more ways than one. So let's just sort of start by telling you what you need to know as we begin another session. And I'll begin, as I always mostly do, from looking at where we left off things yesterday. So the market came off towards the end. I mean, we were off about 50 points from the day's high. It was at one point looking like it'll be a 200-point kind of a day, but it was 100-plus kind of points. 50 points off. But I don't think we should nitpick. It was 100-plus points higher day on day. And global cues, importantly, remain supportive as well. Not that that has mattered in any large degree in that sense, but S&P was up about 0.5%. The Nasdaq has been up about 0.75%. This is, of course, what happened overnight. And, the market in the U.S. kind of managed to dodge a bullet. And that bullet was, of course, the April producer price index numbers, which came in stronger than expected. But I guess, some of the past numbers, like the March PPI numbers, were revised lower substantially. So the market chose to ignore it. The 10-year yield, which actually perked up about 5 basis points when the data hit, actually ended down about 4 basis points to 4.4. The dollar index is very, very steady, closer to 105 now. And that also came off a little bit. You also had Fed Chair Powell popping up in Amsterdam, and he made some comments which I think the market took very nicely. He essentially commented on the data which was released, which is the producer price index numbers, and he said that it was quite mixed and not exactly hot. He reiterated the sort of same statements he's been saying, that the next move of the Fed is not going to be a hike, unlikely to be a hike, right? I mean, so naturally, perhaps looking at a cut. But he said, well, it perhaps is a slightly longer road to get to that 2% inflation number. Nothing he's not said before, but that sort of comment on yesterday's data, I think, is what cooled markets and calmed markets a little bit. The big one, of course, is the US CPI number later today out of the US, and I think we'll have to watch out for what that throws our way. So the consensus is about 0.3. If that is a big number, I think that can be kind of a market mover for the rates market and equities as well. Before that, you get the retail sales number as well. I think that will give us a comment on what the US consumer is looking like. Now, just to sort of recap the levels, it perhaps is a reiteration of what I've been putting out for the last 2 days. The price action needs to tell us that we're out of the woods. And, you basically have to look at some markers for us to be able to do that. So yesterday morning, we said that, the first kind of pit stop is the 40-day exponential, which was 22,272. Yesterday's high was 22,270. So we almost got to that 40-day and then sort of pulled back a little bit. So that, I think, keep an eye out on that. The 40-day exponential is still around those levels, but the 20-day comes into play now. And that, as of yesterday's close, now stands at 22,320, about 100 points away from where we left off yesterday. And beyond that, you look at retracement levels of the recent fall. So the 61.8 is 22,422. So basically, 100 points from here at the 20-day, and then 100 points from there, you get to the retracement, the golden retracement, the 61.8 of the recent decline. And of course, on the way down, we should not break the sort of low that we saw. 21,821 is the number. It's a very similar kind of setup for the Nifty Bank as well. We ended higher, but with a smaller advance as compared to the Nifty. Here we need to get above the 20-day, which is 48,169. And we left off at 47,859 yesterday. And of course, beyond that, you get the retracement level. And on the way down, the swing low that we saw, which is 46,983, about 47,000, by the way. That's a number that should not break and that should hold if we are able to build on what we've seen for the last 2 days now. Day before yesterday was that big 200-point swing from the low to the high. Yesterday was another 100 points. So let's see what we managed to do. Again, I mean, I said this yesterday, don't get very excited. At high levels, there perhaps is going to be a little bit of selling pressure, which will continue to emerge. But what we're only looking for here is that the fall perhaps stops and we move a little sideways with intermittent bounces. The GIFT Nifty will come up on your screen, and that will give you an indication of how we're likely to start. So 60 points higher on the GIFT Nifty this morning. Sonia.
Absolutely, and I think the one thing that we've had relentless support from is from the globe, right?
Yeah.
Once again, you've had strong global cues. The Nasdaq, in fact, hit a fresh record high. So global cues have been very strong for our own markets as well, right? Yesterday, we saw a very strong pullback, closed above the 22,200 mark. And as I said, global cues are also very stable this morning. But the FI selling is something that continues. So FIs once again sold in the cash markets a huge amount of almost 4,100 crores in the cash market. So that is continues to be a problem pocket for the market. But there are plenty of stocks that I'm looking at this morning. Top of mind is what's been happening with Telecom. Bharti Airtel came out with their earnings. Largely, the numbers looked good. The biggest positive was the strong subscriber addition and lots of brokerages coming out and, raising the target prices on the stock. In fact, Jefferies has raised their target price on Bharti to 1,590 from 1,300. So that is one stock in focus. The other stock I'm looking at this morning is Siemens. Very strong set of numbers. It was an EBIT beat across all segments, and the board has also approved the demerger of the energy business into a separately listed company. So margin expansion, strong quarter, definitely that stock will be in focus today. And apart from that, Shree Cement, very good set of numbers also coming through this morning, post-market as yesterday. So that will definitely be another stock in focus this morning. So plenty of stocks to look at. The GIFT Nifty this morning is also suggesting a strong start. But just remember, the VIX has been surging quite a bit. So volatility can work both ways. We had one good day, one bad day, and you could perhaps burn your fingers both ways. So yes, this is a pullback. This can extend itself, but it's still better to be a bit cautious until you get a secular trend in this market. But Nigel, what are you tracking?
Well, that's right, Sonia. I think volatility is going to remain high. And, this market's not for the faint-hearted, at least in the near term, till we get that election outcome. For today's session, as the GIFT Nifty is suggesting, we're going to be starting in the congestion zone for the Nifty. The Nifty Bank will play out the weekly expiry as well in today's session. So that'll add to the volatility, particularly in the second half of trade. And we have a barrage of U.S. economic data that's expected post-market as the inflation print. You have retail sales and other economic data as well. So lots to look forward to, even post-market, because a lot of economic data will be coming in from the United States. One quick point on the flows. The institutional flows, and I made this point yesterday, if that institutional net sell number doesn't go to around 1,500 crores, we're pretty much okay. Yesterday, the net sell number was 500 crores, and we ended high with a gain of close to around 100 points. So you don't want that net institutional sell number to go out of whack, to go to around 1,300, 1,500 crores on. As the screen is telling you, when that happens, then you see a bit of a pullback on the headline index. The VIX. Yes, it's been surging for the last few sessions, but yesterday after 13 sessions in which it went from around 10 to around 20, well, it cooled off from the high point of the day. So it doubled in 13 sessions, and yesterday as well it was higher. But as we saw the VIX cool off, you saw the Nifty as well moved off. So, that volatility index is in check, and you don't want it to run away, but it's par for the course, right? Even if it goes to around 24, 25, well, it's par for the course because we're anticipating a big verdict. And the IVs on both sides will be relatively higher getting into that event. Well, what did the FIs do? In yesterday's trading session, they unbound some longs. 20,000 long contracts were unbound. And short positioning increased by close to around 18,000 contracts. So the swing factor out there is close to around 38,000 contracts, which took the total net short positions from the FIs to more than 2 lakh contracts. Now, this is important because, you need to adjust for the change in contract size. So if we're looking at it on a like-to-like basis, now the FIs are net short on that 1 lakh as per the old contracts. It's appearing like 2 lakh contracts, but there's a change in the contract size. So that's what we normally look forward to, and that's precisely what's happened. What about the options data? 22,100 put, 22,200 put. Both of them did see some addition. And in a market that ended higher, you want to see the nearest possible put seeing some kind of writing, and that's what happened in trade. Which brings us to the levels. We're at the congestion zone. 22,300, that's the important mark, 2050 DMA around there. And a reference point on the downside will be around 22,000 odd, because that's where the 100 DMA as well comes in. The lower support is at around that 21,800, but 22,000, that's a mark you should track. The Nifty Bank is pat in the middle of those levels that we've been talking about, the 20 as well as the 100 DMA. So that's the broad range that the Nifty Bank is trading in. The stock that I'm looking at is Shree Cement. All its peers did see a contraction in EBITDA per ton on a sequential basis. Shree Cement went ahead and held it steady. In fact, there's a marginal increase out there. So the stock opens up in the green, but we'll await further clarity, and the management will be joining in at around 9:30 a.m. today. And just one quick point, since there's that MSCI rejig that's been announced, India's weightage in the MSCI Emerging Market Index, it's set to go to around 19%. 4 years or so ago, it was only around 8%. So there's a big surge that we're seeing now. Then China, it's come down from around 43% to around 25%. Yes, it's in relation with the way the stock markets have moved on the whole, but you can't avoid India, right? Just take a look at the way we have outperformed, and that's why this big switch in terms of weightage on the MSCI Emerging Market Index. I just wanted to add that point, guys.
Okay, thanks a lot for that. Well, lots of stocks in focus. So without wasting any time, let's get you some money market views this morning. On the rupee front, Kunal Sudhani of Shinhan Bank says that the dollar index eased after an unexpected increase in the US producer prices in April amid strong gains in the cost of goods and services. Fed Chair Jerome Powell signals a strong US economic outlook, which may delay the interest rate cuts. Important levels to watch on the dollar index is 104.75, and if that breaks, then it can test 104.2. All eyes are now on the US CPI due today. For the dollar INR, 83.42 acts as a support, while 83.60 is a resistance level.
Well, on bonds, we've got Neeraj Gambhir of Axis Bank, who says that India's CPI inflation came in at 4.83% as expected, with core inflation inching lower. Government announced another buyback of 60,000 crore rupees for the week. He expects the 10-year benchmark yield to take cues from the US CPI data and trade in a range of between 7.05 and 7.15% for the week.
Okay, we have lots of stock-specific action to track today and many on the upside. So we'll get to that in just a bit in our special segment. Top 10, we're looking at Bharti Airtel, Bharti Hexacom, Shree Cement, Siemens, Colgate, Patanjali Foods, Radico Khaitan and Oberoi Realty. That's on the back of positive news flow, and Cipla and Apollo Tyres are likely to open in the red post their numbers.
All right, well, a lot going on, right? Jeffrey Dennis is with us, independent emerging markets commentator. Jeffrey, good to have you with us here. Good morning. Prashant this side, thanks for joining us here on CNBC TV18. So what's with all these tariffs, Jeffrey? Yes, we were talking about how but this was expected. Green exports out of China, EVs being tariffed higher, much higher. And by the way, newspapers in Europe are also reporting that EU is increasing tariffs on electric vehicles out of China coming into Europe quite substantially. Elections in the US 6 months out, but we're already starting to hear a lot of noise around this. Your sense, and could this become a bit of a risk?
Oh, I think it is a long-term risk for markets. I'm not sure it's necessarily a risk in the short term, but I think what's slightly concerning about it is that initially tariff increases were imposed by President Trump in 2018, and everybody thought, this is really bad news. It's a really poor way to run a global economy, and it runs the risk of global recession. Now, it seems that not only the Trump Republican Party, but also the Democrats are doing the same thing. And of course, you're seeing, as you rightly say, some talk about tariffs in Europe also. Now, I think this sort of reflects the way in which, you're getting some disconnect between these big regions now. US-China trade has slowed right down, partly because of tariffs. And I think you have to watch this very, very carefully, because the economists would say, and I am an economist, that free trade is really the best way to go forward. So I'm watching this for the long term. I don't imagine it's going to be a problem in the short term, but it seems whoever wins the next US election, we're going to see more tariffs. And I think that's bad for the global economy over the long term.
Okay, Jeff, hi, good morning. How are you feeling about a market like India? We've had a great run so far, but we have a big event upon us, which is the general elections. And, the opinion polls or the narrative is swinging at this point in time. So there's no certainty whether the current government will come back to power in a dominant way. There is some volatility in the market now, but do you think this is a great opportunity to buy into India?
I think it is for the long term, but certainly in the short term, there are, I think, a number of uncertainties. And I would list a few here. Number one, as you say, the election. I was talking to a dear friend of mine, Indian friend, just yesterday, and he was saying to me, look, this thing is by no means guaranteed the BJP will increase their majority, maybe not even become the biggest, the next leader, the next prime minister, Mr. Modi, again. So I think that would be a big negative for the market in the short term. I think what's happening also is China is finally rallying. It's actually boosted emerging markets a lot, and there's so much debate amongst emerging market investors about, do I go to India? Do I go to China? Obviously, there's much more choice than that, but this is sort of India versus China thing. And China has clearly done much better this year, although India is a small outperformer as well. And then thirdly, and I think this is really important for, the fundamentals of the market, you will only, I think, see India doing really, really well here when you have a sufficiently weak US dollar that you do see a little bit more stability of the rupee, possibly even some sort of a rally, which will ultimately, given these pretty decent inflation numbers in India, allow the RBI to start thinking about interest rate cuts. And so I think those are all the uncertainties that are being generated right now in India. I still think it's a great market for the long term, but there are some uncertainties in the short term. Without any question, this, I'm sure, explains some of the bad news recently in terms of FII flows.
All right. Hi, Jeff. Good morning. Good to see you, Win. Jeff, our markets are not really prepared for any kind of shock or any negative outcome. We want to see continuity of the current government. So as of now, I don't think the markets are positioned for any shocker, but we take your point on board. Now, the toss-up between India and China, there could be some near-term headwinds for India. Valuation-wise, well, we're trading much more expensive than China as well. So in the near term, what's your preference between India and China?
I can see the Chinese market has got a bit of momentum here, and I think it could well outperform for a while longer. But the bottom line here is that the government in China is going to really struggle, in my opinion, to get the economy to grow at the 5%, about 5% target that they're talking about. And they've got massive, massive problems within the banking system, and in particular, of course, within the commercial real estate market. So I think the fundamentals much favor India here over China at this point. Now, India's expensive. It's always expensive. It's always more expensive than China. And one of the reasons China's done better this year is because it had 3 terrible years and it suddenly became very, very cheap. Over the long haul, given India's growth potential that is still there, given, I think, really quite reasonably stable currency performance, given how strong the dollar's been, and given that I think at the end of the day we probably will get the BJP government coming back, but of course that's an uncertainty. This is still the best growth story within the emerging market. So over the long haul, I would far rather be long India versus China. It's just that right now we seem to be in a sort of a pocket of uncertainty about that, and China's doing well, but I think China's got a lot more long-term economic challenges at the moment than India faces.
Okay, China has a lot more economic challenges than India. So in the longer term, India is a good growth story. Got that. Jeff, thanks a lot for stopping by and speaking to CNBC TV18. Appreciate your time here. That's the word coming in on the global market setup and how market observers are looking at India. Let's slip into a quick break. On the other side, our list of top 10 stocks with our entire research team comes up. Stay tuned.
The BRS is pulling out all the stops to revamp and revive itself on the ground. Realistically, what's the picture on the ground and how many seats are you targeting?
Well, our research team is standing by with CNBC TV18's list of top 10 stocks for the day. Let's kick it off with Cipla. That's first on our radar. Vivek is here to tell us more about that. Vivek, over to you.
Well, good morning. Cipla is in focus on the back of a large anticipated block deal that could happen in today's trading session. We had access to the term sheet last evening, and according to the term sheet, we understand that the promoter group is looking to sell a little over 2.5% stake in the company via a block deal. Now, the selling shareholders are part of the promoter and promoter group. Remember, they held a little over 33% stake in the company, 33.47% to be precise, at the end of March quarter. Now, the price range of the expected deal is between 1,289.5 rupees a share to 1,357.5 rupees a share, which indicates a discount of up to 5% to yesterday's closing price. Remember, even yesterday, the stock was under pressure. So at the floor price of this particular block deal, the total amount that could exchange hands is close to 2,637 crores. Now, on the back of that, we are going with the red at this particular name on the back of the large supply that the stock could see in today's session.
All right. Vivek, thank you very much for that. Well, let's focus on the telecom space, right? And Bharti, which reported numbers yesterday, and Bharti Hexacom, both are going to be in focus. Reema's got details here. Reema, morning.
Hi, good morning. So Bharti Airtel has reported in-line numbers. Now, Bharti is a sum of parts. There's Africa, there's enterprises, India Mobile. But focusing on the pure India Mobile business, the numbers are in line. The company has reported a top-line growth of 2% ahead of estimates, though slightly lower than what Jio reported. Margins are absolutely steady at 55.1%. The big positive surprise was the increase in the number of subscribers. The company has added 6.7 million subscribers on a quarter-on-quarter basis, though the ARPU increase was a bit insipid. Consolidated numbers, though, were lower than street expectations on expected lines because the Africa business was weak and they reported numbers last week on the back of the Naira devaluation. But purely looking at the India Mobile business, these are, very steady set of numbers and fairly robust. Now, talking about Bharti Hexacom, this is the first result since the company listed in April, and the stock has, skyrocketed. Issue price was 570 and the stock is closer to 900 rupees. Steady numbers, 3.7% top line growth quarter on quarter. Year on year, it's inching towards an 8% growth. Margins have improved by 100 basis points sequentially, and profit growth too has been steady. Subscriber ads and ARPU too have improved on a sequential basis. Back to you.
Okay, thanks a lot for that. Well, Shree Cement is the other one that reported a very good set of numbers. Nigel is here to give us the lowdown. Nigel, over to you.
Well, that's right. Shree Cement's numbers were very, very good, Sonia. The EBITDA per ton increased marginally on a sequential basis. Most of its peers had reported a decline. How was this possible? Well, a couple of factors played out. For the time being, let's run you through the basic numbers. Revenue is higher, EBITDA was higher, margins were higher. Why was the top line beat? Because they sold higher volumes than expected, closer under 100,000 tons. So that's point number one. The second factor was the realization decline was only 3%. The street was bracing for a number of 5 to 6%. We'll require clarity over here because they don't give their power revenue separately, and they've not given how much over the premium product sales as well. So we'll require some details on that front. But because of higher volumes and lower contraction in realizations, we did see a top line beat. The EBITDA beat as well did come into play because it's flowing in from the top line. Operating leverage played out, and besides that, the power and fuel EBITDA per ton was down by close to around 15% on a year-on-year basis. The management has said for this coming year, they have close to around 4,500 crores of capex has lined up, which takes their capacity to around 65 million tons. Keep in mind, they're sitting on cash of more than 6,000 crores odd. So it's a good set of numbers. The only problem is we wait for clarity on the income tax rate that took place last year. And the second factor is valuations have not been cheap for Shree Cement, and it's never been cheap. So those are the only problems. In fact, we'll chat with the management at around 9:30 a.m. So we'll get you further clarity at that point of time. So Shree Cement is a stock that reacts positively. But the other one that will be reacting well is Siemens. Vamakshi, tell us more.
Well, absolutely. The company reported a very strong set of numbers. It's a beat across the board. The positives this time around is the revenue. Revenue has seen an uptick of almost 18% YOY. It's come in nearly 4% above our own expectations. And in fact, this growth is being seen across all the segments, including smart infra, digital businesses, digital industries. Apart from that, when we look at the margins also, they've come in much higher than what we were expecting at 15.3%. And the net profit profit has also come in nearly 41% higher than what we were expecting, and this is largely being driven by volume as well as price effects as well as continued productivity measures. So a large chunk of the improvement in profitability seems sustainable as far as the company's commentary is concerned. But apart from that, the management also highlighted that the government infra spend looks quite robust, and private sector capex is just starting to pick up. So again, that's another positive, and in order to capitalize on this, a total capex of over 1,000 crores is what the company will be doing over the medium term. They've announced additional capex of 333 crores for expansion in Goa and 186 crores for setting up a train manufacturing facility in Aurangabad. Apart from that, the other announcement is with regards to the demerger. They've announced that the company will demerge its energy business into Siemens India Energy. Apart from that, the miss, however, this time around was the new orders. They were down almost 9%, and this is mainly on account of a deferment of some large orders as well as slowdown in ordering of industrial automation products due to channel destocking. But nevertheless, overall, it's a strong set of numbers. The demerger announcement as well as the capex announcement could lead to the stock opening higher today.
Right, Makshi, thank you very much for that. Stocks, of course, have done some 70% this year, right? Along with ABB, it's been a huge outperformer. Colgate reported numbers as well. Mangalam has got that set. Mangalam, morning.
Good morning. So Colgate, good set was expected. A company reported an even better set. In fact, the margins of the company have been at a near all-time high. In fact, all-time high for Colgate in terms of the EBITDA. Revenue growth of 10% was expected. The company reported a 10% growth out there, 1490 crores on the top line. The EBITDA 532 crores versus our poll of around 515 crores. That meant the margins at 35.7% were above expectations as well. And that's flown down to the bottom line with a growth, net profit at 380 crores versus expectations of 365 crores as well. Why is it that the margins improved? Because of the price hikes that the company took and also the product mix. Gross margins improved by 240 basis points. And the margins are at a record high despite the company actually spending a little more on advertisements as well. 11.3% is what they spent as against 10.6% earlier. Commentary was fine as well. They said that rural markets continue to exhibit positive signs of consumer demand recovery. It's better than the urban for them, and that accounts for nearly 40% of their sales. Growth momentum in the fourth quarter came in on the back of strong performance in their toothpaste vertical. And more importantly, from a portfolio standpoint, they will get some more variants from their global portfolio into India, and also have launched some new variants of Palmolive, a business which is likely to grow at 2x the company's overall sales. And they're optimistic that this year would be a good one. So see some green on Colgate.
Okay, thanks a lot for that. See some green on Colgate. Apollo Tyres is the other one we're tracking. I'm going with red over there because the entire tire space has seen very slow growth this quarter. But Apollo Tyres particularly has seen the slowest growth amongst its peers. So let's take you through the numbers. It was a miss both on revenues as well as on margins. It was the low single-digit growth that the company saw on the top line. If you can see over there, it's barely a 0.2% growth on the top line. The EBITDA is up just about 3%. The EBITDA margins are absolutely flat. And it's actually a fall in their net profits that they've seen this time because of the EPR provisioning that a lot of these tire companies had to make, which is the extended producer's responsibility provisioning. These are requirements imposed on the tire industry by the government of India, and that's the reason why you've seen that fall in profits. But if you just break up the segments, right, there's barely any growth. Europe has grown just about 1.3%. The Asia Pacific and the Middle Eastern region has not even grown 1%. So there's a slowdown across the board. And if you look at the peer comparison, Apollo Tyres has seen the slowest growth compared to its peers. Its revenue growth was just about 0.2%, while peers like CEAT and MRF at least saw 4 to 8% growth. So I'm going with red on Apollo Tyres this morning. But Mangalam is back with us to talk about Patanjali Foods and Radico Khaitan. Mangalam, over to you.
Well, for Patanjali Foods, the revenues grew just around 4.5%, but it was an operational improvement where the margins came in higher by about 50 basis points. And on a business that works on wafer-thin margins, an improvement in margins is definitely a positive. Edible oil volumes actually increased by 5%. The prices have been lower, which is what reflects in their revenues. But the revenue growth this time around was led by a record performance in their food and FMCG business, which increased by 49%. The key trigger for them, however, is that the board has formed a committee to peruse the proposal of acquisition of Patanjali Ayurved's non-food business, which includes their personal care business. So were that to happen, that would provide a fillip to their revenue growth, and as a result of which, this would be a big positive too. On Radico Khaitan as well, I'm going with green because the revenues have grown 30%, EBITDA has grown 55%, and net profit around 26.5%. While their overall volumes have declined by 1.2%, the prestige and above volumes have actually increased by 14%, and that accounts for about 503 crores in their overall revenue. They've given outlook for the next year as well, double-digit growth in their premium vertical in FY25. While they're monitoring the prices of raw materials, they will maintain ad and sales promotion spends at between 6 to 8% of their sales. Strong performance from the premium end of Radico Khaitan, hence I see green on both.
Okay, all right, Mangalam, thanks for that. Well, let's go across to Sonal. She's here to tell us about Oberoi Realty. Sonal?
Good morning, Nigel. Well, let me start with the P&L first because they've been able to recognize a lot of projects in this quarter because of higher sales. Revenues were up 37%, EBITDA went up by 7%, margins came in at 45%. They were lower on a YOY basis, but profits went up by 64% to come in at 788 crore rupees. Their total operational performance was higher on a quarter-on-quarter basis, and it was led by newer launches that the company made. Their total units booked, the booking value and collections as well, all of them were up on a quarter-on-quarter basis, and that was a substantial increase as well, led by the newer projects that the company launched. The board members, additionally, they have passed an enabling resolution to raise funds via QIP up to 2,000 crore rupees. So going by the numbers, it's a positive. Expect a green tick on the stock today. Okay, expect a green tick on the stock. That is an Oberoi Realty. Thanks, Sonal, for that. Here's a quick recap of our top stocks in focus. Stocks with positive news flow. There's Bharti Airtel, Bharti Hexacom, Shree Cement, Siemens, Colgate, Patanjali Foods, Radico Khaitan and Oberoi Realty, while stocks with negative news flow, there's Cipla and Apollo Tyres. But let's quickly take it across to Manisha Gupta. She'll give us a roundup of all the action from the commodity markets overnight. Manisha, good morning.
Morning, Sonia. Thank you. I want to first focus on crude prices, which are holding firm. And today is the third straight day of gains coming in here. There are signs of strong demand from China. There are supply disruptions due to wildfires in West Canada. Also, decline in U.S. inventories, not just in case of crude, but gasoline and distillates tells you that the physical demand on ground seems to be picking up, especially ahead of the summer demand season. Also, OPEC monthly report yesterday suggests that they are keeping on with their expectations of world demand for this year and the next as well on the positive side. So that led to some buying here. But the good buying clearly is seen in case of metal prices. And here, while the LME copper is trading at a 2-year high, it's a record high in sense of copper in New York, in Shanghai, and in the Indian markets as well in sense of prices. Well, the trends are bullish, especially the long term. There are tight supplies concerns in the market right now. We have seen copper inventories globally continue to decline, and China imports have been rising. So it's a complete recipe for the copper bulls to continue strong here.
All right, Manisha, thank you very much for that. So, yeah, I mean, it's yesterday was a big day for metal stocks here in India, right? I mean, Nalco, Vedanta, so many of these stocks, steel stocks, of course, there are individual results-related reactions as well, but I think there's a broader sector tailwind which is at play here. We'll talk more about metals and other sectors. We'll take a break here. Deven Choksi, Managing Director at GR Choksi FinServ, will be joining in on the other side. Stay tuned.
Our best tally was 11 in 2014. We are hoping to either match it or better it this time, only because I think 5 months ago when we were voted out, people did want a change, but now I think they've realized that they've been hoodwinked and they've been cheated by Congress. 10 years ago, a big man had cheated them across the nation. So I think the only party that really symbolizes the aspirations and is closer to the aspirations of people of Telangana is BRS.
What is your message to Revanth Reddy? Revanth Reddy, the Chief Minister of Telangana, says this election, Lok Sabha election, is going to be referendum on his governance based on the guarantees and the 100 days track record that they've had. Your message?
Well, out of the 6 guarantees, he was hardly able to fulfill.
Welcome back to Bazaar Morning Call. Well, let's get Deven Choksi into the conversation now to discuss a lot of numbers and some themes which are playing out very well though. So let's take it straight to him. Deven, hi, good morning. I wanted your thoughts first on Siemens. Very strong set of numbers coming through. Margins have expanded. The board has now approved the demerger of its energy business into a separately listed company. So that added advantage is there. I wanted your thoughts on, for people who've missed out on the rally in Siemens, is there still more to go?
Well, I think good morning, Sonia. Well, I think the valuations are absolutely at peak currently in most of the stocks which we are talking about. And that could be one of the reasons for which I think little reserved opinion at this point of time in buying afresh into the capital goods segment in particular. Undoubtedly, I think this particular segment is going to experience significantly large amount of business for next 10 years. However, I think the point here would be that at what level one should be buying into. In my understanding, I think currently the bigger amount of tailwind is also the allocation of funds into these sectors. And as a result of which, I think we are seeing the higher amount of participation, particularly from passive funds. That's not a very good sign, particularly for me, because I think when you are seeing the participation coming in from passive funds, they are basically momentum driven. And when they get out, at that time, I think it is the best time for investors to buy into those stocks. So maybe given the stretch valuation currently, I may wait for a while before I consider a fresh. At the same time, the holding in the portfolio of the existing stocks, I think will continue. That will not get shared or parted from the portfolio at this point of time.
Okay, all right. Hi, Deven. Good morning and good to see you win. Deven, what about Shree Cement? Beautiful set of numbers out there, and the EBITDA per ton continues to trade above what Ultratech as well is delivering. And on a sequential basis as well, there was no decline. Your view on the stock, the problem for Shree Cement is the numbers are very good, but valuations are elevated and there is still that overhang of what's going to come out of the income tax, query that came out to them. How would you approach the stock?
Yeah, Nigel, good morning. Well, I think cement in general looks, very appealing and absolutely convincing. On one side, most of the companies have been expanding their capacity, so they are getting the volume-led advantage in respective period of time as far as the numbers are concerned. On the other side, given the kind of controlled input cost, the energy cost in particular, is basically suggesting that the margins are on a positive side. Impact on the margin is on the positive side. Along with that, the demand continues. So I think typically the January to June period in a particular calendar year is a good period for the cement in general because of the projects which are basically required to get completed before monsoon. They would keep demanding higher amount of volume at the same time. So all in all put together, I think likes of Shree Cement, likes of Ultratech, even ACC Ambuja, where the capacity is on their side, they are relatively looking much promising, much better. Even some of the regional players like Ramco in Southern Belt, definitely I think appears more promising at this point of time. You are right on the valuation side, but that is a general problem with the entire market. Significant amount of cash is available into the system, as a result of which most of the stocks are quoting at a valuation which is not cheap. And that's where probably I think one would like to buy when the market gives opportunity at a moderated level, at a reasonably good level to enter into.
I want you to just sort of, Deven, morning, pull up these names, right? I mean, these intradays, and you'll see the kind of action we saw yesterday. And Deven, I want your comments. PSUs was basically red hot. So if we can have these up, Cochin Shipyard, I'll just start with that. Big kind of mover. So, it's the point is many times momentum rotates from one place to the other. And yesterday, of course, PSUs did very, very well. NHPC should come up next. I mean, just quickly, if you can pull these up. IRFC, I mean, if you'll be able to see what I'm talking about. There is Hutco, which went up sharply. RVNL was up, big time. EIL. And across the board, I mean, doesn't matter one or the other. IRCON, it was sector agnostic in that sense. IRDA, Railtel, Bharat Dynamics, Garden Reach. So it was, railways, shipbuilders, infrastructure, all kinds of names which went up on very large volumes. Actually, the single largest volume traded sector was the PSU space. So, Deven, just wanted your thoughts on what happened yesterday and Do you like anything here? And any way to play this? Momentum begets momentum, as they say. Gains beget gains. But your thoughts?
Yeah, Prashant. Good morning. Well, I guess I think the last week the challenge was that one of the large hedge fund probably had to unwind their position, which was long position in PSU and short in the FMCG. So I think that unwinding took place. FMCG moved up, PSU came down, and it was a significantly large portfolio, I think, which probably got offloaded and spread up. So the market had a sharp fall. However, I think the bulls are in no mood to give up the kind of a momentum into this particular stocks, largely because of the fact that 2 3 A's are working. On one side, the PSUs are basically going to be attracting larger amount of investment. Also, because of the fact that continuity of the government post-election would mean higher amount of business continuity for them. And that's where probably I think the one school of traders believes that it is good time to buy when the stock has been hammered down for other than the fundamental reasons. The second part, of course, is the liquidity. I think the liquidity in the system is so huge today that I think where to allocate money is a challenge for the fund manager at the same time. And that's where I think whenever you see any particular stock beaten down, I think immediately there are people who are buying this stock into the market. I don't think that the PSUs are to be neglected, but at the same time, I think chasing the momentum is not something which I am always very comfortable with. So we'll, I think, selectively staying invested in some of the select names, but not across the board for the PSU as a space.
Okay. The other thing, Devin, that we realized in this earnings season is that the rural demand seems to have come back in a big way, right? Whether you talk about it across the board, I mean, if you look at Hero MotoCorp, Colgate, the margins were at all-time highs, Dabur. In fact, even HUL said that they are seeing green shoots of recovery in the rural markets. So from this entire rural focus theme, which are the stocks where you still see more gains now?
Yes, Sonia, I think each of these companies where the consumption pattern is emerging stronger, I think they are relatively remaining on a preferable kind of a outlook as far as individual portfolios are concerned. Take a case of HUL for that matter, or take a case of, I think, Britannia for that matter. I think all these companies have two things in particular common. One, they have the one side advantage of contained input cost, which is suggesting that the margins are relatively more protected than before. On the other side, I think the rural demand is increasing and increasing in a higher of the single digit. So definitely, I think this is a good sign because of the distribution reach that these companies have created over a period of time. But everything is in price. Again, I must say, I think that today, even though they look, I think, promising, everything seems to be in price to me at this point of time. Most of the things are driven largely by the liquidity and the momentum. So that is where one will have to be a little bit watchful about. If we are holding the stock, we continue to hold. Within the discretionary spending, I think we continue to remain bullish more in the area of, as you mentioned, two-wheelers. We find, I think, that is one space, I think, which will continue to give higher growth. Maybe, I think, in the festive season and after post-September would be, I think, the interesting time to watch out for. So the quarter, July to September, would be a typical quarter in which I think some of the two-wheeler companies, even the passenger vehicle business of Tata Motors kind of companies or Maruti for that matter, should be seen a good amount of buying attracting during this July to September period in the portfolio of the investors, when I think these stocks are comparatively likely to be available at comparatively lower prices.
All right, Devin, stay with us. We'll sort of talk more about individual sectors, etc. But MSCI has announced a list of additions, deletions as part of the May index review. Vivek is here with the list of changes and how that affects markets and stocks here. Vivek, morning.
Well, good morning. Long awaited. A lot of it, has already been priced in, given the fact that quant analysts have already made their list almost a month and a half in advance as to the anticipated, additions as well as deletions. No major surprises. HDFC Bank weightage continues to remain out of the purview as of now. Now, what actually happens is that India's weight, as far as the MSCI Emerging Market Index, increases up to 18.8%, and in this particular May region, which will happen at the end of May, India will see net cumulative inflows of close to $2 billion. So that's a sizable number that comes in as far as India is concerned. Now, as far as the MSCI MSCI India Index is concerned, which is part of the global standard index, the one that will see the maximum amount of flows as well as impact, there are 13 additions and 3 deletions. So the additions are Bosch, Canara Bank, Industar, Jindal Stainless, JSW Energy, Mankind Pharma, NHPC, PB Fintech, Phoenix Mills, Solar Industries, Sundaram Finance, Thermax as well as Torrent Power. On the other hand, the deletions from this particular list are Berger Paints, Indraprastha Gas as well as Paytm. Now, along with that, as far as the MSCI India Small Cap Index is concerned, there are 28 additions as well as 14 deletions. There is a bit of confusion as to Force Motors as well, because MSCI has apparently made an error. It's both in the list of additions as well as deletions. So, I'm awaiting some clarity on that particular name.
Okay, all right. Thanks a lot, Vivek, for joining in and giving us all of those details. Well, let's talk about the metals pack, right? Because yesterday that one was on fire. Ferrous and non-ferrous did very well, and you had individual stocks that were reacting to their new species as well. To help us out with an analysis, we have Vikas from Phillip Capital who joins us. Hi, Vikas. Good morning, and thanks a lot for joining in. Well, before we talk about what's going on with China, demand and supply issues, last night you had, tweet coming in from the Biden government where they're talking about tripling the tariffs, on steel as well as on aluminium. I was looking at the numbers, and as of now, anyways, the amount of aluminium or steel that gets imported into the United States from China is very minimal, 2 or 4%. How do you see this, and what could be the impact on the Indian listed companies?
Yeah, that's correct. So in CY23, the total steel which they imported was 550 KT, closer to only 2% of their total imports. And aluminium was closer to 200 KT, which is closer to 4% only. So effectively, if you see on a direct import basis, it doesn't impact much. But there was, in the tweet, there was EV and the solar panel was also targeted. So some indirect impact may come, which is difficult to assess. So overall, we are not expecting this to have a meaningful impact on the Indian perspective at this point of time.
Got it. So that gets cleared out of the way. Now I want to talk about individual stocks, and particularly Vedanta. You were in minority actually, Vikas, when you joined us, I think somewhere in September 2023. And at that point of time, people were fearing that, will the company go belly up? Will they be able to make their payments? And you were the lone voice that said, no, I'm bullish on the stock and it's set for higher levels. The stock's done well, so congratulations. But what do you do from here? Vedanta's at around 430 rupees a share. And also they're looking at raising some money. So first the view on the stock, and why do you think they want to raise money?
Yeah, thank you, Najib. So we are still telling plans to hold on to the stock. Not the great time to sell. There are some further gains which we can get. Base metals are in rally, and Vedanta is a pure play. So some more gains are yet to be derived from the stock. So we are telling people to hold on to the stock. Regarding the fundraising, they have a good plans across all business segments. So they said in the press release that they might basically. So my guess would be probably without stretching debt. If they do, then it would be with the view that without stretching debt, the capex across segment. And mind you that 2-3 days back, they bought the remaining stake in the display making unit as well. So probably they would go ahead with the semiconductor or the display making unit in India. So probably the cash for that.
Okay. Vikas, hi, good morning. I take your point on Vedanta there. What is your view on some of these PSU metal stocks? I know we've discussed this in the past, but names like Nalco, Hindustan Copper, NMDC, Coal India, from here on for the next 12 to 18 months, what are your thoughts?
So in PSU, basically, we are still bullish on Coal India, though we don't have the rating on that. NMDC is still, we think that structurally they are going into a very good scenario. FY26 onwards, we would have almost 40 million tons of steel operating additional new capacity, for which you would require a lot of iron ore. So iron ore, basically on the domestic front, we are gradually moving into a structural good scenario. Hindustan Copper, we will refrain from giving any comment because we don't have any coverage on that. And Nalco, like I said, that the alumina is on a boil. And aluminium next year, we are thinking that probably would be in a deficit. So for some more gains, people can continue to hold.
Vikas, hi, morning. Prashant here. This morning, there is a newspaper story which essentially is talking about the risk of the threat of Vietnamese steel. I don't know if you saw that story, but essentially they're saying that, this company, this Vietnamese company has been given a license once again, and sort of comments from sort of not quoted specific names here, but players kind of saying this could be a risk with a lot of steel coming in from Vietnam. Your thoughts, if that is a risk at all, how do you see this?
So yes, that Vietnam basically got the BIS certification last Friday. Basically, the way we understand that the certification is applicable till December this year to them. Already we have seen a little bit of higher inflows of metal. So basically, but we have exported as well. So if you look at the net level, we imported a little over 9 million tons and exported closer to 8 million tons. So just 1 million ton net imports have come, which at 136 million tons of steel demand in FY23 comprises not even a 1%. So in the near term, basically, yes, we are not that much worried about the imports at this point of time. We think that barring this election phase, our demand would remain strong, 7 to 8% kind of the growth. And that would basically, there's a further leg room of another 1 million ton of imported steel. From the perspective that most of the capacity which would be coming in the second half, basically. The ramp up takes time. So with a 7 to 8% demand growth, basically we would essentially require 9 to 11 million tons of steel. So additional 200, 300 KT if it is coming, which would get consumed in India.
Got that. Thanks for clearing the air on that front, Vikas. I also wanted to ask you about Vedanta. They also will be considering dividend. Are you factoring in any big dividend for the coming meeting, which is scheduled tomorrow?
So they will pass on the Hindustan Zinc dividend which they have received and probably add some more. So basically, yes, probably the dividend story which was halted last year would take again restart, because at the end of the day, Vedanta Resources has only dividend incomes as of now, and they will still need $1 billion to service it. So that would come. So yes, this year also we are expecting at least overall 30 rupees kind of the dividend.
Very quickly, Hindustan Copper, would you be still bullish on it? It's the lone copper play, or would you avoid it at these levels?
So we don't have rating, but copper prices last night has jumped up and reached in the COMEX almost $5 a pound. Basically, it's a historical high. So being the only copper concentrate producer in India, definitely Hindustan Copper is going to benefit, because even if you look at the 1 month's perspective, the copper price has rallied roughly about 11%. So obviously they would benefit, but in terms of valuation, etc., we will refrain from comment.
Okay, all right. Thanks a lot, Vikas, for joining in and clearing the air on a whole host of issues on the US tariffs, on the imports coming into India, and on Vedanta as well, which has been one of the big picks that you had. For the time being, we'll slip into a short break. You come back, we'll get you some technical picks coming in from our experts.
And that too has been a disaster, where people are fighting for seats and basically are getting into shouting contests and very ugly scenes. My request to the Chief Minister is, please stop trying to fool people all the time, because you've already become the Chief Minister. Now it's time to set the ball in motion and govern the state. And I hope you govern for 5 years, because I hope all the 420 promises that his party made to the people of Telangana will be fulfilled. And I hope he gets a full term, because eventually, end of the day, in a democracy, nobody should continuously try to just set up false narratives and try to fool the people.
We are confident that we will certainly on our side try to take it forward. But typically, I'd be honest, because again, what had happened was we lost a lot of time in between because of...
Welcome back. There's 7 minutes to go for the pre-open session. Mitesh is with us and so is Sudarshan Sukhani with what they're making of the market. Gentlemen, good morning. Good to have both of you here as always. So decent follow through yesterday, Mitesh, and although the market did give up about 50 points from the highs, how are things looking? Would be able to sort of hold if we get a 50-point higher start, build on it, or you think it's going to look a little jittery and nervous?
Morning, Prashant. So I think the most important thing was that the Nifty managed to get past and close about 22,200. One. Secondly, this is the third time in the last about 8 odd weeks that the Nifty has taken support around 21,800 levels and bounced back from there. So for the timing, at least the short-term setup, which was slightly in the negative side, has been taken care of. Closing about 22,200 was positive. I would expect this pullback or the up move or the upward grind to continue to about levels of 22,400 odd levels, maybe 22,500, 520. These are the levels we are watching for. Don't have a signal of a strong up move or markets willing to make a new high immediately or as yet. So I think for the timing, we'll keep a positive bias, but with a limited upside kind of a signal.
Okay, Sudarshan Sukhani is also with us. Sudarshan, the pullback seems genuine, at least for now. I mean, holding on to this 22,200 mark. Do you think we can build on to it? And if yes, what is the order of the day? What are the stocks that we should be looking at?
Sure. Good morning. Well, yesterday I had suggested that we have probably made a short-term low and we should go long intraday. Luckily, we had a big range intraday, which means not just the gap, but a big move during the day. That worked well. Now I'm upgrading my signals to say that we can also carry positions in the Nifty. That means I'm looking at a significant, or let's say a reasonable upside with some gaps favoring us on the long side. So to your question, yes, it does seem that the low is made, at least for the time being. It's all temporary. And then we are looking at a rally where gains can be built upon. For today, look to buy the Nifty on a morning breakout. Wait for 15-20 minutes. If you see the momentum on the upside, don't wait for a dip, just go long. The Bank Nifty is very interesting. It is ready and ripe for an increase in volatility. Now, given the fact that the market is upbeat, if you see an increase in volatility on the upside, if you see the Bank Nifty breaking on the upside, go long in the Bank Nifty, it could be a good trade. Essentially, be a buyer. And now for the stocks, sorry.
Yes, please go ahead.
Yeah, Adani Ports is a buying opportunity. Buy with a stop under 1240. HAL, Hindustan Aeronautics, is a buy with a stop under 3800, and there's a disclosure. I also own some shares in it. HPCL is the only intraday short with a stop above 533. And TVS Motors again is coming out of a small correction. Buy with a stop under 1972.
Okay, Mitesh, what about you?
I have all buy calls today. BEL is a buy with a stop at 226 for targets of 242. Bosch made a fresh swing high, so buy here with a stop at 31,300 or 250 and look for a 33,000 kind of a target. A buy on NHPC with a stop at 96 for a first target of 105. And Biocon is a buy with a stop at 305 for targets of 330.
Mitesh, there's only one PSU name. Yesterday we had some 10, 15 of these move up in tandem.
So, a lot of calls, Prashant, were fired yesterday, so I've got new names today. But I think I like the PSU spaces. There's no doubt.
Right. And metals was the other. I mean, sectorally, metals was the big mover, Mitesh. Anything there?
Yeah. So, in fact, we had a buy on General Steel and Power yesterday. Made a very strong, fresh high as well as closed the day near the day's high. So, very strong pattern over there. That apart, Hindalco and Nalco are two stocks which interest me. I think Hindalco is showing signs of getting past the 655, which was the earlier pivot on the upside. And once it does that, 680, 690 is my near target. While National Aluminum, I think that's also looking very positive to me. And I would look at a target of around 200, 205 over here.
Okay. All right. Thanks, gentlemen. We'll come back to you for more. But for now, thank you for all of these calls. We'll step into a quick break. On the other side of the break, we'll have the pre-opening rates. Also, Balaji Subramanian, who's the Vice President at IIFL Securities, will join in to put the spotlight on telecom companies. Stay with us.
Positions. I mean, what has happened has happened. So we are definitely very serious about pushing it. My expectation is going into the next term, if all goes well with us, it would definitely be one of our important trade priorities. And I must say, since we are talking trade, if there is one person who's really made a huge difference when it comes to commerce and trade, it is my colleague, the Commerce and Industry Minister, who's a candidate from Mumbai. I think his personal role in taking forward the Australia agreement, the UAE agreement, the EFTA agreement, the progress we have made in UK with the EU, with the Gulf, I think he's been really absolutely dynamic and creative in this. So in fairness, I should appreciate it today.
Welcome back. This is Open Exchange. You're watching us live from the CNBC TV18 Motilal Oswal studio. Today looks like it's going to be a good day, but you never know. I mean, these days things are all over the place, right? Rajesh Palvia, Vice President, Technical and Derivative Research Head at Axis Securities is with us. Rajesh, this is a market that is pretty much like a roller coaster, but what do you do now and what are the stocks to look at today?
Good morning, Sonia. Yeah, a lot of volatility is happening in market. We have registered a low of around 21,800, and again we have seen a very strong pullback from those level, almost 400 point pullback from those level. Nifty and Bank Nifty both were slipped below to 50-day moving average, but again looking at the recovery, we believe that this momentum can extend further. Now again, Nifty and Bank Nifty has almost taken the support from its 100-day moving average and now almost negotiating to its 50-day moving average. Looking at the broader market, looking at the open interest data, most of the put writers now again, back at 22,100, 22,000 strike. So that clearly gives us confidence that, on the lower side, 22,100, 22,000 are likely to act as a good support area. For Bank Nifty, again, 48,000 is the immediate challenging level. If we are able to take out 48,000 level on Bank Nifty spot, then there may be a short covering rally we can see in today's session also, and a possible rally can extend to 48,400, 500 kind of zone. So 48,000 needs to watch closely in today's session, but still looking at the recovery, we are holding bullish view for Bank Nifty also at this moment, as we are holding above 47,600. So till these levels are intact, one should remain on the long side of trade. For Nifty, we are initiating here to buy 22,200 call option. Looking at the derivative data, we believe that these range.
I can't hear anything. Rajesh, I think there's some issue with your audio. So we'll just come back to you in a bit. But in the meantime, Telecom major Bharti Airtel reported its fourth quarter earnings yesterday. The India business met estimates while the consolidated numbers were a miss because of a weak performance from the Africa business. Balaji Subramaniam, who's the Vice President at IIFL Securities, joins us now to talk about that. Balaji, good morning and thanks for joining in. The India business has been growing very well, not just for Bharti, but for almost all the large players in this sector. But for Bharti Airtel particularly, what is your expectation as far as subscriber additions are concerned? Do you think they can build on to what they did in this quarter? And also, what's your view on the stock?
Good morning. Thanks for having me on the show. Bharti's India performance was quite healthy. It continued to maintain its momentum, especially the subscriber additions were a bit stronger than what we saw in the preceding quarters. And, even if you look at the internals, be it postpaid subscribers or 4G subscribers, so it was a pretty healthy performance. I think going forward, the subscriber addition momentum should continue to some extent, but I would think that ARPU would be a bigger growth driver for Bharti rather than subscriber additions. And as far as the ARPU is concerned, I would expect a pretty significant tariff hike sometime sometime later this year, maybe post elections. So that should result in ARPU and revenue growth remaining strong.
Balaji, hi, morning. Prashant here. Yesterday there was that story which said expected 25% increase in your phone bill. So when you say substantial increase, something to that magnitude?
So, I don't know whether, what over what period can, this 25% increase in the phone bill happen, but I think something like 15 to 20% headline tariff increase is looking, quite plausible, especially, in the second half of this year. Of course, there would be some down trading, but, net, I think the industry revenue should grow in somewhere in the mid-teens or even high teens for FY25. And 25%. See, I think one way to look at it is that this industry, the industry ARPU, or even Bharati's ARPU for that matter, it used to be around 195, 200 rupees way back in 2016, and 8 years have passed, and even today it has barely touched 210. So that would probably be, in terms of real terms, ARPU has significantly come off, and mobile subscriber revenue as a percentage of consumption expenditure, that has also substantially come off. And even if one were to assume a 25% increase in the phone bills, I think, it should still be well short of where we were 8 years back.
All right. Hi, Balaji. Good morning and good to see you in. Nigel on this side. I want to ask you about the other Bharati. That's Bharati Hexacom. It reported its results. From the time it's listed, the stock has just rocketed. At around 900 rupees, what do you do with the stock?
I'm afraid I won't be able to comment on Hexacom.
Okay. All right. Then in terms of preference, because even Bharati Airtel, the stock has seen a big run in the last 1 year or so. How do you approach the stock?
So I think in the near term, there should be, a flurry of positive developments. So first is the likely increase in tariff, which might happen in the next 2 to 3 months post-elections. And the next could be, what happens on the AGR dues. Because if you recollect, in October, both Bharti and Vodafone Idea had filed a curative plea against the AGR verdict, and if the Supreme Court, kind of permits the DOT and the telcos to do a reconciliation, that can be positive, because if you recall, what happened in 2020 was that when the telcos did self-assessment, their own dues were about 50-60% lower compared to what DOT had served them with. So, if there is a positive development on that front, that also should help the, that should also support the stock. So I would say, the near-term outlook is, fairly positive, even though, I would also concede that after the significant rally that we have seen in the last 6 months, a part of that optimism is already built into the price.
The only problem, I think, is what's happening in Africa, right, Balaji? Because, there's a sharp devaluation of the currency, especially in places like Nigeria. So it's really hitting Bharti's Africa business. Do you think that would put a spanner in the works for the stock, or is the India business far outpacing the Africa business, so shareholders shouldn't be that concerned?
See, I think if you look at Airtel stock price, the rally has happened despite all the issues in Nigeria, because in Nigeria, what has happened is a year back, the currency was at around 460 to the dollar. And today it's almost at 1400 to the dollar. So that is a massive devaluation. And of course, that has shown up in the Airtel Africa numbers also. But Bharti Airtel stock has remained resilient during all this because of the underlying momentum in the India business. I think, with all these developments, Nigeria has become a substantially smaller proportion of the overall business. And let us not forget that Bharti Airtel owns only 56% of Airtel Africa. And considering all that, I think the value of the Africa business is less than 10% of the overall consolidated valuation. So my sense is that, despite the trouble in Africa, the strength in India should more than offset the weakness there.
Okay, that's a fair point. So Africa is less than 10% of the overall business. So at least for now, you don't need to give too much attention there. Strength in India far supersedes that. Just two quick questions before we let you go, Balaji. One is on the stock price, right? It's already seen a 40% rise in the last 3-4 months. How much more of an upside do you think you can see in the stock, or have we reached a mature stage of the rally? And the second is, there's a little bit of a niggling concern about the rising debt of Bharti. The debt is now, I think, about 20,500 crores. So would that be a concern for you?
Okay, so firstly on the stock price, as I said, the near-term news flow should be positive. One on the tariff hike front, and the other one potentially on the AGR judgment. So those two positive developments should support the stock price. Even though I would think that a significant part of the rally is already done. Finally, on the debt. See, the thing is, if you look at their net debt to EBITDA ratio, it's around 2.6 times, and that has been, it has. So the thing is, it has been steadily falling, and in the last couple of quarters, that fall has not been that much because of the fact that there has been some, EBITDA has been flat at the overall level because of the issues in Nigeria. But if you look at the FCF generation, it has been pretty strong for Bharti, and as we see tariff hikes in future, a significant part of that should flow through as EBITDA. And I think the peak capex year is already behind us. FY24 saw a significant increase in capital expenditure on rural 4G rollouts and 5G rollouts. But in FY25, that capex number should also come down. So a combination of EBITDA growth and a reduction in capex should ensure that the FCF generation substantially improves from here on. And that should mean that the net debt to EBITDA ratio also should fall pretty quickly.
Okay, all right. Balaji, we'll leave it there. Thank you very much for your time. Great speaking with you, and I really appreciate you coming on as always. Now, I just want to point out, and this is something which has been highlighted by investors who've come on the show, about how for some of these capital market plays, any upcoming regulation actually, especially on the futures and options side, could be a bit of a worry. So we, for example, had the SEBI chair earlier over the last many months. She's sort of talked about, how retail investors should be sort of more careful. In the F&O segment, there was that famous study which was released by SEBI, which showed that a large percentage of the people who actually trade in F&O end up losing money. And yesterday we had the finance minister, no less, Nirmala Sitharaman, here in Bombay, who warned that any unchecked explosive increase in retail F&O trading can create challenges for investor sentiment as well as household savings. She was speaking, as I said, at an event at the BSC. I just want to quickly play out that soundbite.
It's a precious trust which Indians have got in the stock markets. It's very, very precious for all of us to guard and build. I would appeal to this BSC that you should work closely with the SEBI in order to ensure stringent compliances and robust regulatory standards so that further investors' confidence grows. Any unchecked explosion in retail trading of futures and options can create future challenges, not just for the markets, for the investor sentiment, and also for household finances.
Okay, well, you know what? We just have a couple of minutes before the opening kicks in. So let's go across to Sonal to find out why you should be watching the chemical space this morning. Sonal, over to you.
Well, UBS has written an interesting note and initiated coverage on a couple of these chemical names. They say investors may be ignoring the Indian chemicals company's strong niche positions and growth opportunities. The industry right now is seeing the worst destocking that they've seen in last 30 years. However, they are seeing some signs of modest recovery going forward. And Indian chemical companies, remember, they had scaled up their capex by 4 times from FY16 to FY23, and it will leverage them with specific opportunities across their portfolio. 2 years of underperformance reflects the sector's negative earnings momentum. However, this backdrop may drive stronger than expected performance given the modest cyclical uptick that the brokerage is seeing. And several indicators are suggesting improvement in volumes as well. So they have initiated coverage on PI Industries with a buy rating, 4,800 rupees as the target price, Naveen Fluorine with a buy rating, Aarti with a sell rating, and Gujarat Fluorochemicals with a sell rating and 3,000 rupees as the target price.
Thanks a lot for that, Sonal. Well, Shree Cement, the numbers look very, very good. The results are better than expected on a sequential basis. The EBITDA per ton came in higher, which is a rarity given what its peers did. The headline numbers, the revenue, EBITDA and margins as well did come much better than our poll. Why was that? On the top line first, because volumes are a little bit better than what we were working with. The second factor is the realization contraction was less than expected. And that could be partly because of the power contribution or maybe the focus on premium products as well. The EBITDA number as well did do better because of higher, premium sales likely, lower realization contraction and operating leverage that play out. In addition to that, the power and fuel cost was down by close to around 15% on a year-on-year basis on a per-ton basis. The management has laid out a capex of around 4,500 crores. They're going to be headed to around 65 million tons in the coming year. And Nomura, they highlight that for the third quarter running, Shree Cement's EBITDA per ton is better than Ultratech Cement, and that's why they maintain their positive stance.
Okay, thanks a lot for that. We just have a couple of seconds left before the markets open for the day. And, it looks like it's going to be a decent opening, but you never know, right? Things have been so all over the place. But one thing is that 22,200 could hold.
Well, hope so, right, Sonia? And I think the first rates are there. 22,270 is where we are at. So it's a good start for 50 points higher. I think we've had a 50-point higher start for 3 days in a row. And then, of course, things change. But 40 now, 43 now, 100 plus points in the Sensex, 73,231 is where the Sensex is now trading at. Mid-cap index is up 173, and you've got the small-cap index, which is also starting, I think, about 1/3% higher. So these are indices and how they are starting up. PSUs was, all the rage yesterday. So we'll kind of course, look at that. Metals yesterday, and of course, lots of result reactions, some of which we highlighted as we started. So these are the indices, but it's all about stocks. Sonia has got those. Sonia.
It's all about stocks this morning, right? So we're going to begin with Bharti Airtel because there you have, good numbers. Q4 saw a very strong subscriber addition. A lot of brokerages, by the way, have raised their target price and earnings estimates on Bharti. So I have Jefferies with me. They raised their target price to 1,590 from 1,300. So Bharti is now gaining some ground, up almost 1.5%. But the other really strong set of numbers is Siemens. Just look at the move here. It's raging this morning, almost 9% higher. Not only have the margins expanded for Siemens, but the board has approved a demerger of the energy business into a separately listed company. So there's more shareholder value being attributed by the company. Great decision, at least that's what the street believes. And the stock is up almost about 8%. Remember, Siemens is also up 50% in the last 3 months. So despite the rally, we've seen build on to its gains. Shree Cement is the other one. Strong earnings coming through. The stock is up about 1%. But I want to look at what's happening with Colgate, because after a while, we've seen a decent set of numbers. The rural markets seem to be coming back. But the stock is under a bit of pressure now, down about 1%. Margins were at an all-time high. Disappointing set of numbers for Apollo Tyres. Barely any growth in the revenues and barely any movement in the stock this time around. Cipla, there is an impending large block deal where promoters are looking to sell 2.5% stake via the block deal. So the stock is tearing now on the upside, up almost about 5%. Keep that in mind. Thyrocare, strong set of earnings is what Thyrocare has reported this time. Just look at that, 4% higher, and it has been gaining ground. Oberoi Realty is the other one I'm looking at this morning. You have EBITDA growth of 7% for Oberoi Realty, up about 2% on the stock as well. Dalmia Bharat Sugar, strong earnings coming through for that one. so let's take a look there, 0.5% higher. V-Mart Retail had a good set of numbers. And then you have some of these stocks. Okay, look at V-Mart Retail. I notice a lot of these players that are in the rural space are now picking up pace. So let's just get V-Mart Retail back up on board. There you have it, 5.5% higher on this one. Big move, post a good set of numbers. And finally, Bosch, Indus Towers, Canara Bank are included in the MSCI index. So these are some stocks that I'm looking at this morning. But this is the main, focus area. 22,250 is what's holding. 46 points higher on the index here right in front of you. And I think this also, 2,000 stocks on the advancing side, which means that the pullback that we've seen over the last couple of days is something that's holding for now. Nigel, over to you.
Well, Sonia, just take a look at a few stocks that I'm looking at. Thyrocare came out with a set of numbers late in the session yesterday. It's seeing some follow-through buying, a rank underperformer, good growth on the top line, margins as well improved. So that one is up close to around 4%. PB Fintech, that's another stock out there. It's holding with a gain, I think, of around 3%. Also, that's doing quite well. Sami Hotels, Shami Hotels should come up for you. That one as well is up close to around 3.5% in trade. So big up move is what you're seeing on some of these names. Salsa Technologies, well, that stock as well is up close to around 4% as we speak. And volumes are rather high on that one. So keep an eye out on that stock. On the flip side, Devyani, yesterday it came off a little bit from the top. Today as well, the stock is down close to around 2% or thereabouts. Sagar Cement, the numbers look quite disappointing. The only good news for them is they have valuation support, so that's why I don't think that stock is low. In fact, I think it's up close to around 1.5% or thereabouts. A fair bit of movers from the broader markets.
And absolutely, and it's a vibrant-looking screen as far as the broader markets are concerned. And there is actually a lot going on. Let me just quickly take a look at a few other movers and shakers. So I'll just look at a few volume-led gains, right? Look at Thermax. I think we pointed that out. And the results came, of course, day before yesterday. We had the management, actually before that, and we had the management day before yesterday, 9.5% on Thermax. It's the second biggest volume-led gainer. And of course, the number one gainer is Siemens, as we've been highlighting. JSW Energy is at the number 3 position with volume-led gains, 4% on JSW Energy. There is Policy Bazaar, which starts with a 5% pop. I saw an upgrade from one of the brokers yesterday. And there is, of course, another insurance company which the IPO is open today. That is Go Digit Insurance. So that's some news flow from the industry. Bharti Hexacom, 4%. Rima, of course, highlighted that earlier. Barmer Lorry is coming up with a 4% pop. You don't usually see that with the top volume traded list here, but it is. V-Mart is up 5%. We'll be speaking with the management of V-Mart on numbers and outlook going forward. So 2,300 there nearly on V-Mart. Repco Home Finance, South-based lender and 6%, 500 plus on that one. Swan Energy is up about 4%. So there is a lot happening in the broader market with lots of volumes as well. On the downside, Cochin Shipyard is pulling back a little bit, but it was a big move yesterday, a 10% move, so it's just some profit booking. DLF something similar with a 2% odd cut there. And you've got Apar Industries and Aarti Industries, which are down about 1.5 odd percent. Bosch is down about 2% or so as well. So that's the list, but 30 points on the Nifty to show for it.
I know we've spoken about this ad nauseum, but Thermax is really the one that's surging this morning. If you pull up the Thermax stock, right, look at that, 11% higher now. And the management has indicated that they will continue to be debt-free at all levels. So apart from the fact that the business is growing very well, the balance sheet has improved substantially, debt-free. Export business is going to be growing as well. So, this is one stock that the market definitely likes.
Absolutely. And the big one, right? It's a big name, well-owned institutionally, etc. as well, but not stopping it right now. Pratik Gupta is with us, CEO and co-head Kotak Institutional Equities. Pratik, good morning. Good to have you with us here. Thank you for your time. Prashant, this side. Just first sort of provide us with some feedback, because, you're talking to clients on the institutional side, and mainly on the foreign side, if you can provide that. What are you hearing? This selling that we're seeing, what is that? What is this on account of? What's the dominating driver behind this?
Yeah, hi. Good morning, Prashant. Thanks for having me. I guess as far as the foreigners are concerned, from their perspective, a couple of factors to keep in mind. First and foremost is most global emerging market funds, they're not really getting fresh inflows. US interest rates are still holding up high. You're seeing China, the Chinese markets have started recovering in the last 1 month or so. Just for example, the Hong Kong market, Hang Seng is up 15% in the last 1 month compared to our market, which is relatively flat. And also there's some the usual concerns about India's expensive valuations. The Nifty, for example, is trading at about 20 times 1 year forward earnings. And that's actually prompted a lot of folks to take some money off the table. And lately, I guess in the last, say, week, 10 days or so, all the various media reports about some nervousness around the election outcome, which, although in the last few days it's sort of abated a bit, but nonetheless, there is some concern that one never knows with elections how they go, so why not take some money off the table? So combination of factors, along with the fact that by and large, barring a few stocks here and there, the earnings season has been a bit of a mixed bag. We're not seeing massive earnings upgrades to justify the high valuations. So it's just a little bit of, profit booking and taking money off the table, just at the margin, investing in other markets like China or Japan, ASEAN to some extent. So it's just a mix of various factors, no one single reason.
Okay, mix of various factors, no single reason there. Pratik, hi, good morning, and always great seeing you. One pocket that is coming back in a big way, and we've been discussing this through the show, is the rural plays, right? So even this morning, you've had Colgate come out with record high margins. Most corporate earnings that have exposure to rural markets, whether it's Hero MotoCorp, Dabur, HUL, all indicating that there is a recovery in that pocket. Is this a good theme to play over the next 12 to 18 months?
Yes, we think from a slightly longer term perspective, this makes sense. And you're right, in our conversations as well, when we speak to, at Kotak, we cover some 270 odd stocks. A lot of the rural focused companies are talking about some signs of they're already seeing a demand recovery or they're expecting a demand recovery. And hopefully we have a normal monsoon as per the weather forecast. So that should also help. So by and large, yes, we are beginning to see signs of an improvement. But I'd still say that as of now, most of it seems to be hope. We haven't really seen the full-blown recovery as yet, but the stocks are beginning to price that in. They've moved up a bit, but we think there could be scope for earnings upgrades in the next 12 to 18 months. So yes, we are positive on the rural focus themes.
All right. Hi, Pratik. Good morning and good to see you in. I wanted to ask you about some of these stocks actually that have been ranked underperformers, but very high in terms of pedigree, management. They have a good track record on a longer term. HDFC Bank, Kotak Mahindra Bank, HUL, all of them big underperformers, but it's hard to ignore them at current valuations. What's your view?
Yeah, hi. Firstly, yes, on the valuation part, that's the general feedback we get from investors. But bear in mind, it's really the foreign selling which has really been impacting some of these stocks. These were big heavyweights in foreign portfolios, all the stocks that you mentioned. And as I just mentioned a minute back, we have been seeing very heavy foreign selling in the month of May alone. In the first 12, 13 days, we've seen about 34,000 crores worth of foreign selling in the cash market. And obviously in April and earlier as well. So valuations have definitely come off, and that's something fundamentally a lot of these stocks are looking attractive. I can't comment on Kotak given I'm conflicted, but HDFC or HUL, etc. But equally, the questions that are coming up is what's the trigger? So in the short term, perhaps there's no immediate trigger, and right now there's a fancy for going down the quality curve, whether it's the banks or the FMCG companies. The quality is not doing as well. Value is in the short term doing relatively better. But if you're an investor with a 2-3 year investment time horizon, then we definitely recommend these stocks for investors with a slightly longer term horizon.
Got that. Pratik, do you reckon that flows will come back, foreign flows will come back in a big way post-elections?
That's a great question, Prashant. In our conversations with all the sovereigns and the foreign long onlys and even some hedge funds, I think a lot will depend on, obviously the election outcome, assuming there's a stable government, no negative surprise. Firstly, most of that is in the price already. No one's really expecting a a major change in the political establishment or a major dramatic change in the policies of the new government. So that's point one. A lot of it is already priced in, and our valuations, like I said, at 20 times 1 year forward, we're already pricing in a lot of the good news. Having said that, in our conversations, we do come across a lot of global investors who just want this event risk to be out of the way before they come back to India. And obviously, we've seen some money being taken off the table prior to the elections, and we could see some of that coming back. I guess the more interesting question is, even if there is some money that comes back into India after June 4th, assuming the same stability of government and so on, is whether the money will come back into large caps or whether the money will come back more into the mid and large, small caps. And that's where we're seeing very mixed views from a lot of investors, depending on whom you speak to. The large global investors who want liquidity, who want large ticket sizes, for them, they can't invest just $5, $10, $15 million in a stock. They're looking for minimum $50 million to have a position in a stock. So they will obviously gravitate toward the large caps. Whereas equally this time, because I guess generally there's a feeling that the China rally is more of a bounce, a dead cat bounce, not really a structural story. India is a true, real, medium, long-term growth story. We want to participate in India. So therefore, we think a lot of the money will come in to some of the India-dedicated funds or some of the EM ex-China funds or Asia ex-China funds. In that context, India could probably get a little bit more of the flow, and we think some of the mid caps and small caps should also benefit. So it'll be quite interesting after June 4th, but we do expect some flow to come in.
Okay. By the way, folks, this market is really piling on the gains, so don't lose sight of that. It's actually a breath of fresh air to see this kind of momentum on the upside because, it's been down days for many days now. Not the Nifty, but look at the mid-cap index, right? The index is up almost 1% and big moves coming in. Finolex Industries is up almost about 8%. You have loads of stocks that are moving up. Union Bank is up about 5%. JSW Energy is up 3.5%. And then you have so many stocks hitting fresh 52-week highs as well. We were talking about some of them earlier. Thermax is really the big gainer. Nalco is at a fresh 52-week high. Oberoi Realty. Pratik, I wanted your thoughts here. Real estate after almost a 10-year lull has come back in a big way. And some people may call it hyping up many of these premium real estate projects, etc. But the proof is in the writing, right? I mean, you can see many of these stocks hitting fresh highs as well. What do you do here? Do you think you can put more money to work in some of these names?
Yeah, we like the residential real estate plays, not the office property plays as much. But the residential side, we think there's scope for earnings upgrades. More importantly, we're seeing very strong volume uptake. It's not being driven by pricing alone. And a lot of these companies in the last down cycle, they've actually deleveraged quite a lot. Governance levels have improved quite dramatically. So to that extent, we like the residential real estate plays. We think there will be continued surprises in terms of the volumes. And pricing-wise, we're also seeing most of these developers this time around in this upcycle are being relatively more disciplined. Unlike, let's say, if you go back 15 years back, when there were pretty dramatic price increases being taken, which quickly made housing quite unaffordable. Even now, obviously, prices are unaffordable for a vast majority of the population, but the demand-supply gap is there. And we've seen a lot of projects which have only recently been announced in the last 1 or 2 years. The supply is yet to catch up. So there is still a demand-supply gap, and especially in the metro cities, and increasingly, we think this will spread to the smaller tier 2, tier 3 cities and towns as well, where we think demand will be quite strong. So, and the last angle I would put is the interest rate outlook. That also looks reasonably stable. If anything, perhaps you might even get a downtick in the later part of the year. But combination of a strong residential upcycle, which typically tends to last for many, many years, not just 1 or 2 years, and we're still in the early to middle stages of the residential upcycle, coupled with deleveraged balance sheets, strong volume growth. We think it's, and government policy also, we think will be supportive going forward.
All right, Pratik, always good hearing your thoughts. Thanks a lot for joining in and filling us in with those details. Looking forward to having a chat with you in the coming weeks, maybe post the elections. Well, let's focus on a big name that came out with a set of numbers, which is Shree Cement. The numbers look rather good. The stock has come off actually a little bit post the gap up opening. To understand more about the past quarter and how's the year going to shape up going ahead, we are joined by Mr. H.M. Bangur. Hi, Mr. Bangur. Good morning. First of all, congratulations on a very, very good set. Let's focus on the top line. One part of the street cannot understand how come your realizations were down only around 2.5–3%. But there could be an element of power sales. So could you help us out with some more details? One is, how much were the power sales in the past quarter, and on a year-on-year basis, was it much higher? Also, if you could give us some clarity on incentives. Did you book anything in the last quarter?
Every year in the last quarter, there are many yearly incentives which have to be given. They are always booked in the last quarter. So, but that is for every year, it will be the same. When we compare quarter to year, that is last year, the same quarter, that should be the right comparison, because otherwise it is a seasonal product. Every quarter to quarter, there will be big changes. But when we see from the last quarter, the realizations are down by 3%, because basically the prices in the industry has come down. It is not only for us. The cost has come down. Energy costs have come down after the last year's top hike, and that is all. So there is nothing special that the prices have been dropped. In fact, our prices on an average is little bit better because of the small branding exercise which we have started in the February. The results will come in this year.
Okay. All right. Could you give us some more details, sir? If you have to quantify the premium sales as a percentage of your mix, what was it for the past year? And you mentioned in the past that you want to see premium sales move up to the mid-teens, I think so. How much was it, and where is it headed?
It has not increased at all. We have rebranded. There were two premium products. We have rebranded it to Magna. We have advertised about it. As it is a new product, the prices have also gone up a little. The quality is good. It is well respected. But till now, the volumes are the same. That is around 12 to 13% of our trade sale. And very soon, we have started this new brand only in February. So very soon it should catch up. We have to give it 6 months time before it really matures.
Okay, got it. All right, Mr. Bangur, the street basically works with two numbers for cement. One is on volume growth. I recall that you were saying that low teen growth is what you're looking at for FY24, and you have managed that. Now for FY25, what kind of a volume growth are you looking at? And your EBITDA per ton is holding above 1,350 rupees. What is the range you'll look at? Because you'll have operating leverage, pricing is weak, but input costs are down as well. So these two numbers, volume growth and EBITDA per ton guidance. Please go ahead, sir.
Right. So volume growth, first I will say, it will be again between 8 to 10%. That is what is expected. Expecting that India's GDP will grow at 7% or more. So our volumes will be highly dependent on the macroeconomic situation. That is how the India grows. So if India is expected to grow at 7%, we are expected to grow at 9 to 10%. It was a little conservative. The second thing is regarding EBITDA. EBITDA in a commodity is decided by the input cost, output cost, or any of which we don't have any control. So I will not venture to give any EBITDA guideline.
Okay. Mr. Bangur, good morning. It's always a pleasure speaking to you. So you're saying that you won't be able to give an EBITDA number, but is it fair to assume that your EBITDA per ton will be around this 1,400 rupees, 1,500 rupees, or is it, will it slip well below that? Just trying to get a ballpark estimate.
Ballpark estimate also will not be there, but what I can say is our efficiency levels will increase. So our per ton, when you say about costing, I can say that commercial cost, I don't know, but per ton our energy cost energy consumption will come down. Our energy, which is 56% at present, is renewable energy. We would like to increase it to 60%. So these parameters we are following. The cost, we just don't know.
Okay, okay, fair enough. So the cost is something that you can't, you cannot analyze at the moment, right? So this volume growth that you spoke about between 8 and 10% in FY25, is that something that is sustainable despite the kind of pressure that you're getting in terms of demand? I'm asking because, you know, the heat, the scorching heat this time, the elections, etc., has impacted demand quite a bit. Despite all of that, you can still eke out a 8 to 10% volume growth. Is that fair to assume?
Yes, I am saying that with high confidence because demand is only deferred. Every year, the summer comes, the same seasons happen. We are little pessimistic in the beginning of May, June, that demand will come down, but suddenly it picks up. If India is growing, then the cement and infrastructure needs will be very high. So we are confident about the demand growth.
Right, Mr. Bangur, hi, good morning. Prashant here, thank you for joining us. Always good speaking with you, sir. How does, I mean, just give us a little bit more sense on pricing, sir. I mean, not just for you, but I mean, how the pricing dynamics are going to look like through the rest of this F525, because some have been saying that, you know, if before rains, if there's been no real substantial move on pricing, I mean, that's the peak period for one to be able to do that. And then, of course, rain set in, etc. So we are kind of, you know, it's kind of going to be very subdued in that sense. Would you agree with that this year?
No, that was the old theory. When all the housing were rural housing, self-made housing, that time rains were important. The new techniques were not there. Now, most of the consumption is by the reputed builders, organized sector. There, the rains doesn't matter. It is the working hours of the labor. In scorching heat, working hour when the cement can be consumed has come down. And immediately when the heat comes down, say in July, August, the rains are positive, not having any negative impact. That was the old theory.
Okay. So then what you're saying is, I mean, depending on how the situation shapes up, there is room for price increases through the year. Could you give us a sense what that could look like for the industry in your assessment?
My assessment, in the past, we have always seen the price increase is always a little less, 1 to 2% less than the general inflation. The rest of the money comes by more efficiency. Over 20 years, every year we see price rise is little less than the general inflation, and the margins increase because most of it comes because of better techniques, better technology, and the costing comes down by innovations, I will say.
All right, Mr. Bangur, X of the power sales, I just want to reconfirm your realizations are down by 3% sequentially?
Yes, power sales are, because the energy cost internationally, the coal cost has come down. Power business will depend only on the coal cost. We are a converter of one type of energy.
Mr. Bangur, I'm trying to get the... Right. Mr. Bangur, I'm trying to get the core cement realization change. So that is X of the power sales. We'll keep that aside. It is down around 3%?
Yes, it is down around 2%. And the volumes are up by 8%.
2%. Got it. Just one more question from my end, and we've discussed this in the past as well. You know, of late, various sections of the media are reporting that Orient Cement is on the block. Now, we are unable to confirm whether or not that's true, but when we have the management, they say that it's unlikely to be the case. But you were an investor in the company, you know, in your personal capacity. Any view on the company at current reckoning, and if you have to do some inorganic growth, would this be a potential acquisition candidate?
No. My personal investment has nothing to do with the Shree Cement growth plan. It was very cheap at some point of time. It has given me good return. I am happy about the present management. They are managing it well.
Hey, Mr. Bangur, it's always fun speaking to you to learn about the industry, about your company, and hope you continue to stay well. Looking forward to speak to you again very soon. Thank you for joining us on the channel.
Thank you.
Okay, that's Shree Cement with the way forward. By the way, good-looking market, good-looking screen. The mid-cap index is now up 1%, and one sector that has been doing very well is real estate. DLF's Privana West project in Gurugram, worth almost 6,000 crores, was sold out in 3 days. Our colleague Timsy caught up with Akash Ohri, who is the joint managing director and CBO of DLF Homes, began by asking him about the Privana project and outlook for sales going forward. Listen in.
Well, I think launches happen post the approvals, and therefore some of these approvals didn't come. So there was no conscious plan of shifting it out. But as you've seen, yes, the results have been pretty robust. The margins have been very good. Profit has been good. Yeah.
What about Privana? Was Privana supposed to be launched and sold in FY24? And has it been pushed to FY25 because that's what the sales look like right now? I mean, what will FY25 bookings look at this, given this case of Privana getting pushed in FY25?
Well, Privana didn't get pushed by design, and there were some regulatory issues in terms of approvals that got pushed out. But you've seen we've done well. We've sold out Privana West as well. The 25 guidelines will be about 17 to 18,000 crores that we will do that in sales. So as far as Privana is concerned, again, we've done well. It's an overwhelming response again to a DLF product, and I think we're extremely grateful for that.
Okay, and when we consider FY24 bookings, they were at around 14,778 crore rupees versus 15,058 crore rupees. So how would you explain that?
See, what happens in these things, as you know, most of the sales happen post RERA approvals, and you plan for these launches based on these approvals. But there are times when some of these things don't happen as per plan. But that in no way should you consider or even doubt the capabilities of the sales engine or the demand today of a DLF product. But sometimes these things do happen. You have to take them in your stride. And as you see in Q1, we proved it again. There has been a robust sale to Privana West, and we've done well. So yeah, sometimes things don't go as per plan, but as far as the product is concerned, as far as the geography is concerned, it is pretty well established now and doing pretty well.
So as you said, sometimes things have to be taken in the stride the way they come. You've also spoken about Privana being sold completely. What is the booking value here? All of the Privana sales will be seen in the first quarter itself. Also, how much of the 11.6 million square feet launch is there in the FY25, which is going to come from Privana?
So Privana, the total size, the launch size has been about 5,590 crores, and all of it that you will see in Q1. And as you know, it's almost about a 2.8 million plus size. All the other launches as we go along, there is Goa, there is Mumbai, there is Lux 5, some floors, a product in Tri-City. So we've got a good launch pipeline for 25.
A good launch pipeline. DLF has also said that the launch area has increased from 10 million square feet to 11.6 million square feet in FY25. But at the same time, the launch in FY24 has been reduced from 25 million square feet to 24. So are some of these launches getting spilled over for the next fiscal? That is the one where we are in currently?
So as I said earlier, there will be some changes based on demand, some changes based on approvals, and of course, once we get ready with the product launches. So there will be that little bit of a variation that you should always look at. But otherwise, most of it will be as per plan.
So most of it is as per plan, only a little bit of variation. But when we consider the Sector 61 is an added project with an opportunity sale of about 20,000 crore rupees, by when does this get on the line, and what is the capex involved in this?
Well, you saw the success of Adar. I won't say it's the immediate geography, but it is almost there. So this product is in the golf course extension as you exit the golf course road. We are reasonably excited about the product. It will be a luxury product. I feel there will be a good traction and demand for this, not only here, but I think pan-India and of course from the NRI markets as well. So as far as this particular product is concerned, I think if all goes well, later part of the year, most probably it will be in 26.
Okay, talking about the NRIs and the interest that we are seeing, you've got great numbers from both the Privanas. What is the NRI contribution to the total sales? Last time you mentioned that it was 28%. Has there been an increase in this time?
Well, last time it was about 22, 23 odd percent. It's increased to about 27%. What is heartening to know these days is that the NRIs are backing the Indian good real estate in a good way. There was a time where most of these investments have dried up. But I think it's good to see them come back. Most of the NRIs that we are talking about are investing for the future. This is, should they return in 4 to 5 years, they make these investments. I think that's a market we will continue to develop and explore.
What percentage of buyers have opted out for housing loans? Can we understand? Because the pricing is quite, as you said, these are luxury segment houses and a lot of NRI interest. People are looking this as an investment so that once they come back, can we get some details on that?
Well, at this point in time, the booking amounts are 50 lakh rupees, which generally come in from the customer themselves. But the banks have been very active and very supportive. So I think to start with, there will be about at least 30%, if not more. But those numbers I'd be able to, give you more accurately, say in 3 months from now, because at this point in time, mostly internal accruals are where the monies are coming from. So, but the banks are there. Most of the big banks are doing good business. And I think this particular trend will continue.
Which projects are you going to launch during the year that will clock sales of 36,000 crore rupees? I mean, that's the target for the coming fiscal is what I understand. That is FY25.
No, 36,000 is the developable potential. The launch guidelines, as far as the sales guidelines, will hover around the 18,000 crore mark. So we've got, as I said to you earlier, we've got Goa, we've got Mumbai coming in, we've got super luxury in Gurgaon, we've got some floors in Gurgaon. So we've kind of spread out pretty good.
My last question, how soon is the Mumbai launch happening? Where are we on that project, and by when can we see bookings happening?
Mumbai will be sometime in Q3, Q4 this year. So, we've already set the ground for it. Work both from the project side as well as the revenue side has begun. We've started to put our people in place. So, yes, Mumbai, please look forward to Mumbai in Q3, Q4 this year.
Okay, well, that is the word coming in from DLF. It sold out in 3 days of the launch. Who are these people buying such premium properties? But I mean, of course, there is a market for that as well. But let's get back to our equity markets, because it's looking pretty good. For now, it's holding steady above the 22,000 almost 22,300. That's a 70-point gain. And the mid-cap index is the one that's surging up almost about 1%. The big movers in the frontliners are Cipla, Adani Enterprises, Coal India, Hindalco, Tata Steel. Metals is actually topping the charts this morning. Almost all metal stocks well in the green. Let's take a quick break. On the other side, we'll have Lalit Agarwal of V-Mart Retail to talk about their Q4 earnings. Do stay tuned in.
Okay, welcome back. I mean, the market's up 70 solid points. It's looking pretty good out there. I mean, all across, all told. I just want to quickly mention two names. One is BSE. BSE is at 2,800 bucks now. It's up 5% as things stand right now. It was nowhere in the picture in the morning, but it most certainly is come back into some really solid gains. And the other one is Sterling Wilson and Solar. That is up 5% as well, 759. So I think that is almost getting to its previous highs. more names in a bit from now, but let's of course get on with more companies which reported earnings, right? V-Mart Retail is the next one. Revenue growth came in line. It reported same-store sales growth of 6%. And of course, they opened 9 new stores, but they also closed 19 underperforming stores. Let's talk about all of this with Lalit Agarwal, founder and managing director at V-Mart. Lalit, hi, good morning. Great to have you with us here. Prashant this side. It's always good to see you. You know, last time we spoke with you, you said that at the margin, consumer sentiment seems to be improving. I think this was back in February when we spoke. So let's just sort of because FY24 is done now, let's kind of put that sentiment into numbers for FY25 if we can. So revenues for the full year 24 went up 13%. And same-store sales growth was up just 1%, 24 over 23. Could you give us numbers? What are you expecting for FY25? Lalit, I think you'll have to unmute yourself.
Good morning. I definitely feel excited and a little more rejuvenated because we are seeing some comeback of the consumption getting witnessed for the last 2 months. March has been good. April has been good. The last quarter has been good, fairly good. So things are coming back to normalcy. We are feeling very excited. We should regain the lost number, which we haven't been able to do for the last 1 year or 1.5 years. So I think we should be targeting somewhere between 6 to 7% of like-for-like growth, and also try to grow some more stores so that we have a ballpark figure of total growth of around 13 to 15%. So that's what we are trying to achieve.
6 to 7% of this is same-store sales growth.
And that's what we think. That's how our planning for the planning purposes we are projecting. And you don't know where does the camel is right now standing. We don't know which side does the camel sit down. So it's yet to come. A lot of things happening in Indian politics. A lot of things happening in the economy. So some of the stuff which is coming up are positive. So we are excited about it.
So when you say there are signs of comeback in consumption, which are the pockets where you're seeing maximum amount of traction? And I mean, how is the demand environment in places like UP, Bihar, Uttarakhand, etc.?
So we've seen a little bit of challenge in the state of Uttar Pradesh of late. But yeah, some part of it, we are seeing it coming back in the last 1.5 months. We saw some comeback coming in. We are also seeing some good growth coming in from the eastern part of India. We are seeing some good growth coming in also from Bihar. The southern India seems to be a little bit muted right now. But yeah, once again, for the lower class consumption, as we introduce some new low ASP product lines in southern India, those are giving very good responses. People are, we are seeing a little bit of change in consumer behavior. People are definitely consuming, but they want to consume a little more cheaper product, a little more lesser priced product, and they are not consuming a higher priced product. So we are seeing a good comeback of rural. We are seeing good comeback of semi-urban kind of consumers, and we are seeing some good growth coming in even from tier 4. Tier 3 had been struggling. We are expecting that tier 3 also will improve now. So these are some good signs which makes the economy very stronger. So we feel this should continue, and there is definitely some challenges that we had in the states of Madhya Pradesh, Rajasthan also. But there also we have been witnessing a good growth right from one or 2 months. So I think this is a good move if it continues. Yeah.
So it's safe to say that the worst of the rural pain is now behind us, right, in terms of consumption?
I mean, that's what I project, and that's how I plan. And this is what the pulse of the market that when we travel, we talk to the consumers, when we understand what's going on in their life. So we are seeing some of these things coming back, and people are becoming more confident. If the election results are great, and the confidence level can really get boosted, and more confidence will bring in more and more consumption.
So what does this mean for your own store addition? What is the expected store addition in FY25? I think in 24 you opened about 46 stores. What's the plan now that rural demand is coming back?
We plan similar numbers. We plan around, once again, around 50 to 55, depending upon the good location, depending upon the number of stores that we get a good, where we can have really positive EBITDA and a good ROC. So those are decisions that we take depending upon the store location. But yeah, largely that's the number that we would project even this year. And we would also maybe close down still some more bunch of stores which are still low performing, or it will not be able to come back to the positive EBITDA numbers. Some of those actions, we have taken aggressive actions in the last year. We'll continue taking some more action in this year as well.
Lalit, just to sort of go back to margins, right? Now, you said that people are it's coming back. You're sounding cautiously optimistic. I think that's the right way to describe it. And you're watching and how things develop. Sure, but you also said that even within your consumer cohort, people are choosing to consume lower priced products, right? Slightly more expensive, and that's not really where the action is. Could you, Lalit, I'm just going to come back to you. I just want to make a quick mention. 2 listings are up on your screen. So one is, of course, TBO Tech. We'll have the management with us in just a bit. The other one is Adar Housing, and of course, subdued kind of listing for Adar Housing. I think it's a flattish. The pre-open was indicating a flattish rate. It's down about 1%, but look at that. TBO Tech is up 54% on some 4 million shares right out of the gates. 1,411 or so on TBO Tech. So one bumper and one a little softish is what you have to begin these new 2 sort of listings. More on that in a bit from now, but back to Lalit Agarwal of V-Mart. Lalit, I was saying that to take your point that the consumption is happening on the lower end price products. What does it mean for margins? You did 7.6% in 24. What should we expect in 25?
I mean, definitely we should expect a little more positive margin because see, that we had reduced our price points by almost 15%, 14% in the last year, and we would want to now keep it stable. We have reached a certain level. So from here, we want the consumption to come back, the volumetric consumption to come back. So we don't want to really push too hard on the margin piece. We want to definitely bring up the margin by increasing the volume. By the rupee gross margin should go up, the rupee margin should go up. So that's the approach that we have taken up now. And I think the margin should be northward and it should become better, because last time we had 1% same-store sales growth. If we are able to clock 5 to 6% same-store sales growth in the coming year, we should have a healthy margin.
And close to double digits, Lalit, possible? Everything else remaining same?
Let me not put numbers, don't put numbers in my mouth. Let's calculate that and let's hope for the best. And definitely that's what we should eye for, because all the huge losses that we have done in our online business also is something that we are tapering off. We are bringing down those losses. The quarter ended with a very low loss. So we are trying to create a roadmap where we see a little more break even in that online business as well, so that which can overall bring up the margin for the company.
But is the bulk of the cost sort of fixing costs be done, or there is a lot of room on that side?
So I think most of those are done, but still the business model of online is still not so profit making, and there are a lot of issues in terms of the whole logistic costs and the marketing costs and stuff. So we are trying to take more an omni approach, an omni-channel approach, where we are relying more on our VMart customers who are coming on the store, who can then latch onto the online piece or go on the store where they don't find sizes and they don't get those product lines in the store. So how they can get it at the home. So some of those pieces we are working on, so that we don't get into the trap of Meta and Google, so that we latch onto those social media marketing and performance marketing. So we are trying to go away with all of those pieces and try to have a very, very balanced approach. So that's something which draws and sucks a lot of money.
Okay, thanks a lot for joining in. Appreciate your time here. Well, for the market, it's getting a bit volatile. So let's get Mitesh Thakkar on board. Mitesh, good morning. It's flat for the index, but the Bank Nifty has now moved into the red, and a little bit of pressure seen, on the Sensex as well, down about 40 odd points. Your thoughts for the rest of the day? What should the order look like, and what are the stocks to look at?
I think I'm still looking at the markets in the sense that in case we manage to stay above 2200, 190 zone, then I think towards the noon session or the closing session, I think we should recover. So this is a good level to take long position with a 40-point kind of a stop on the Nifty, and there's a good chance it might work out on the upside. On the stock side, I have a buy on Oberoi Realty with a stop at 1575. Look for targets of 1665, 1670 to begin with. Eventually, it can go higher as well. And on the other stock, I have a buy on REC with a stop at about 520 for targets of 550.
We got market absolutely flat, right? Now in the red, actually. The Nifty is also now in the red. So that's a sharp drop-off which we are seeing at this point in time. Look at that. If you can have the intraday up on your screen, and this has happened quite quickly. I mean, we were at the day's high at 956. Not even about 8 minutes back, and look at the slide which has come through on the index. Mitesh, this is pretty sharp, right?
Yeah, Prashant, I think the market has come off, but again, it's not a big decline. It's just about 70-80 points kind of decline, which is less than 0.5%. This can happen. But as I said, I think watching 22,190, 180 zone very closely. The support is at 22,200, so you might see a 10-15 point kind of violation. But if we start hitting below that, then I think we'll exit our long exposure.
Just take a look at what is kind of causing the maximum pressure. I mean, there's nothing. HDFC Bank is adding about 12-13 index points. I mean, I think what was up is essentially given up most of the gains, and that is where the problem really lies. For the indices. I mean, Reliance is still pulling for the bulls. Tata Steel, NTPC, etc. still all in the green, but there's more down than up as far as the Nifty is concerned. But Sonia, I think we have the management of Mazagon Dock joining us.
Yes, we do. In fact, recently Mazagon Dock completed 250 years in service. Defence Secretary Giridhar Aramane described Mazagon Dock as a precious jewel in the crown of India that has contributed immensely to building capacities for naval and commercial purposes. Now, the shipbuilders recently acquired land from the Mumbai Port Authority as well. So to discuss more on the way forward, what's the roadmap, we have Sanjeev Singhal, the Chairman and Managing Director of Mazagon Dock Shipbuilders, who's joining in. Sanjeev, thanks a lot for joining in. And I mean, the stock as well has been a huge performer in the last 1 year. It's given great returns to shareholders. So congratulations on several fronts on completing 250 years and, of course, adding a lot of value to shareholders as well. But I want to start by asking you, some questions on the earnings, right? Because you've had good growth over the last couple of quarters. I want to understand what is the roadmap from here? What are the growth drivers? Any change in either the vision of the company, the mission, and what kind of annual compounded growth can the company deliver over the next 3 to 5 years?
As far as the financial figures are concerned, I was told that I will not be speaking about financials because this happens to be the silent period up to the publication of the accounts and approval by the board. So broadly, I will be maintaining whatever has been there with respect to the past quarter. So without dwelling much on the financial performance, what I can speak about the company is, yes, the points which you have touched upon, that there is a specific persistent thrust on indigenization and exports, and on these fronts, Mazagon Dock Shipbuilders is working very consistently. As you have informed that we have recently acquired additional 15 acres of land on long-term lease from Mumbai Port Authority, and this is the land which is adjacent to the existing property wall of Mazagon Dock Shipbuilders. So this facilitates in many respects that this would be a feeder facility. A lot of duplication of investments is saved, so we can create infrastructure, and we have plans to create infrastructure and certain balancing facilities, which would be adding to the infrastructure and capabilities and capacities of the existing yard. In addition, we have also started developing the Nava yard, approximately 10 nautical miles from the existing yard. And we plan to construct vessels for which we have already received the orders, around 21 vessels from Coast Guard, which we received between October to January 23-24. So these vessels we plan to construct at the Nava yard with the floating dry dock, which we expect to be in place by October next year. So through roll-on, roll-off operations, the vessels would be launched. So these are some of the programs we have also initiated and found some success in the area of exports. So we have received certain orders, around 6 vessels we have received from a European client, and we expect these are certain steps which are in the right direction. And as rightly pointed out, that Mazagon Dock Shipbuilders continues to be a jewel in the defense industry, and particularly with respect to Navy. So we are also state that almost all the frontline weapon-intensive combat-worthy platforms, practically all indigenous platforms have been supplied by Mazagon Dock Shipbuilders to the Indian Navy. So this we continue to traverse the same journey.
So what according to you, sir, what according to you is the future of shipbuilding? What kind of investments do you see come into this space? What kind of opportunity do you see for you shipbuilders like yourselves? Of course, as we know, you are the biggest shipyard in the country, so you are contributing most to the assets of the Indian Navy. But just overall for the sector, what do you think the big growth triggers could be, and what is the future now?
Considering the geopolitical situation around, I believe that investments, as far as the defense is concerned, this cannot be pegged at any number. So whatever would be the requirements, we see there are huge requirements with respect to submarines, for which we have already participated in the bid, P-75I, Air Independent Propulsion System, 6 numbers. For the additional Scorpion submarines, for which we have submitted the details to the Navy, 3 numbers. There are requirements for the additional destroyers. There are requirements for the additional frigates. So going ahead, we definitely see that the market is growing. In the commercial sector also, a lot of demand is there, and repair repeat segment also, which has not been tapped by us in a significant manner till now. But with the growth in the facilities and infrastructure, so this is also one segment which we would be so I see that there is a significant potential as far as the shipbuilding industry is concerned.
So hi, good morning, Prashant here.
Yeah.
I know you can't talk about because the silent period, but can you give us a broad sense? I mean, this is, I think, something we discussed earlier as well. What is the sort of order pipeline for which you have visibility looking like? What does that amount to right now?
I can speak about the published numbers. As far as the 6 number AIP fitted P-75I submarines are concerned, as per 2018 A1, it is approximately 43,000 crores. So maybe with the escalation for the past 6 years, this figure would have risen substantially. We have submitted our bid, so right now not in a position to comment with respect to what bid has been submitted. On similar lines, we have an order for 6 number of Scorpion submarines, of which we have already delivered 5. The last one we are targeting to deliver this year. In the same series, we are discussing additional 3 submarines. So this also, the details have been submitted to the Navy. Once the bids are accepted or opened and discussed, then only the numbers would be known. So this is with respect to the submarine area. And with respect to the destroyers, next generation destroyers, the ball has started rolling. We understand there is a requirement of 6 to 8 next generation destroyers. Similarly, with respect to Project 17 Alpha frigates, of which we are supplying 4 numbers and GRSC is supplying 3 numbers. So there again, the discussions are on with respect to a follow-on project of 17 Bravo. So again, frigates, which we expect could be 6 to 8 in numbers. So the finer details and contours and with respect to the pricing and the overall project size, this clarity would emerge with time. As of now, I can only say that 17 Alpha, as far as MDL portion is concerned, 4 frigates, it is approximately 27,000 crores. Which is being executed currently and which is an order of 2015. So there could be guesses with respect to what should be the pricing today. And with respect to destroyers also, which is 4 in numbers, 15 Bravo, which we have 3 we have delivered and last one we are targeting for delivery this year. So this was a 2011 order, approximately 34,000 crores for 4 numbers. So here again, the numbers can be guessed with respect to what likely number today for another 4 destroyers, or depending upon the number, whether it is 6 or 8, and how the Navy proceeds on it with the one single shipbuilder or 2 shipbuilders.
Got it. Got it. So just to, of course, I mean, the pipeline, as you said, a lot of this is discussion, right? And then orders are finalized and then the tender is placed out. But, and all that, we'll track that. For now, you are waiting sort of the tenders to be opened for the P-75 order and 3 submarines, right? Immediately.
Yeah, additional submarines Scorpion and P-75I.
Yeah, okay,
6
got
numbers.
that. Okay, got that. So we'll leave it there. Thank you very much for your time. Great speaking with you, and I hope to speak once again to you once the numbers are released, and you will be able to speak put out some numbers, specifically some numbers to what we discussed here today. We'll take a quick commercial break here. The market, of course, very, very volatile, completely off the highs. Manisha is here with the commodities on the other side. Stay tuned.
On the Chabahar agreement, my understanding is my cabinet colleague Sarbananda Sonowal ji is today going to Iran, and it is expected that we would see the long-term agreement between India and Iran on Chabahar. We've been running it on the basis of ad hoc arrangements. We believe that as and when a long-term arrangement is concluded, it will clear the pathway for bigger investments to be made in the port. Right now, the port has not grown.
As far as the slippage ratio is concerned, we are targeting a number of around 1.20% for the slippage March 25 slippage ratio. As regards the gross NPA number is concerned, you have seen that the gross NPA has come down from 7% plus to 4.98%. We expect further it should be at around 4% in FY25. So for the guidance for March 25 would be on the deposit side 11 to 12% and advances side 13 to 14%. So the guidance for the financial year 25 is on the net interest margin side is that our net interest margin on a global level should be at around 2.95% and this net interest margin on the domestic side should be at around 3.35%.
Maruti Suzuki had first launched the Swift way back in 2005. This has been one of their highest selling models. They've sold over 3 million Swift cars so far. And now this is the
Welcome back. So let's do one thing. Let's get a quick handle on what's happening in the world of commodities. Manisha Gupta is joining in. Manisha, what's been buzzing over there?
A lot of things really, Sonia, but I'm looking at copper yet again because we've seen nearly 5% of gains in the overnight markets, and in the US, the crude price, rather the copper prices are now trading at an all-time highs. It's trading at a 2-year highs on LME, but on CME, on Shanghai, and in the Indian markets, it's an all-time high that you are seeing in case of copper prices here. Very strong gains is what we saw in the month of April, and May really seems to be building up on that. Well, if you look at the CME copper prices, we are at $300 in premium to the LME prices right now. So that tells you that the US demand clearly seems to be picking up on ground, and there is tightness in the immediate delivery in sense of copper, and that really seems to be supportive. In any case, the long term continues to be bullish. There are tight supplies. We have seen CME copper inventories decline by 30% since late March, and that has been supportive for the prices there. The Chinese economic data seems to be on the positive side, and the latest tranche from China in sense of 1 trillion yuan in bond issuance is something that really seems to be supportive. China, remember, consumes 50% of the global copper. So whatever happens in China does impact the copper prices there, and we have seen that impact working in as well. As I said, for the near term, the inventories seem fine, but it is the longer term, 2025-26, when the markets believe that this demand will be higher and supply will not be able to catch up. The Chinese copper smelting also has declined by 10% in 2024. So there are various factors in sense of supplies which seem to be supporting the markets right now. And the demand also seems to be coming in from the electricity and EVs, but also from weapons. There's a report that suggests that there's a lot of demand coming in from defense as a sector as well. And then you have green energy, data centers. So demand for copper going forward in the next 2 to 3 to 5 years does seem very, very strong. Now, this is a very interesting chart coming in from Bank of America, which does show you on what the global production and global consumption numbers look like. So I've taken the last year where you have the global production numbers at 25.9 and consumption slightly lower than that. This is also a year when you are working with a surplus. Now, this year, when you look at the markets, that surplus seems to have gone down. While the global production has gone up, so has the global consumption, and by leaps and bounds. Now, for next year, we are turning into a deep deficit year. So while the production does stand at 27.6, the consumption is expected to grow many-fold, and that is what the markets are factoring in case of prices right now. Is the reason you have Goldman Sachs, Bank of America, Citi, everybody suggesting that $10,000 a ton is now done, and $12,000 is what they're anticipating in the next 8 to 12 months.
Okay, thanks a lot for that. We'll take a quick break. We'll get chatting with Ankush Nijhawan and Gaurav Bhatnagar of TBO Tech on their stellar Dalal Street debut. Stay tuned.
Swift that has been launched with significant upgrades. The biggest upgrade is the 1.2-litre new Z series engine. This is the best engine that Maruti Suzuki has got in its stable. It also brings down the CO2 emissions by 10%. It gives you better fuel efficiency by 14% according to Maruti Suzuki. The average mileage that you'll get across the automatic and manual variants would be anywhere between 25 kilometers a litre to 26 kilometers a litre. High on safety as well. 6 airbags as standard across variants, even in the entry-level model. 3-point safety belts. You also have seat belt alerts. In terms of infotainment and connectivity in the car, you've got a 9-inch infotainment display, Apple CarPlay, Android Auto. You also have a wireless charger in front, 2 USB charging ports at the back. This is the first time that the Swift will get rear AC vents as well. They've also given LED lamps here in the front and the rear. Usually these are there in premium vehicles, but Maruti has made sure that they give this to their highest selling hatchback and make this a strong premium hatchback offering. Now, all of this coming at a price tag of 6.5 lakhs ex-showroom for the entry-level model, which is a manual variant. The prices go up all the way till about 9 lakhs. 2 new colors have been introduced by Maruti. One is blue and the other is orange. They've already started bookings for this new Swift. They have received bookings for over 10,000 cars so far. This, like other Swift models, were exported to Europe and other markets around the world. This car too will also be exported. So it will be a very important product in Maruti Suzuki's portfolio, and let's see how this really does in the market, because
Well, the online B2B travel distribution platform TBO Tech made a stellar entry on the bourses, listed at 1426 rupees versus the issue price, which was 920 rupees. Now, TBO Tech's co-founder and joint managing director Ankush Nijhawan and Gaurav Bhatnagar are both with us. Gentlemen, morning, and thank you for taking the time out and speaking to CNBC TV18. Congratulations on a good listing. Ankush, I want to start with you. You know, this, of course, the space that you're in is growing in a huge way, and the online B2B distribution platform, right, in travel, I want to understand what kind of growth rates are sustainable over the next couple of years, and what's the big trigger for you going ahead?
So first of all, thank you for inviting us this morning on a very, very happy day for all of us at TBO. I think for us, what we have done in the past, is what we will continue to build. And the growth, what we have demonstrated in the last 2-3 years. Our fundamentals are strong. We believe in building the business in the right way and ensuring that we deliver the right services both to our supply and our demand. On the other side, the tailwinds are definitely, in the favor of the tourism and hospitality industry. We all read this, there's no rooms available. People are traveling across the world. The airlines are adding more aircraft in India. Plus, the airport is putting a lot of money behind the infrastructure. So I think all these, the things which will definitely help us to grow, to the levels we expect, and keeping in mind the fundamentals, what we've been delivering for our partners and suppliers.
So can you help us with some numbers now that you're listed? What is the kind of growth rate that one can assume for the business, both on the top line as well as the expected margins in both FY25 and 26?
So our intention is to, maintain the same rates what we have done in the past. But now as we go forward, let's see, which way we go. But definitely, we are very positive on what we want to do and our growth rates as well.
Right. Gentlemen, morning. Ankush and Gaurav, and congratulations once again. Super listing. Prashant here. Ankush, so when you say expect to continue to grow FI between 21 and 23, revenue CAGR was some 174%. Now, of course, that was also marked by COVID, so you're kind of coming off a low base, and so maybe not exactly comparable. Would you want to put some numbers to it, even in the ballpark? That'll be helpful.
So, Prashant, look here, you're right. Coming out of COVID, obviously it was a small base. If you were to compare our numbers with the last year pre-COVID FY20, you would see that roughly since FY20 revenue has a little more than doubled, and EBITDA has grown faster because of operating leverage. Rather than putting some specific numbers on future forecasts, let me just tell you, the space that we operate in and what's the headroom for growth. TBO is a global platform. We operate in more than 100 countries. 70% of our revenue comes outside of India, and we operate in the global outbound travel space. Now, this space is $2 trillion, roughly $2 trillion in size, if you look at total travel spend only on outbound travel globally. We'll be somewhere between $3 and $4 billion out of that $2 trillion. So there is no dearth of headroom for growth in this business. So while, we would not be able to comment on specific growth rates, our belief is that given the tailwinds in the business, given the size of the industry that we operate in, given the fact that we operate in pretty much all the 5 continents, we would expect to see a bright future ahead.
No, I mean, FY23 revenues were 1,065. You already at 1,023 for the 9-month period. So yeah, I mean, growth should be good. You're saying your total addressable market is $2 billion, Gaurav?
$2 trillion, Prashant, $2 trillion.
Sorry, that's the global, right? But you said outbound, global outbound from India.
Prashant, so no. Prashant, so our business, let me explain what the business is. So we aggregate travel agency demand globally. So whether it's a travel agent in India or a travel agent in the Middle East or a travel agent in Brazil or Indonesia, when a traveler comes to them and they want to book an outbound itinerary, so somebody traveling from Brazil to US or somebody traveling from India to Europe or somebody traveling from Dubai to Indonesia, our platform serves as a bridge between demand and supply, right? So that is the space that we operate in. Now, if you step back and look at how large that space is, 1.5 billion outbound trips happened in 2019, similar numbers this year. So look at that number, right? 1.5 billion people traveled globally.
Right.
And that number grows 6-7% every year. So 100 million more trips get added to this pie every year. So that is the space we operate in, Prashant. And then that's the reason we believe that, from where we are, our global market share is still very low and huge headroom for growth.
Right. That number, though, that trillion with a T, the number, Gaurav, that you put out, that is the value of all flights taken, right? I mean, total travel, right? the space that you operate in,
Total travel
which is
spend.
Total travel spend, correct. But the space that you operate in, could you kind of describe, which is kind of, sort of connecting the buyer, the suppliers and the buyers on the on the other side? Could you give us a sense of how large that kind of market is? And just for our viewers, I mean, there is another company which is listed, which is RateGain. Broadly speaking, can I say you're in the same kind of space?
So, Prashant, I'll take the second question first. RateGain is part of the same supply chain, though they sit at different part of the chain. We use a platform like RateGain to get access to travel supply from hotels, right? So while we negotiate with the hotels directly, but when we need access to rates and inventory, we connect to platforms like RateGain. So RateGain is very much a partner. On the size of the market, Prashant, and sometimes it's surprising to see how large travel industry is, but just outbound travel spend is in the space of $2 trillion, right? If I were to double click on that, just the hotel spend, right? The global hotel GTV is a little short of $1 trillion, right? So that's the kind of space that we are operating in. And because we are operating in a global space, we are operating in across all the 5 continents. We do believe that when we look at addressable market, we do look at the global addressable market.
I just have one final question for Ankush before we let you go. Any other growth avenues or areas of growth apart from the hotels and the airline space that you're looking at in the near future?
So we will definitely, build on our ancillary products, which is primarily rail, sightseeing, Zero Rail, which I think car rental, for example, because we want to complete our offering to the travel buyers, which helps us to, further, get more stickiness from them. It also helps us to get more wallet share, on that transaction with us. So that's definitely a plan, apart from obviously deepening and building our hotel and air business as well, which is our prime focus.
Gaurav, would you want to give us a little bit of color on what margins, I mean, what's the headroom to, margins were at about 18% or so last year. What's the steady state we can expect from TPO?
So look, Prashant, our business has operating leverage in it, and if you see historically last 3 years, our margin our EBITDA margins have been growing. The company's strategy is that from a take rate perspective, which is the commission that we keep for ourselves versus what we leave for travel agents on the table, we don't want to change that at all, right? We want to make sure that the platform is not expensive for the buyers or the sellers to operate on. So we are banking on the fact that top line growth will translate into higher bottom line growth because of operating leverage over the next few years, and hence EBITDA margins should expand from where we are.
So essentially the number of what we should track, I mean, the one metric that we should track is the number of bookings that you're handling. That's the number to track? I mean, because
I think
pricing...
internally the North Star metric is how many travel agents are operating on the platform every day. The business is the platform business, so there are network effects. We know that historically the GTV grows faster than the number of active travel agents, right? So that's kind of like the number we like to track.
Okay, all right. We'll leave it there and we'll sort of have you back for a longer chat. Interesting space, and thank you very much for joining us with a lot of that perspective. Ankush and Gaurav, congratulations once again from all of us here on a very superb listing today, especially on a day like today, because the market, of course, is not doing all that well. We're off sharply. We're down 50 points on the day, 22,168. It's a wrap on this edition of Bazaar. From all of us here, it's goodbye. Chartbusters will pick up on all the action in just a bit from now. Stay with us.
Invested 1,450 crores in this model, in developing this new Swift at a time when hatchback sales are actually falling. But somewhere Maruti Suzuki believes that there is still strong demand for the premium hatchback segment, and one day in the next few years the hatchback segment will revive. With Bureau Journalist Pradeep, this is Parikshit Luthra.
Things have not changed from there. Industrials and capital goods, just to remind you, we've been overweight since October 2021, whereas most people started talking about it only last year. Where we added more recently have been some commodities, metals and cement. Though, I mean, we're not overweight there, but earlier we had very little there, so we've added some there. most latest addition has been a bank where we still, and banking as a whole, we still remain underweight. But after a bad phase, it's not looking quite so bad anymore. So some of the stocks are beginning to look a little better than they used to. Just as we are now watching IT, that sometime this year, I think that will bottom out and that will give a good buying opportunity.
As I mentioned right in the beginning, you're here for the IPL tournament, which is going on in full swing. This is your first time leading a T20 side. You have led, of course, Australia in ODI and Test. What has been your experience leading, the Orange Army over the past few weeks?
Yeah, it's been fun. I think, first of all, T20 cricket, it happens so fast. You've got to make decisions quickly. Sometimes you finish your over and you remember you haven't chosen who's going to bowl next over. You've got to quickly think about it. So that's been one aspect. I think working with a lot of the Indian players I didn't really know super well before coming over has been great as well. Learning about what motivates them, what makes them tick, and just seeing the kind of raw talent of a lot of these guys has been awesome. So a little bit of a different experience, but most of it's the same.
Large trade in Cipla. Its promoters sell 2.5% equity through a block deal window. The stock higher by 4%.
Bharti Airtel surges on the back of its Q4 results. The India mobile business meets estimates. Subscriber addition also strong at 6 million users. Jefferies issues a buy call on the stock with a price target of 1590.
It's not the only Bharti stock that we're watching this morning. Bharti Hexacom, after listing, reports its first results. The quarter came in steady. Brokerage firm Jefferies issues a buy call on the stock, also raises the target price.
Siemens slips but recovers from the lows of the day despite a strong showing in Q4 after the board approves the demerger of its energy arm and plans to list it as a separate entity.
V-Mart Retail climbs on the back of its earnings. The company reported revenue growth that was in line with the street. The management tells CNBCTV18 they've seen signs of consumption pick up, and they guide for 13 to 15% revenue growth led by 6 to 7% same-store sales growth in FY25.
Hello and welcome to Chartbusters. I am Hormus Patakia. With me is Mangalam Malu. We started off the day pretty well, but we are off the highs of the day now. The Nifty is now at 22,150. After a 3-day recovery, the Nifty is seeing a bit of resistance at the higher levels. We are mentioning the 50 DMA would be a bit of a resistance there at 22,300, and that's exactly where the index has reversed from, around 22,300 levels now, significantly off the highs of the day. 150 points now on the Nifty off the highs, 22,160. Pull up the Bank Nifty as well, and that is also seeing a bit of underperformance from the highs. 48,000 proving to be a resistance there for the index. It started off higher, went close to 47,950. That is where it reversed from yesterday as well, and now it has also seen some bit of correction from higher levels. So, bit of resistance there, Mangalam, at higher levels for the market.
Bit of resistance there for the higher levels. Hormas, we're looking at uncertainty still there in the market, right? So, as a result of which, yes, we see some recovery from the lows, but triggers for upside seem limited until there is some clarity on the various factors that are playing out right now, not least of which is the general elections, which we're looking at in terms of an importance. And apart from that, just today, we will also get the US inflation data that will weigh on sentiments in the global markets as well. VIX once again has begun to rise, so it's up around 2% after breaking the 14-day gaining streak in yesterday's trading session, up back above that 20.5 mark. But a lot of individual stocks are in focus, and what will keep the bulls happy is that the advance decline ratio is still firmly in favor of advances for the second day running. One of them on our radar right now is Adar Housing Finance, has made its debut on the exchanges today. The stock listed largely flat at about 315 rupees per share. Rishi Anand, who's the managing director and CEO of the company, joins us now to discuss the company's post-listing plans. Thanks a lot, Rishi, for joining in. What we've been speaking about in terms of growth or demand in consumption over the last couple of years has been very skewed towards the upper end. You cater to the lower end of the society with average ticket sizes being around that 10 to 11 lakh rupee mark. How is consumption there right now? Have you seen a pickup in the last couple of months or so? And would that mean you grow above and beyond that 15% CAGR that you've been doing over the last few years?
Great. First of all, very good morning to both of you. Too many questions in one question, but I'll try and attempt the questions. One is you spoke about the demand on the lower income segment that we operate in. We typically operate in the EWS LIG segment. And if I were to refer, when you call out the growth in the higher segment is higher, it is simply because of the ticket size. If you look at one of the datas of RBI in 2019, which spoke about the housing unit shortfall in the country pegged at about 10 crore housing unit shortfall, out of the 10 crore, 9.5 crore housing shortfall comes in the EWS LIG segment where we operate. And if I were to translate that into the housing loan loan amount, it translates to about 35 trillion. So demand side, I don't see an issue. Yes, we have been growing at the range of about close to about 20% on AUM, 23-24% on disbursement. ROEs are great, ROA is great. And the way the market demand is pegged at, I don't see an issue at all when it comes to growth.
Mr. Anand, good morning. Thanks a lot for joining in. Congratulations on becoming a public company today. That I wanted to ask you about the fact that you're focusing more on the non-home loans business as well, right? The share from that has increased to almost 24% from 15% for the first 9 months of FY24. Do you see that share going higher going forward into FY25 as well, or do you expect to maintain that at current levels?
So if I were to compare 9 months FY22, FY23, we were at 23% FY22, we are at 24% FY23. I don't see any reason why we should take it beyond 25%. Internally the management feels that we are a housing finance company. 75-25% is the kind of number we should be maintaining. Above all, housing finance companies are regulated with a set of 60% being home loan retail, which translate to about 75%, home loan retail on balance sheet, which translate to about 75% home loan. So I think we are very comfortable maintaining 75-25 on home loan, non-home loan.
All right, that makes sense with a 20% AUM growth, 75-25 mix. What's also interesting is that the shift that you've seen from salaried to non-salaried. In fact, self-employed as a percentage of your customers have increased from about 36% a couple of years ago, now all the way up to 43%. Just wanted to understand the economics of the same. Do they offer higher yields, and is there a little more risk to self-employed versus salaried?
So what has happened with us is, we've predominantly been operating, the way we've expanded our geography, we were always in larger cities and larger towns. In the last 1.5 years, we've started moving into deeper locations, smaller talukas, smaller districts. The moment you start hitting these smaller locations, they are predominantly self-employed customers. That is one point why our self-employed segment has seen a little jump. Salaried segment, we've now hovering around 57-58%. Self-employed definitely gives us a kicker on yield of about 350 basis points higher than what home loan, higher than what salaried customer gives in. And on the risk side, it gives me only a high of about 40 to 50 bips on delinquencies. So yes, from a pure business perspective, it makes sense to balance out both salaried and self-employed. But I think the enhancement of self-employed is happening because of the deeper impact, the deeper locations that we are getting into.
Right. Mr. Anand, I wanted to stick to the non-home loans business because that has also contributed to your net interest margins as well. As of the December quarter, they stood at around 9%. Now that you're a public company, I can ask you some numbers. What's your guidance for your NIMs going into FY25 for the full year?
We've been a company comfortable at about 8.5-9% kind of NIMs, and spreads become one of the important factors in the contribution to NIM. We're hovering around 5.5 to 6% on NIMs and on spreads, and we are very, very comfortable maintaining that. Yes, self-employed and loan against property contribute significantly higher to your NIMs. And as I guided, 25% will be our non-home loans. We would not want to extend beyond that. So that's the proportion we will be comfortable maintaining.
All right, and final question then, with this capacity, with the fundraising that you've done, your CRAR increases. How long does this fund your growth for before you have to tap the markets once again?
So the way we look at it, anywhere between 3 to 4 years, I don't think we need to come back to the market. We've come to the market now. 3 to 4 years from now, there is no requirement for coming back to the market.
Well, promoter shareholding is around 76.5. Mr. Anand, would you look to bring that down to 75% anytime soon?
It's actually moved down to about 70, close to about 75.8. With a 22-23%, 22 point some percent shareholding dilution now from a 98.7. So I don't think we are going to be hitting the market very soon.
All right, Mr. Anand, we leave it at that. Thanks a lot for joining in. Wish you good luck as a public company for FY25. We're looking to chat more often on this platform. That is the management there of Adar Housing Finance, a subdued listing, just 0.5% higher roundabout at the issue price of 315. But let's shift focus now to our special segment where we get you a few ideas for profit from Money Control Pro. Sachin Pal of moneycontrol.com joins in now to talk about a stock that he's tracking closely. Sachin, what do you have for us?
Shree posted a decent set of numbers in the final quarter of FY24. Revenues for Q4 are in fact up 3% year-on-year. However, the profits after tax grew almost 20% year-on-year thanks to expansion in operating margins. Whereas the demand for the overall company has kind of slackened in the last couple of quarters, and that has a really impact on the overall revenue growth for FY24. However, the company has in fact expanded its facility in the faucetware, which puts it in good stead from a long-term standpoint. Also, the company is looking forward to land acquisition for the sanitaryware facility, post which it will start the project execution as well as expansion of the sanitaryware facility as well. Overall, the company enjoys a very strong foothold in the retail market, and therefore 75% of the revenues in fact come from the retail segment, which largely insulates from some of the demand supply shocks of the real estate market. Therefore, the company is in a very strong position to be able to grow its scale in the coming years. Well, the stock has also seen a correction of almost 20-25% given the subdued set of numbers in the past couple of quarters, and is currently trading at around 35 times FY25 estimated earnings, which we believe is very reasonable for accumulation from a long-term standpoint.
Right, that's about Sera Sanitaryware, an idea for profit coming in from our colleagues at Money Control Pro. Take a short break. On the other side, we're not done with speaking to management. Sanjeev Asthana, the CEO of Patanjali Foods, joins in to discuss their quarter gone by. Stay tuned.
Yeah, and nature of IPL is such that you get to, play with and work with people from different countries, cricketers from different countries, from different cultures. What is that like, and what is the learning from that experience, Pat?
Oh, it's great. In our team, we've got a couple of South Africans, we've got Glenn Phillips from New Zealand, even a couple of coaches have played all around the world. So it's good. I think you realise that, people from different cultures might even speak different languages, but kind of when it comes to cricket, everyone's pretty similar.
Yeah.
And it's kind of the one thing everyone bonds over. But, even some of the overseas players who we've played, for Australia against, sharing some of the stories of the great matches we've played over the years is always a bit of fun as well.
So do you foresee SRH going ahead and winning the IPL this time round?
Of course, that's why we're here. Absolutely.
Is it a gift to self in the birthday month, which is May?
Yeah, I mean, that would be great. Yeah, we've obviously, SRH have won it once before. So first goal is to get to the top 4, and then anything can happen in the finals.
So you are such an inspiration, Pat, and India is a country where cricket is a religion. I believe every nook and corner, even the place that we are sitting in right now, every nook and corner will have an aspiring cricketer to make it to the top 11 in the country. What is your tip to them? What is your formula? What is the Pat Cummins formula to make it to the team?
Well, I think, what I always say is this: we all started playing cricket because we love it, and if you love it, you end up training more, you end up playing better, you play with more freedom, you're not uptight. So I always just say, whatever keeps you loving the game of cricket and keeps you playing for those right reasons, I think is going to give you the best chance as well.
उत्तर प्रदेश में आपने अभी कहा कि आप सीटें बढ़ाएंगे पिछली बार से उत्तर प्रदेश में सीटें
Welcome back. You're watching us here on Chartbusters. Let's get chatting with the management of Patanjali Foods. Remember, the company reported a 4.5% growth in their revenues in the fourth quarter, with margins expanding by about 40 basis points as well. Food was the revenue driver for the company, food and FMCG, that is, with a jump of almost 50% year-on-year. Sanjeev Asthana, who's the CEO of the company, joins in to discuss the business further. Thanks a lot, Mr. Asthana, for joining in. Always a pleasure speaking with you. Before we just talk about the business and the growth going forward, there was an interesting footnote in your accounts which said that the board has formed a committee to consider the proposal of acquisition of the non-food business of Patanjali Ayurved Limited. So I just wanted to know a couple of things. One, by when are we likely to hear on any development that will take place out here? And what could the revenue potential of the business that you are onboarding here with margin potential be?
So on the revenue potential, I will keep the remarks reserved right now, Mangla. But on the announcement, you will hear very soon. The diligence is going on. And we're pretty hopeful that, you will see in a couple of weeks an announcement in terms of the, the acquisition part once the diligence is done. And I would say that it's going to be extremely EBITDA accretive, very positive, in terms of the for the company's overall consolidation of the FMCG portfolio. But more importantly, we are hoping that the high margin products that it has and, some of the most solid brands in its category, I think would come into the listed entity, which should be beneficial, overall for the investors' perspective, as well as for company's performance.
So would this just be the personal care business, or would this also include some of the Ayurvedic products, medical care business as well? Because what we know of Patanjali non-food, which is not part of your listed entity right now, there is Dant Kanti, there is of course the soap business that you have, the shampoos business, the wash business. Is there anything else that would be added, or what is it that would be added according to you?
So all the categories: home care, personal care, dental care, skin care, and there are some very solid sort of brands and products there, which are extremely receptive, well received by the consumers. So the entire portfolio is going to move, once if we go through the diligence, and the acquisition happens.
Is there a ballpark figure that you can share on the revenue potential, Mr. Asthana?
It would not be fair. I think that's an unlisted entity that diligence is going on, but just wait for a couple of, but it's a large business. It's a very large business. From the numbers that we see currently, very profitable. So I think just be patient for a couple of weeks. You will soon hear from us.
Yeah, we'll definitely be patient for a couple of weeks. The only thing that's piqued my curiosity right now is because the last time you joined us, you said that the revenues that you see for the company would be close to around a little over 35,000 crores, and for the group would be about closer to 50,000 crores. So the delta here is 15,000 crores. I wonder how much of that is the non-food business. Is it fair to say, is it 50-50?
No, certainly not. I don't think we'll have that size and scale which will accrue. So broadly, revenue is a reflection of the prices where we have on the commodity portfolio. So this year, for example, our revenues have been in general, pretty flat because even though the volumes went up across the board and in the business, but because the price points were lower, especially on edible oil, where we saw a significant decline from the price point per ton, which is why you're seeing lower values. But our margin profile, etc., will certainly keep getting better. And once the non-food part sort of comes in, as and when that happens, you will see a significant addition both to the bottom line as well as to the top line.
Okay, let me just write one this way again. Food and FMCG currently accounts for 33% of your revenues, right? This is in your current mix of things. Once the non-food business comes in, then how much would food and FMCG account?
You're forcing me to give a number right now. It's available. It would be wrong on my part to be sharing that numbers. I think suffice it to say, from an FMCG perspective, that's a large number, and and high margin business also. So you will see a sufficient accreditation. I think I would imagine that at least on the FMCG portfolio itself, we should add good anywhere between 35 to 50% addition to the FMCG portfolio.
We try, Mr. Asthana, to get numbers out, but in your P&L, you mentioned that your finance costs had gone up significantly. What would you attribute that to, Mr. Asthana? Because there has not been a proportionate increase in your debt, but the finance cost has gone up significantly.
No, this was, just an accounting treatment to the redemption of preference shares. So we had almost nearly 92 crores of preference share redemption. That is the reason the finance cost is showing higher. And so that's it. I mean, there's absolutely no other sort of charge and no debt increase, etc. So that's purely an accounting sort of entry, which is showing a higher cost.
let's get the regulation questions out of the way then. What is the kind of revenue volume growth that you're targeting this year in all your segments, and what are the kind of margins that one should expect?
So typically, I'll just run through those. So I think on the FMCG that we've already mentioned, that we want to maintain a growth rate of anywhere between 8 to 10% on the revenue side. The margin construct we want to maintain between 16 to 18%. We are pretty much on course for that. The foods portfolio has been very positive. The configuration of the food portfolio, which we were just doing on the investor call as well, undergoes the mix changes. So this year we had a higher proportion of the staples portfolio, and the premium portfolio also continued to grow. But broadly on the FMCG side, you should hear from us that we are nearly 10,000 crores now. We are expecting that we should see a 10% plus growth in this year on the existing business, not the new business that will come into our fold. And on the edible oil side, we had the growth in volumes of nearly 13%. But on the revenue side, we saw the price point decline by almost 25% because the edible oil prices came down. But we expect that the growth in edible oil will taper off closer to 6 to 8%, compared to the country's growth of 2 and 3%. So broadly, I think compared to 31,000 odd crores of revenue this year, we should see closer to about 35,000 crores next year, not including the new business which will get added to the company in the fullness of time.
Very quickly, Mr. Asthana, due to paucity of time, but has there been any impact on the business because of the issues that Patanjali Ayurved has faced when it comes to the Supreme Court?
None at all. In fact, if at all, quarter four has been very positive for us when most of this issues were getting discussed. So largely completely untouched. And that also should be a thing of the past very soon. So I think the direction is positive, and we are pretty hopeful that all of it, will be passed behind us. But on the business front, we see virtually no impact at all.
That was an important question to ask, largely because now some more brands from Patanjali Ayurved would be coming into your fold as well. But do you have any internal measure of the metric of brand structure, brand strength right now, which may have taken a dent, if at all?
So just to clarify, in terms of the brands, that perhaps are being alluded to, are typically these are all Ayurvedic medicines, which are not, at all either in the mix of, the businesses that we're evaluating, nor it has had any impact. So pretty much on the non-food, those are, the Ayurvedic medicines that are under discussion. And almost no impact on either the sales or the, the imagery or the consumer response. Nothing, not one bit on our business.
All right. Thanks a lot for joining in and giving us that update. One would have thought that even though the businesses are different, the brand name together may have had some overlaps here and there. But take your point out there, and we will be awaiting. Hope to speak to you as soon as you bring the other businesses into your fold in a couple of weeks, as the management is saying, Hormaz.
Indeed, and the stock reaction as well, 0.5% higher of the lows of the day, but of the highs of the day as well. So not much when it comes to an earnings reaction from Patanjali Foods. But time for a short break. Back with more on the markets and specific stocks on the other side. Stay tuned.
अगर सब कुछ अच्छा रहा तो 80 की 80 हो सकती है। अरे तो बहुत ही बड़ा बयान है। आपका रिकॉर्ड 2014 का ब्रेक होगा जी, 71 और 73 हो सकता है। हम सब कुछ अच्छा रहा तो 80 की 80 भी जीत सकते। इसका मतलब आप अखिलेश को कन्नौज में हराएंगे, अखिलेश जी को, डिम्पल को मैनपुरी में हराएंगे, उनकी पूरी फैमिली फिरोजाबाद, आजमगढ़। मैंने संभावना कहा है कि हम 80 की 80 कर सकते हैं। हमारी सीटों की बढ़ोतरी होना निश्चित है। राहुल गांधी और प्रियंका गांधी जी का कभी हाँ कभी ना, कभी लड़ रहे हैं कभी नहीं लड़ रहे हैं, अभी कुछ सुनने में आ रहा है कि शायद अब नहीं लड़ रहे हैं। इसको कैसे देखते हैं आप? देखिए, ये लोग आत्मविश्वास गवा बैठे हैं। अपनी पुश्तैनी सीट से भी लड़ने का आत्मविश्वास नहीं है। अगर नहीं लड़ना था तो इतने समय तक सीट क्यों पेंडिंग रखी? किसी कार्यकर्ता को दे देते तो कम से कम वो जनसंपर्क तो कर सकता था। ये कंफ्यूजन जो है कहीं न कहीं लैक ऑफ सेल्फ कॉन्फिडेंस को दिखाता है। सैम पिट्रोडा जी ने जो है इनहेरिटेंस टैक्स की बात की, जो हम लोगों की जमा पूंजी है, जब हम अपने लोग पूरा बचाते हैं अपने फैमिली के लिए, जब हम उसको अपने आने वाली जनरेशन को देंगे तो उस पर भी टैक्स लगेगा और ये टैक्स बहुत बड़ा टैक्स हो सकता है। तो क्या आप कहेंगे कि बीजेपी अगर आएगी तो इस टैक्स को कभी नहीं लागू करेगी?
भारतीय जनता पार्टी क्या करेगी, हमारे मैनिफेस्टो में साफ हमने लिख करके लाए हुए। अब उन्होंने कहीं सगुफा छोड़ दिया तो मैं भी वो झंडा लेके घूमूंगा, ये सवाल आपके मन में कैसे आ जाता है? भारतीय जनता पार्टी की विचारधारा साफ है जी। हम अपनी विचारधारा के आधार पर कार्यक्रमों को लेकर के, मैनिफेस्टो को लेकर के देश के सामने जाते हैं। कृपा करके ऐसे महाशयों के विचारों को हम पर मत थोपिए भाई।
मोदी जी, राहुल गांधी ने एक बात और कही है, वो कहते हैं कि जब वो सरकार अगर उनकी आएगी तो वो एक नेशनल एक्सरे कराएंगे। इसी से जुड़ा सवाल है, इसीलिए मैं पूछना चाह रहा हूँ, एक नेशनल एक्सरे कराएंगे। बात सिर्फ कास्ट सेंसस की नहीं है जो कि वो करते आए हैं, उस पर भी मैं आपका मत जानना चाहूँगा, मगर बात वो कहते हैं इससे आगे है। बात कास्ट की नहीं, बात जस्टिस की है। और वो कहते हैं कि हम जो है एक सोशियो इकोनॉमिक सर्वे लाएंगे, एक इंस्टीट्यूशनल सर्वे लाएंगे और उसमें देखेंगे कि किसके पास किस जाति और किस उस वर्ग के पास क्या है, कितना धन है, कितनी इंस्टीट्यूशंस में भागीदारी है, और उसके बेसिस पर हम इस पूरे सिस्टम को रीडिस्ट्रीब्यूट करेंगे। इसको आप कैसे देखते हैं?
सबसे पहले तो इस
Back with us here on Chartbusters. The market has seen a bit of a recovery from when we started the show off. The Nifty is back at 22,200, but the broader markets continue to do well. The mid-cap index is up almost 0.7%, so as is the small-cap index. But the PSU banks are the outperformers in today's session, while the Nifty Bank continues to see a bit of a struggle. But with that, it's a wrap on this edition of Chartbusters. From Mangalam, me and the team that put this show together, thank you so much for watching. Trading Hour is up next.
आपको राजनीति के एक्सपर्ट मानते हैं, जो लोग देश के उतार चढ़ाव को बड़ी बारीकी से अध्ययन करते हैं, सबसे पहले उनका दायित्व है कि वो ऐसे लोगों को पूछे कि जिस परिस्थितियों का वर्णन आप कर रहे हो, अगर ये सही है तो 50, 60, 65 साल तो आपने राज किया भाई। ये मुसीबत के जो जन्मदाता आप हो और आपने अब तक ये बर्बादी लाई क्यों? पहले उनका जवाब मांगो भाई। नंबर 1। नंबर 2, एक्सरे का मतलब क्या है जी? मतलब हर परिवार में जाना, घर घर छापा मारना। अगर किसी अनाज के डिब्बे में किसी महिला ने अपने गहने छपा के रखे हैं, उसको भी एक्सरे किया जाएगा, उनके गहने ले लिए जाएंगे, जमीनों का हिसाब किताब किया जाएगा और फिर उसको रिडिस्ट्रीब्यूट करेंगे। ये दुनिया में एक माओवादी विचार ने सब किया हुआ है, दुनिया बर्बाद हो चुकी है। ये पूरी तरह अर्बन नक्सल उस सोच का सीधा सीधा प्रगटीकरण है। और इसलिए मैनिफेस्टो आने के 10 दिन तक बाद भी ये जो जमात आए दिन लिखा-पट्टी करती है ना, वो चुप रही, उनके प्रोटेक्शन में चुप रही है। तब मिलके मेरी जिम्मेवारी बन जाती है कि देश को जगाना कि भाई देखिए आपको लूटने की ये तरकीब हो रही है। और दूसरा पार्ट है, डॉक्टर मनमोहन सिंह जी वगैरह उन्होंने हर बार कहा है कि भाई जो भी संपत्ति होगी इस पर पहला अधिकार किसका होगा। तो हिसाब किताब बहुत साफ है, वो क्या करना चाहते हैं।
मोदी जी, अगर एक सवाल मैं ये समझना चाहूँ कि ये जो तीसरा टर्म होगा आपका, वो पहले दूसरे से अलग कैसे होगा?
पहला कार्यकाल मेरा कैसा गया, तो मैं सामान्य मानवी की जो ज़रूरतें थी उनको मैं एड्रेस करना चाहता था। अब मुझे देश को तीसरी आर्थिक महाशक्ति बनाना है। लेकिन ये जब मैं 11 से 5 पे लाया, उसी की कंटिन्यूटी है जी। ये मैं 5 वर्ष और निकम्मा और 3 वाला अच्छा, ऐसा नहीं हो सकता जी। तो पहले मनमोहन सिंह के समय पर 11 तक थे, हम जोर लगा करके 5 पर ले आए, अब जोर लगा करके 3 पर ले जाएंगे। तो हम हर चीज में कंटिन्यूटी करना चाहते हैं। अब जैसे बिजली, हमने बिजली पहुंचाने का बड़ा अभियान चलाया, बिजली पहुंचा दी। अब मेरा लक्ष्य है पीएम सूर्यघर योजना और 0 बिजली बिल।
Good morning, hello and welcome. It is 11 a.m. and you're with us on Trading Hour. I'm Surabhi Upadhyay. With me as always is Reema Tendulkar, and what we've got is a very, very range-bound market where the range on the Nifty is barely 150 points, and right now we're closer to the the upper end of that range. One could perhaps say right in the middle thereabouts. But trends are very hard to come by. I mean, that's been sort of a facet of today's trading action so far. There are a couple of metal and material stocks that are doing reasonably better off. Power seems to be a theme that's trying to build today. If you look at some of the gainers, for instance, on the Nifty, that'll illustrate the point. So you've got a Coal India, you've got an NTPC, you've got a Power Grid, there's a Tata Steel. So these are some of the stocks that are doing well. That's the contribution chart that's coming up there for you. But you can see even on the dragging side today, the banks are not performing, the larger banks, and therefore you've got those cuts coming in on the likes of HDFC as well as ICICI Bank. And a couple of others like TCS, heavyweights like TCS are lower. Some of the two-wheeler stocks, they are cooling off today, Eicher Motors and Bajaj Auto. So it's really, basically, it's a muddle, it's very range-bound, it's all over the place. Cipla deserves a mention. Cipla has had a very interesting week so far. First, very negative reaction to earnings, some recovery yesterday, and good follow-through buying today as well. So Cipla is one of the smartest stocks on the Nifty actually so far this week. That's the trend. Otherwise, mid-cap index showing a better gain than the Nifty. Reema, hi. I guess it's a little all over the place, at least for the large caps today.
Well, but the action is in the broader markets, right? The mid-cap index, the small-cap index, all showing you gains of close to about 3/4 of a percentage point. Very strong advance decline ratio too. That's up close to about 5 stocks advancing for 2 in the red. But let's straight away get to a corporate conversation. Orion Pro Solutions reported their Q4 numbers. The company's posted a 30% jump in revenue and a 30% jump in EBITDA too. EBITDA margins have come in at 21.3%. The company says they expect the growth momentum to continue into FY25, and they're guiding for a 30 to 35% revenue growth next year. Ashish Rai, the CEO of Orion Pro Solutions, is here with us to take a few questions. Mr. Rai, morning. This is Reema here. First, FY24, you've ended with a growth of 35% at the upper end of your own guided band of 30 to 35%. What makes you confident you will be able to achieve a similar 30 to 35% growth in FY25? Give me 3 reasons, because the guidance that we've heard from some of the larger IT services company seem to suggest that they're still very cautious about the macro environment. So 3 reasons why you will be able to achieve a 30 to 35% top line growth in FY25.
Yeah, good morning, Reema. Thank you for having me. Look, I think, so we don't do IT services, so I won't comment on that, right? I mean, we do pure tech. We do deep tech, we build products based on hard R&D, and we are out to build out a global IP-led products and platforms player that can play in the segments we choose on a global basis. So really, I mean, I can't comment to the IT services demand, but we see an unprecedented demand environment for our offerings, both on the banking side as well as on the technology innovation group, right? So this one, I think demand environment is just exceptionally strong across most of our markets. The pipeline and the order book is at record levels right now, so we feel very good. We've now been growing 30% plus for 3 consecutive years, right? So since we pivoted away from services into building out a products and platforms player almost 4 years back, last 3 years we've grown at 30% plus. We feel good about continuing the growth trajectory. In fact, we listed back in 2005. For the last 19 years, we've grown at 30%, right? So it's not really, if you look at the CAGR, I think we feel very good about where we are. We feel very good about demand, pipeline, execution. So yeah, I think we feel we'll deliver.
Okay. So one significant thing next year is going to be the cash deployment, because you recently raised money via the QIP and the preferential issue, and you've got some marquee investors on board too. So what's the cash balance, and what are you planning to do with the cash book, the cash balance that you have?
Yeah, so look, I think we published the balance sheet at the end of the, so for 31st March, but of course the QIP happened after that, and we raised a further 270 crores, right? So I think we ended 31st March with a balance in the range of, I think, 250, 270 crores, and then the QIP 270 sort of adds to it. We are obviously, we've done almost 3 acquisitions in the last 6 months. So we've been deploying cash in M&A, which is quite clear. We recently, after the year closed, we deployed cash in the Arya.ai acquisition that we talked about. And I think going further, some of the capital will go into organic growth because we've been growing at a tearing pace. So there is a lot of organic growth capital to be put into the business, but a fair amount will also continue to go into M&A.
Also just take us through the margin levers at play, along with, of course, the cost side of things, because you've ended the year, annual basis, margins are just under the 22% mark. As we roll forward in this year, do you see levers at your disposal where perhaps you can breach the limit of 22% as well, EBITDA margin?
Yeah, so Surabhi, the nature of the software business is such that with scale, the economics does improve, right? So which we've been saying, but what we also been doing is most of the R&D that we've been doing, we've been expensing out, we don't capitalize it. So the communication we've had with investors for the last 3 years, pretty much, most of my earnings call, I say the same thing. We will try to keep the EBITDA at about 22% levels, between 20 and 22, and we'll pour the excess back into R&D because, the size of opportunity in front of us is so large that we will really not be doing the Aurionpro shareholder justice if we do not keep on upping the R&D spend every year. So we will, up it to almost 100 crores plus this year. Right, so that's sort of the play on R&D. The EBITDA, actually, if you look at it, we also had an ESOP cost for the first time hitting us last year, and that's probably of the order of about 1.2% or 1.3%, right? So if we did not have that, that's not a cash expense, of course, but obviously it hits the P&L. Otherwise, the EBITDA would probably have been 23 plus.
So continued investments in R&D. Therefore, your guidance, you're going to stick to the upper cap of 22% as of now. Okay, got that. Just take us through some of the fundraising plans as well. Rima was earlier telling us that the preference issue plus the QIP, I think the total comes to about 570 odd crores. So what are your plans with the money? Would you be needing to raise any more in this year?
Yeah, so we don't look, as a business, we don't really need capital to keep growing organically the way we are going. I think we spin off enough excess capital to invest back into the enterprise. So we were trying to create a global player which can, our stated vision 2030 is to be a top 3 player globally in each of our spaces. That is a very, very large goal to go after, which means we will find gaps in our strategic blueprint, which means we will sometimes, decide to do an M&A to plug that gap instead of building it ourselves, right? So every single opportunity that we build against every single gap, you have always a buy versus build choice. And sometimes we find like-minded management teams. Sometimes we find, the right kind of assets available at the right valuation. And then we do that M&A. So I think we'll continue to do that to continue to grow at our pace. I think we probably added 35-40% staff over the last 12-14 months. Right, so that also needs a lot more, capital going into the fixed assets.
Ashish, sorry, since you brought up M&A and you're still open to, more strategic opportunities, A, is there anything on the table right now? And B, when we just discussed the top line growth trends, the 30-35% growth that you're talking about, that's purely inorganic, right? That's not taking into account any of these strategic options that you're also exploring?
Yeah. So I think the 30-odd% we will continue to grow organically. I think the order book is strong enough and the pipeline is strong enough. The only thing we need to do is continue to scale the delivery capacity to be able to do that, and that needs some investments into the enterprise, right? So we don't need to do M&A to continue to grow at that level, but just to speed the time to market in terms of the products we want out, in terms of what the market needs. For example, the whole AI. Enterprise AI play that we are building out, we will find opportunity to do some meaningful M&A, and we always have a pipeline of potential targets. But we have zero FOMO when it comes to deal making. It only when it really makes sense for the Aurionpro shareholder, and it really.
So Ashish, if there is no pressing need to do an M&A right now, why is it that you've raised so much money then?
So because there is opportunity, right? Rima, I think the idea is not whether you need the capital to continue to grow organically. I think the idea is how do you capitalize on the really large opportunity in front of you, right? So whether it is in lending, whether it is in transaction banking, we've built out tier 1 assets which can really go and play globally, right? And then, so the idea is not can you keep on growing at 30%. So the
no, got that, but.
Yeah.
So is it possible that you will do an acquisition to capture the large opportunity in front of you in FY25? Is that likely?
Certainly possible, both from a product standpoint as well as from a market access standpoint, because we're very serious about being in US and Europe, right? So it's always possible that we find the right opportunity.
Okay, Ashish, thank you very much for that. We had more questions for you, but for now, we're going to take that the company is confident about growing at 30 to 35% over the medium term, not just in FY25. They've been holding on to this growth rate for the last many years, and that's going to continue. And margins too will stick closer to 20 to 22%.
Okay, let's take that quick break. We'll come back on the other side, and a lot of buzzing stocks today, lots of reactions to earnings as well. We'll discuss all of it in just a bit.
और मैं हर घर पर सोलार सिस्टम लगे, और मैं सिर्फ बिजली का बिल 0 चाहता हूँ, इतना ही, मैं 3 चीज़ें चाहता हूँ। एक, हर परिवार का बिजली का बिल 0 हो। दूसरा, अतिरिक्त बिजली जो हो वो बेचे, कमाई करे। तीसरा, जमाना इलेक्ट्रिक व्हीकल का आएगा। मुझे आत्मनिर्भर होना है एनर्जी के सेक्टर में, और इसलिए मैं चाहूँगा जिसके पास भी स्कूटी हो, मोटर हो, जो भी हो, उसका चार्जिंग अपने घर में ही हो जाए और सोलार से हो जाए। मतलब आज उसका जो ट्रांसपोर्टेशन का महीने का 1000-2000 रुपया खर्चा आता है वो भी 0 हो जाए। ये त्रिविध बेनिफिट नागरिक को और देश को, पर्यावरण का बेनिफिट, देश को आज पेट्रोलियम इंपोर्ट करने का जो अरबों डॉलर जा रहे हैं बाहर, वो बंद हो जाएगा। तो मल्टीपल बेनिफिट वाला योजना। अब जैसे स्टार्टअप हब, मैन्युफैक्चरिंग हब बनाना है, मुझे इनोवेशन हब बनाना है, यानी मैं एक बिल्कुल नए एरिया पर देश को ले जाना चाहता हूँ, और बड़े कॉन्फिडेंस का, और विजन मेरा क्लियर है, मुझे कोई दुविधा नहीं, मेरे पास तय है। नेक्स्ट 100 डेज में, 4 जून के बाद 100 डेज में मुझे क्या काम करना है अभी से मेरे पास क्लियर है। 5 साल में क्या करना है क्लियर है। 2047 में विकसित भारत बने क्लियर है। इसलिए मैं कहता हूँ 24/7 फॉर 2047, ये मेरा मिजाज है।
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Welcome back. Even as the frontline indices continue to trade sideways, lots of individual stocks are on the move. So first up, let's get in our colleagues in and talk about Siemens. They've reported a good set of earnings. Vamakshi joins in with the details. Vamakshi.
Well, absolutely. A beat across the board is what Siemens has reported this time around. Revenue has come in at 5,750 odd crores. This is 4% above our own expectations. And in fact, this growth is largely being led by smart infra, digital industries, mobility, while the energy business also saw an uptick of almost 5%. The margins have also improved significantly for the company. In fact, we were expecting margins somewhere around 12.6%, and the EBITDA margins for the company have actually come in at 15.3%. And in fact, a margin improvement is being witnessed throughout all segments that the company operates in. Net profit has come in at 802 crores as compared to a poll of almost 571 crores. So this is nearly 41% above that what we were expecting. And the profitability improvement, a major chunk of it is being largely driven by volume as well as price effects, as well as the continued productivity measures that have been undertaken by the company. Apart from that, the company also highlighted that the government infra spend appears to be quite robust. robust, and they're beginning to see some green shoots in the private capex side as well. Overall, to capitalize on this opportunity, they've announced total capex of over 1,000 crores in the medium term. Apart from the capex that they announced in November 2023, they've gone ahead and announced an additional capex of 333 crores for smart infra and switchgear expansion in Goa, and 186 crores for setting up train manufacturing facility in Aurangabad. But another kicker has come in from the company. They have decided to go ahead and demerge the energy business into Siemens Energy India, which will be a separately listed entity, and the expected timeline is till calendar year 2025. But what's disappointing this time around in the numbers is the order inflow. New orders have come in at 5,184 crores. This is a downtick of almost 9%. Keeping aside the large locomotive order that the company received in the same quarter previous year, they faced some deferment in some large orders, and they also witnessed some slowdown in ordering of industrial automation products. But let's also look at what a brokerage has to say. Jefferies says that the company in the long term could benefit from sizable power transmission capex. They've gone ahead and given the good set of numbers, they've revised their EPS estimates by almost 2 to 19% for FY25 and 26. They've given a buy rating and raised their target price to 8,000 rupees per share. So overall, a good set of numbers. Jefferies has also given a thumbs up to the company. The stock is in focus, but let's also listen in to what the management had to say.
In terms of ordering, so there are two parts. One is the normal projects and standard business is doing well overall. We are growing overall. Our first half year has been good. If I look at the first half year, we expect to continue to grow healthily for the second half year. The challenge that we have is only the slowdown in one part of our business, which is in the industrial automation part of our business, which is where we expect that there will be a normalization in the demand starting in the October-December quarter. Volumes have gone up, and with the volumes going up, there is definitely an impact, a volume impact appearing in the margins there. In addition to that, there have been cost control measures that the company has gone into, has carried out, as also other productivity measures in our factories and other areas. In addition, we've had some special earnings because of sale of some property and some dividend that we received. So overall, our intent is to continue to grow the margins as we increase our digital component in the business. There will be an increase in margins as we increase the digitalization initiatives that we have launched here in the company.
Okay, market seems happy with everything they've heard from Siemens this quarter. Stock's been holding well, 7% higher. Let's move on to another one where we're getting a positive result reaction, and that's Oberoi Realty, up almost 3-4%. This, of course, on the back of the Q4 print. Let's go across to Sonal and get in the details. Sonal, so is it looking all good?
It's a good set. We did get the operational update earlier, and that looked good on a quarter-on-quarter and on a YOY basis, and that is something that has continued now as well. Let's look at the P&L fast, because they have seen a lot of new project completions that have been accounted for in this quarter. Revenues up 37%, EBITDA up 7%, margins they have declined on a YOY basis, but profits have come higher by 64%. Their total units booked at 227 is an increase on a sequential basis. The booking value at 1764 crore rupees is a big jump on a sequential basis. Even collections are higher at 1077 crore rupees. Additionally, the board members, they have passed an enabling resolution to raise funds via QIP, and fundraise up to 2000 crore rupees is what the board is looking at. So good set coming in from Oberoi.
Okay, thank you very much for that. And finally, Radico Khaitan is also higher post the Q4 numbers. Mangalam joins in with the highlights. Mangalam.
Well, the performance of Radico is quite a descriptor of what's happening in the consumption space, which is the premium products doing extremely well, and that's reflecting in their revenues, EBITDA, as well as the profitability is too. So we have the fourth quarter numbers, a 30% jump in net revenue if you take out the excise expense, and then the EBITDA as a result of which have seen a jump of 55%. That means a margin improvement of nearly 200 basis points as well. The net profit, of course, has increased by about 26.5%. The total volumes of the company have declined by about 1.2%, but that's largely because of the decline that we saw in the popular segments. In fact, the prestige and above segment saw a growth of 14% of the volumes. And that's not all. The revenues for the prestige and above segment increased by 16%. They're at around 503 crores. Not only that, the company is also positive about the outlook of this very segment in the next 1 year as well. They will continue to deliver double-digit volume growth in the premium volume business, in the premium alcohol business in FY25. They're cautiously monitoring the trends in the prices of grain, ENA, alcohol and glass bottles, where volatility still persists, but they will continue to spend about 6 to 8% of their revenue in ads and sales promotion. So confident sounding management, especially when it comes to the premium luxury products that they are seeding, likes of Rampur as well as Jodhpur, Jaisalmer gin and premium whiskies, all of them doing extremely well for Radico Khaitan.
Thank you very much for that. Get into a break. We'll discuss market technicals with Soni Patnaik on the other side. Stay tuned.
Over the last 25 years, CNBCTV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain.
Welcome back. The Adani Group stocks continue to see buying for the third day in a row. Adani Enterprises, Adani Ports have both moved up close to about 1.25%. M&M has been the star this entire week. So M&M's moved to the day's high. And this week, it's seen a rally of close to about 5%. So that's holding up the auto pack. But if you remove M&M, a couple of the others are under pressure. So Eicher Motors, Bajaj Auto, both of them are staring at cuts of close to about 1%. And Apollo Tyres too reported their Q4 numbers yesterday post-market hours. Disappointing set of numbers, a miss on the margins. The company's revenues are absolutely flat on year-on-year basis. So it's underperformed, CAT and MRF. So Apollo Tyres continues to see some amount of, selling pressure today. But let's get to the market technicals then. Soni Patnaik from JM Financial is now with us on the show. Soni, morning and thank you for joining in. Very directionless, still very much range-bound on the Nifty. In the near term, is there a trade and are you sensing a breakout on the index? And what have you made of the broader market outperformance and your stock recommendations?
Good morning, Rima. Thank you for having me on the show. I think Nifty is very much in a sideways range between 22,000 as a good support on the downside. On the higher side, we can see there's a lot of call writing happening at 22,300. So that is definitely a good resistance for the day. I think Nifty can see a short covering only if it's able to take out the resistance of 22,300 in cash level. Only above that, you can see short covering towards 22,600 for the week. I think it'll be very important for today and tomorrow that Nifty trades around the resistance and attempts to break out above the resistance. Then only we can see the short covering coming in. But as of now, it's pretty much a sideways range. Similarly, for Bank Nifty also, if we can see, it's in a very short range of 500 odd points for Bank Nifty between 47,500 to 48,000. It's very tight range. So I think Bank Nifty can see short covering only if it's able to cross above 48,000, 48,100. You can see the short covering towards 48,600, 48,800 for the week. I think it could happen. Today is a weekly expiry for Bank Nifty. It may be the last hour of the volatility that can see Bank Nifty breaking above the short covering range, and just the support that can be needed for Nifty as well. I think it's better to just stick to stock specific approach. And the first stock pick for today would be Wipro. We've seen good support in Wipro around 445 levels. So keeping a stop loss of 445, Wipro can be bought at current levels for a target of 480, 485. The second stock pick would be in Indigo. We're seeing a good breakout in Indigo above 4,200. It's a good option chain breakout in Indigo as well. So keeping a stop loss of 4160, a target of 4340 can be seen in Indigo.
Okay, all right. Got that, Soni. Thank you very much for the trades. Appreciate you joining us today. Well, with that, we do have to slip into another very quick break. We'll come back on the other side and then we'll discuss some of the fundamentals. Devang Mehta of Spark Private Wealth Management will be with us to give us some ideas.
Implementing India's expanding expertise in medicine.
25 years of excellence and unparalleled growth.
CNBC TV18, embarking on a quarter century of excellence.
CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key news makers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18. Now stream.
Welcome back. You're with us on Trading Hour. Now, AI is the most powerful word in our world today. Its transformative potential is perhaps unparalleled. TCS has conducted a comprehensive global survey on the state of AI adoption and its impact on businesses. The study surveyed nearly 1,300 CEOs from 24 different countries. So it's very, very exhaustive and comprehensive. Rima is here with some of the key findings. Very curious to know what they are, Rima.
Thanks so much for that. So as you pointed out, the survey is extremely comprehensive and exhaustive. They've interviewed 1,300 CEOs across various business categories, right? So the question number one is, What was the impact of the transformative potential of this particular AI technology, and how does it compare with the past? Well, 54% of them believe that the impact of AI is greater than or equal than the impact as compared to the internet, while 59% of them believe the impact of this, the potential of AI, is greater than what we've seen in the case of smartphone. Now, that's question number one. The second question that the study asked, and just for the sake of brevity, this the survey is very comprehensive. They talk about various aspects, but we've just drilled it down to 3 particular questions. The second question is on the impact of jobs, and here the opinion is fairly divided. So 49% of them believe that it's not going to have a major impact, while 47% believe that AI is going to result in more jobs being formed, rather than being eliminated. Well, the third question that we asked is the impact on productivity, right? And here, almost 88% of them believe that AI is going to have some impact on productivity. It's just about 12% of them who believe there's not going to be much impact. 40% of them believe that there is going to be an incremental impact on the productivity, but nearly 48%, adding the last 2 columns, we're going to see a dramatic increase in productivity because of AI, right? Either 2x or going up to even 4x. That's the impact that we are seeing. Now, moving on, right? In this age where we are seeing customer spends, enterprise spends getting compressed, if you want to spend on AI, then you need to make a solid use case for it. But measuring the success of AI is very difficult. 72% of them believe we need better KPIs. If you don't have better KPIs to measure the success of AI, then how do you go ahead and convince your boardroom about it? But that's not the only challenge which is facing enterprises when it comes to AI adoption. The survey also went and asked that what are the 3 challenges when it comes to you going ahead and adopting AI? The first one is IT infrastructure. The second one is customer expectation, and the third one is IT service providers. That's about AI. If you bring with itself generative AI, then it brings with itself a whole new gamut of challenges, and top of mind is going to be the ethical and responsible use of AI, and also on the security and the privacy issue. And of course, the other issues are also talent development and lack of IT readiness. So there's no taking away that AI is going to be extremely transformative. And let me end by telling you 2 more statistics that the survey threw up. One is that 86% of the people, that's 8 out of 10 people, have already deployed AI to enhance their revenue, and most of them are using AI to look at new revenue streams, enhancing their top line, rather than just focusing on bringing down the cost aspect of it or improving the productivity. So the focus is more on using AI to grow their business, to innovate and add to the top line. Back to you.
All right, Reema, thank you very much. Very, very interesting there. The AI trend, or rather the AI revolution that is perhaps reshaping the world as we know it today. Well, with that, let's get to that promised conversation on market fundamentals as well. We have Devang Mehta joining in from Spark Private Wealth Management. Devang, thanks very much for joining in. Before we talk markets and the rest of the themes, since Reema was just telling us about this very interesting TCS AI survey, your own thoughts. I mean, we've heard from all the top IT companies, even all the the mid-tier IT companies at the end of the 4th quarter. And most of them, from mid-size to large size, everyone is looking at AI adoption and how they can integrate AI offerings as part of their service offerings. What's your take on IT as we know it? And if you were to buy anything right now, what will be the factors that you consider, and what sort of companies will you look at?
Thanks, Surabhi, for having me on the show. Pleasure, as always, being on CNBC. I think, yes, what we have seen is across IT, we know that there was a slowdown which was imminent in the last couple of years, that spends were not so high. And that's why I think we all went through that gradual slowdown. And now I think increasingly the commentary is becoming a bit encouraging. But yes, to answer your question on what is the future, where probably this IT services company need to go, some of them have already converted a lot of their revenues to even digital revenues, and now going forward, a lot of robotics, a lot of artificial intelligence, ERD is the way to go. So I think IT is into a transformative phase. Gone are the times when only your IT services or IT products would probably give you a greater valuation, or this business was non-competitive at that time, or less competitive is the word which I may use. But now, if you probably want to either take the leading advantage or the leader's advantage, you need to gradually move yourself into such fields as AI, and most of these companies are doing it. So a lot of mid-cap companies, IT companies, just giving certain examples like Tata LXI, L&T Technology Services, all of these companies, though will be a bit volatile in terms of their numbers, but they're already increasingly getting into ERD, AI, or sort of robotics. And I think these are companies which one should look at if they're talking about new age. This company has earnings, this companies grow at a good speed in terms of even their revenues, and they have good clientele also. And I think they are also innovators in a way.
Okay, all right, got that. So that's a take on IT. Devang, let's talk markets overall now. So caught in a bit of a range as the Q4 season gets into its last leg. What do you make of things right now? I mean, the whole pre-election jitters, the fact that the market's been very range-bound. And I mean, we've stalled. There's no other way of putting it. Now, 5 months into 2024, and the great bull run has, has entered into a consolidation phase. Your thoughts?
Honestly, Surbi, it's actually good for the health of the markets if I can dissect, because last 7-8 months, every month we see markets going up generally, and then a correction also starts, and we feel that the market is going through a phase of consolidation or apps or corrections that are due. I think after such a fast and furious rally, there are actually no complaints, because more or less most sectors have come to the fore. The sectors which were not doing well 2, 3, 4 years back, they've just come back with a vengeance. And with earnings, it's not that the sectors are just doing well because it's liquidity in the market, but because earnings have sort of followed the PE expansion. So my sense right now, if I give you on the markets, is that we will probably in the next couple of years, we will have 3 phases in the market. The phase that we are right now is probably we had a good PE expansion for the markets, which was preambled. It sort of pre-rallied in between. Now is a phase where you are seeing earnings growth. I think the last 2-3 years have been good for earnings growth, and I don't see any reason why the next 2-3 years will not be good years for earnings growth. So now markets probably will grow in line with earnings growth. You have to buy companies which are going to grow at say 15, 20, 25% earnings growth, and I think your stocks can probably also compound. And the third phase will be a bit of consolidation correction that will come imminently in between. So there's 2 or 3 phases. One needs to go through all these 3 phases to sort of create wealth. And that's why I think it's not an easy ride from here. But as I said, if you just be in the markets, I think that the returns to be made.
Devang, morning, and thank you for joining in. Capital goods is, continues to throw up a, fair amount of interest, and even the numbers, the order booking has been strong, but the performance largely has been fairly varied. So ABB has been strong, but L&T has missed on margins. So it's all about picking the right stocks. Which one would you recommend?
I think, yes, Rima, I've been on a lot of shows with you, and I think most of this CapEx-oriented themes, we have always sort of been very, very bullish over the last couple of years. So not only CapEx, but a lot of power ancillaries, a lot of such companies which are at the starting point when you do CapEx, right? So we have been bullish on those. So some names which immediately come to mind, which are a lot of portfolio businesses, I'm not recommending them, but which have given fabulous returns, and we are still bullish from here on. Something like a Hitachi Energy, which demerged from ABB, which was called an ABB Power Product, and Hitachi came and acquired the company, and now it's doing fabulously well across the stream of businesses that it operates in. A wonderful EPS growth over the next 4-5 years is estimated for this company, which is virtually market leader in a lot of segments. So Hitachi Energy being one. The second is ABB, of course, you talked about that. Siemens is another company which is a portfolio stock. And then, of course, if we drill down into engineering companies, there are companies like Pitti Engineering in the small cap space. These are companies which we have been sort of bullish, because once you know that there is brownfield projects, there are greenfield projects, there is manufacturing capex, there are warehouses being set up, there is FDI being coming, there is manufacturing revolution. I think all these are companies you shouldn't ideally miss over the next couple of years.
Okay, all right, interesting. Appreciate that view. Devang, good to have you on the show as always, and we look forward to the next conversation. Well, with that, let's quickly take a break. We'll have a lot more for you lined up on the other side of the market. We'll also put the spotlight on the metal space in particular. Prices have been going higher in the international markets, plus there are lots of developments with respect to tariffs with the announcements coming in from the US last night. Rahul Jain will join in with a perspective.
On YouTube. A show that is unmatched,
We tell you stocks to watch out for and which sectors are impacted.
Thought-provoking.
In India, the allocation to equity is about 5 to 10%, which is not beating inflation. So investing aggressively can actually look at even beating inflation.
And will give you maximum value for your money.
It is a good time to look at debt funds as a category. There's no better time than this in that sense to lock in rates for the long term.
A masterclass with India's biggest market experts. Smart money at these times.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBCTV18.com.
Dead, 44 injured and 31 have been discharged from separate hospitals after being treated. This is the final count that has been shared by the NDRF and by the BMC as of now, even as operations continue at Ghatkopar, where a hoarding came down crashing yesterday due to a dust storm and rain, killing over 14 people in the financial capital. The rescue operations go on, the search operations are...
Welcome back. Let's look at metals now. Metal prices have been trading firm, supported by bullish long-term demand. In fact, copper is at a 2-year high, while many of the other commodities are trading at multi-month highs. Manisha gets us up to speed. Manisha.
Well, metals of all category continue to shine bright. April was a stellar month and the month of May seems to be building further onto this. There are concerns about supplies going forward. The long-term demand promises on the higher side, and we have seen mine supply concerns. Inventories have continued to deplete, and markets are looking at the older avenues in sense of demand and the newer ones as well. For example, EVs and AI, data center, and even weapons for that matter. The demand from all sectors seems to be increasing on the higher side. So you have the copper prices which are trading at 2-year highs on LME, but in Shanghai, in US and in India, the copper prices are trading at an all-time highs. We have seen inventories continue to decline. The expectation that you could be looking at a deficit in case of copper supplies going forward in 25 and 26 is what markets are baking in right now in sense of prices. Not just copper, you have lead which is trading at a 24 weeks high. Zinc is trading at a 13-month highs. Tin prices are trading at a 2-year highs as well. We also have seen a smart up move come in for the iron ore prices. So when you look at the prices in the last 1 month, we have seen the best performance come in from copper, which has gained up by 17%, a 10% jump up in case of iron ore, and a 6 to 9% of gains is what we've seen in last 1 month for metals like zinc and nickel and lead. The only metal which hasn't performed in the last 1 week or last 1 month has been aluminum. The prices here are down by a quarter of a percent, and that is because you have seen inventories in aluminum continue to gain. The aluminum production in China is at record highs. So barring aluminum, almost everything else seems to be trading at a multi-month and a multi-year highs right now. All right. Thank you very much for that, Manisha. Appreciate that roundup. So metals, commodities and specifically metals definitely having a good year so far. Well, now what to do from a stock perspective? That's the question that we are discussing with the independent metal analyst Rahul Jain. Rahul, appreciate you being with us on the show. So, we were just hearing all the fundamentals from the global market side with our colleague Manisha over there. But stocks have also run, right? I mean, it's been a very good rally for most. The metal index this year is up about 17%, one of the better performing indices. So the question is, what is still left on the table? You give us your sense, ferrous, non-ferrous. where would you still bet for the rest of this year?
So, see, the commodity underlying demand strength is quite good. We've seen a lot of investments, particularly with respect to transition for the carbon emission transition and then EVs and all those things. So that's been the major overall macro driver. Coming to say India, so thing is that a lot of the stocks were very, very underpriced up till a while back, and there is repricing definitely happening. So if you start with non-ferrous, so Vedanta has been at the forefront in terms of adding capacities. They've been very low cost. Obviously, they've had a lot of balance sheet issues, which gradually can get resolved if these kind of prices sustain for even a 6 months to a 1 year period. We're going to see massive earnings upgrades coming there, especially because if you start, repricing, putting in current commodity prices, plus you added the currency weakness. And also another major thrust that is happening is that a lot of raw material integration is increasing. They're adding new bauxite mines, new coal mines. So you can see a significant earnings upgrade coming in here, and similarly, it also holds true partially for Hindalco. In case of Hindalco, they're adding, they're getting their Novelis business listed. We're hearing very big valuation numbers of around 18 billion and things like that. So if you just try to do SOP valuation, you could see 50% kind of upside just based on if the Indian market also starts valuing Novelis with not much of a holdco discount. So there is a lot of earnings upgrade. That's the reason why these stocks are moving higher, and I think there is a lot of more upside coming in from here as well. If you move to the smaller names now, for example, for iron ore, which I think has seen a 10% rally, so Indian Steel is going to add a lot of capacity over the next 2030. We have a target of like 300 million tons, and so we need a lot more iron ore than what we're already doing. The major players in that would be NMDC. There's also Godavari Power, which is adding a lot of capacity. Then there is Lloyd Metals, which is also has very big plans to add iron ore capacity. But thing is that they can easily get constrained. So obviously, market is started giving much better valuation now because the cash flows have been very robust, and Indian iron ore is at a huge discount to the Chinese, iron ore landed prices. They're at about $130 kind of. We are you X mine prices are about 6,000 rupees. So the huge gap which is there, and definitely is kind of so there is a lot of investment going to happen. And see the economic stage that India is in when we talk of GDP going up so many trillions and things like that, it's metals which is going to see the maximum demand growth in the initial phases. So long as our per capita does not reach $6,000, the growth in metals will be much higher than the growth for services and things like that. So I think
so Rahul, if you had to
stocks, yeah.
So just if you had to recommend two stocks where the upside is the most, which ones?
No, you can see that the mispricing and plus the commodity basket for Vedanta is fabulous. They have a zinc exposure, they have iron ore, they have steel, they have crude oil, they have aluminium, which is actually the largest in the country. So Vedanta, I think, would offer significant. But case of Hindalco is more of a repricing for the Novelis asset. Although there was setback when they increased the capex budget for Novelis, but I think that will be taken in a stride because the valuation what they seem to command of their significant. And in case of ferrous, obviously the larger ones are much better. So over here, say JSW has always been slightly expensive. So although they have a very robust pipeline, but I think they're slightly traded at a premium. And in case of Tata Steel, they've had these issues in Novelis, in Chorus, but that's getting resolved gradually. So that is also a player. But I think in steel, the smaller players are looking far more interested. For example, like a Godavari, which I mentioned earlier, which is not exactly a pure steel play, but is more of a plus steel play.
Okay. So you like Vedanta, you like Hindalco, and perhaps Godavari Power and Ispat in the smaller players, right? So quick word on Vedanta. They're raising money. There is a board meet tomorrow scheduled to raise some money via rights, FPO, equity. How much do you think they will raise? What's the market expecting, and what would be the utilization?
So I don't really have a number on that, but see, obviously the key issue is the debt on the Vedanta balance sheet and the parent balance sheet. And the faster they get it lower, say, I think once you drop below a number of, I think currently it's about 6 billion. If they get below 3 or 4 billion, nobody will even talk about it. Then we can see a quantum jump in the repricing of the domestic stock, because that's a big overhang which is there. And once that gets out of the way, we can see the stock trading at fair value, which is significantly higher from here. And also there is a caveat that the current commodity prices hold for some time, which seems to be likely because we've seen the kind of move after some time. So these kind of don't fizzle away so easily. And like I said, also there's a lot of raw material integrations is going on. So that will also lend support to the earning growth that we are expecting.
Okay, all right. Rahul, we'll leave it on that note. Thank you for joining in and giving us your views on a lot of these metal stocks. Well, we do have to take a break on that note, but on the other side, we'll come back with a couple of interesting updates from the market, including, of course, the MSCI revisions. Before we take the break, as India enters the last lap of elections, Network 18 travels to the heartland of the Hindi belt of Uttar Pradesh with a group of business leaders, investors and ambassadors to get a glimpse of democracy in full swing. Among the 14 key constituencies in Uttar Pradesh, which will go to polls next week, on the 20th of May, include Lucknow, Amethi, Raebareli, Jhansi, Barabanki, Faizabad. We hit the road to meet leaders like Rajnath Singh, Smriti Irani, Ashok Gehlot and several others.
Is what NDRF officials has said, even though operations with respect to clearing of debris do continue. Now remember, for the search operations, the NDRF went from one end of the petrol pump to another end. Till now, 14 persons have been found to be dead. As of now, in the search operations, no fresh count was found by the NDRF team. So operations continue even as an audit has been ordered by the Maharashtra government for hoardings across the island city. There are orders to pull down illegal and dangerous hoardings across the city as well. Right here where this massive 120 by 120 square feet hoarding was present, next to it there are several big hoardings that are present which are again not adhering to the norms of the BMC, which says only a 40 by 40 square feet hoarding should be there. So all those large hoardings are what the BMC plans to pull down now. So 14 lives lost, 44 still being treated in different hospitals and 31 persons have been discharged. This is the situation on ground zero at Ghatkopar.
It turned out to be a hoarding that broke records. The 17,040 square feet hoarding installed in Mumbai's Ghatkopar was mentioned in the Limca Book of Records as the largest hoarding. 14 other people found a mention on Monday evening courtesy of that hoarding. A mention in the list of the deceased. Blame games have begun, as is the case in most such tragedies. Additional Commissioner of the civic body told CNBCTV18 that the Bombay High Court had made it clear that the hoarding was not the BMC's business and it was on the GRP land. However, with the tragedy having taken place now, they can intervene as it becomes their jurisdiction. Now, this isn't the first such rain-related tragedy in Mumbai. A wall collapse in Chembur 3 years ago in 2021 left 17 people dead, while another such incident in Vikhroli left 7 people dead. The Gokhale Bridge in Andheri has been the subject of many a meme due to its forever under construction status. That bridge collapsed in 2018, that killed 2 people, and after multiple delays is finally operational, but only partially and also only for light vehicles. Another heartbreaking tragedy took place.
Welcome back. Here with us on Trading Hour. Well, MSCI has announced a list of additions and deletions as part of its May index review. Vivek is here. Some stocks gaining as they gain entry into these indices, and some are on the red side. Vivek, fill us in with the details.
Well, that's right. So early today, or very late last night, if you could call it, MSCI released a list of stocks that have been added as well as deleted. Now, the index that we are discussing first is the MSCI Global Standard Index. As far as India is concerned, it's named as the MSCI India Index. So now, after this particular review of the MSCI, India's weightage as far as the MSCI Emerging Market Pack now moves up to 18.8%, which is its highest ever. So on May 31st, when these adjustments come into place, India will see inflows of close to $2 billion, a sizable figure by any stretch. Now, talking about which are the stocks that have made the cut this time around, remember, a lot of these stocks, have already been penciled in by quant analysts well in advance. So the street already knew them, and a lot of positioning had already been done in advance for most of these names, especially the stocks that are present as far as the futures and options segment is concerned. A lot of reaction today that you're seeing is also the cash market, where positioning was relatively lighter. So which are the stocks? 13 additions, 3 deletions from the MSCI India Index. Bosch, Canara Bank, Industar, Jindal Stainless. These are the stocks that have made it. JSW Energy today a large move, cooled off a little bit from the day's high. Mankind Pharma, NHPC, PB Fintech, Phoenix Mills, Solar Industries, Sundaram Finance, Thermax, again a very large mover in today's trade on the back of the inclusion, and Torrent Power. These are the stocks that have made the list this time around, largely along expected lines, something that we had highlighted yesterday as well. On the other hand, which are the stocks that have been deleted from the index on the back of weak price movement in the couple of months preceding to the entry? The ones that have been removed are Berger Paints, Indraprastha Gas, as well as Paytm. So all these 3 stocks will be removed from the index on May 31st. Now coming to the MSCI Small Cap Index, 28 additions and 14 deletions and what you are seeing. And like we had highlighted, HDFC Bank, MSCI has kept mum on HDFC Bank weightage increase, given the fact that it narrowly missed the weight increase event on the back of having foreign headroom less than 5 basis points. So HDFC Bank continues to remain on shareholders' mind for this particular event.
HDFC Bank continues to sulk, down 1.25%, and Thermax is the big winner with the MSCI weight increase up 9%. But getting on to the primary market action, the 2,615 crore initial public offering of Go Digit has opened for subscription today. Yash joins in with the details on this new debutant. Yash.
Well, Rima, after New India Assurance and ICICI Lombard, Go Digit General Insurance is all set to become the 3rd company to get listed on the exchanges. The issue opens today, closes on May 18. The price band is between 258 to 272 rupees per share. As far as the fresh issue is concerned, the size of that is about 1,125 crore rupees. As far as the offer for sale part is concerned, the size of that is about 1,490 crore rupees. The total issue size coming to about 2,615 crore rupees. As far as the selling shareholders concerned, about 99.98% is being sold by the promoter entity itself, that is Go Digit Infoworks. As far as the object is concerned, the entire amount raised through fresh issue, that is 1,125 crore rupees, going towards enhancing the solvency margin for Go Digit General Insurance. So a quick look at the financials. These are as of 9 months FY24, gross written premium up 26%, net earned premium up 36%, operating loss was down 82% at 10 crore rupees, net profit of 129 crore rupees. Combined ratio is at 108.7. Number of customers added were up 22% and policy issued were up 10%. When one compares Go Digit General Insurance to ICICI Lombard and New India Assurance, it's a much smaller company. Total income of ICICI Lombard is 2.5 times and New India is 5 times bigger than Go Digit. ICICI Lombard issued 3 times and New India Assurance issued 3.5 times more policies than Go Digit. ICICI Lombard's gross weighted premium is up 3 times. New India is up 5 times as compared to Go Digit. As far as 2 important parameters are concerned, operating profit and combined ratio, Go Digit is standing with an operating loss of 10 crore rupees. ICICI Lombard has an operating profit of 1,344 crore rupees. Combined ratio itself, Go Digit has 108.7. ICICI Lombard is much better at 103.7. But the valuations, Go Digit seems to be coming at a higher valuation to the market. The valuation which Go Digit is seeking at the upper end of the price band is 9.7 times price to book value. ICICI Lombard is about 7.95 times price to book value. New India Assurance much lower at about 1.4 times price to book value. Key 5 risks, if I have to point out, one is operating underwriting loss for the company may continue because investments could remain elevated. The second one, the expenses of management guidelines from IRDAI could put some constraints on spending from Go Digit. Third one, dependence on brokers for distribution of insurance policies. Fourth one, the geographical concentration. About 55% of the revenue comes from Maharashtra, Karnataka and Delhi. Any catastrophe incident in these states could pose a problem for the company. And the fifth one, dependence on motor portfolio. About 60% of the revenue comes from motor. Any problems in that particular portfolio, either from the pricing point of view or the regulatory point of view, could create problems for the company going forward.
Got that. Yash, this is really interesting. There also, I mean, I guess health is also a reasonably big segment for Go Digit, right?
So health, if I have to say, it's a much smaller segment, just about 14%. If you look at the entire general insurance industry, the split between motor and health is 40-30. For Go Digit, it's much lower at just about 13-14%.
Got that. Very important and very interesting details you've put up over there. That combined ratio, that's kind of a, maybe a red flag for some, and that operating loss. But well, it's got star power, and we know whom we're referring to over here, right? With Virat Kohli having a personal interest in the company as well. Let's see how the market reacts to this one. Very interesting analysis. Thank you very much for it. With that, it's a wrap on this edition of Trading Hours. So Rima, I, and the entire team, we take your leave, but don't go anywhere. Stay tuned. Halftime report will take the action forward.
When at least 23 people were killed and another 39 were injured in the stampede that took place on the erstwhile Elphinstone railway station, now known as Prabhadevi. The army sprung into action soon after, building a new bridge just in a few months post that tragedy. A wall also collapsed in Malad in 2019, which resulted in the death of 22 people. Yet again, compensation was announced, and we never heard about that incident again. Lastly, Dr. Deepak Amrapurkar, one of the city's top gastroenterologists, lost his life after he fell into an open manhole just a month before that tragic Elphinstone stampede. Now, such incidents are still reported almost every monsoon in the maximum city. The tragedy took place yesterday, is business as usual in Mumbai today. Most of these incidents were never heard of. A few days of outrage. It will not come as a surprise that if this too heads in a similar direction.
आप लबरेज हैं कॉन्फिडेंस से, मतलब आपको नर्वसनेस जरा भी नहीं है।
पहली बात है, शायद वो मेरी डिक्शनरी में शब्द नहीं है
नर्वसनेस।
दूसरा, मैंने जीवन तपस्या की है जी। मेरा पल पल मैंने खपाया है, देशवासियों के लिए खपाया है, अपने लिए नहीं खपाया है। और मैंने इनके लिए इसलिए खपाया कि मुझे मालूम है कि ये बहुत ही डिजर्विंग लोग हैं। इनके साथ 70 साल तक अन्याय हुआ है, और जब उनके आंसू कोई पहुंचता है, उनके टॉयलेट की कोई चिंता करता है, वो भूल नहीं सकता है। कोरोना का कठिन काल, चूल्हा बुझने नहीं दिया था, बच्चों को भूखा सोने नहीं दिया था। क्यों? एक सरकार थी जिसने कहा था अनाज के भंडार पड़े हैं लेकिन हम दे नहीं सकते हैं। एक ये सरकार है जिसका संकल्प है किसी का घर का चूल्हा मैं बुझने नहीं दूंगा।
ये जो इमोशनल साइड है आपका, 15 साल से ज्यादा वक्त गुजरात में, 10 साल यहाँ केंद्र में, एक बहुत ही कड़े प्रशासक के तौर पर आपकी एक इमेज जो है निकल कर आई है। लेकिन हाल के दिनों में ये दिख रहा है कि आपका एक कोमल मन है जो रह रहकर बाहर आ जाता है। आप बहुत इमोशनल आदमी है लेकिन उसे दुनिया से छुपाते हैं।
ऐसा है कि अब टीवी का जमाना है तो लोगों को पता चल जाता है। ये कोई बाद में आई हुई चीजें नहीं होती हैं, जन्मजात होती हैं। और वो शायद मेरी स्ट्रेंथ भी है, दुनिया के नजरों में वो वीकनेस भी है, और विरोधियों के लिए ताना मारने का एक अवसर भी है। लेकिन मैं
Stocks open firm but pull back even as the market breadth remains positive. Utilities, industrials and realty are the big gainers. Autos, financials and FMCG are the draggers.
Bharti Airtel reports a mostly in-line quarter, but subscriber addition surprised, while Shree Cement manages better than expected realization but guides for a more moderate 8 to 10% growth in FY25.
Siemens shares jump after it beats street estimates on almost all counts. The company also lines up for a capex of about 1,000 crores and says it will demerge its energy vertical into a separate listed entity.
Thermax and PB Fintech are among stocks that react positively to their inclusion in MSCI's Global Standard Index following the quarterly review, but most F&O stocks see muted moves due to prior positioning.
Metals shrug off the imposition of higher tariffs on Chinese imports. Copper holds near 2-year highs on tight supply in the face of rising demand.
Hello and welcome to Halftime Report on CNBC TV18. I'm Ekta Batra. With me is Manglam Malu. Well, it is a bit of a down day for us. We have the mid-cap index, however, which is doing better at this point in time, so up around 0.8%. Well, nonetheless, we will be focusing a lot in terms of the US data, which comes out. So it is the US CPI data. We had the US PPI data, which was out yesterday, but now we have the US CPI data. All eyes will be on that on this Wednesday. It is estimated that it's probably going to come in at around 3.4% for the month of April, and that should probably see a little bit of a softness as compared to the month of March. So 0.3% on a month-on-month basis as compared to around 0.4% in the month of March. That's the month-on-month momentum. Let's see whether that comes through. The Fed meets on the 11th of June, so maybe that'll be a precursor to that. But nonetheless, for us, it's all about elections, what's happening with the India VIX, and earnings.
Absolutely. Hi, Ekta. We'll watch out for all that. Market's in that band right now where, both upside and downside risks are limited, which explains why we're, moving around with high volatile environment, facing some, seeking some more clarity before it seeks a lot more direction on either side. But now as we speak, it's all about a lot of these individual stocks. The good part is more stocks are advancing than declining. And as we speak, at the bottom of your screen, some flashes coming in from the conference call of Colgate, which started at 10:30 this morning, just about ending. So the important highlights of the con call are: one, pricing growth will be lower in FY25. In the fourth quarter itself, price-led growth was around mid-single digits. That's what analysts are expecting. And instead, the growth will be led by volumes and premiumization in FY25. That's pretty positive in terms of the outlook coming in. But more importantly, the company said that they will focus on a couple of factors. One, margins may not see a bigger improvement from current levels, and that's not something that the street was expecting anyway, largely because, the company's reported a record high margin in the fourth quarter. The margins are closer to 35, 36%, and that's higher than any other FMCG company in the country right now. So the street would like the company to actually scale back a little on margins and go ahead and increase volumes and premiumization. That's exactly what the company has been doing. Apart from that, they will have an increased focus on personal care, the parent portfolio brands that they will bring into India, and Palmolive as well. They have had a slew of new launches in the Palmolive portfolio, and that's a portfolio that's growing twice as fast as the overall industry. So there has been some disappointment right now because the street is looking at no further improvement in margins as a negative. But my sense is that this should be considered positive, given that a lot of people quibble about, FMCG companies making a lot more margin and compromising top line growth for that. If at 35% you don't see further upside, it's absolutely fine. Just scale back some of those margins, spend it back on advertising and prop up the top line, because that's perhaps the need of the hour.
Okay, all right. Yes, so we'll keep getting you details from the Colgate conference call highlights. As you can see, the stock is under pressure. As Manglam mentioned, it was because of that margin guidance. But nonetheless, we'll get you more details as we get more details from the conference call itself. But as of now, let's focus on Man Infra. Sequentially, their bookings and collections have surged, but for the full year, both have declined. Margins also contracted on a year-on-year basis. The company's raised around 543 crores via a preferential issue. Manan Shah, who's the MD of Man Infra, now joins in to discuss more on their Q4 numbers. Manan, hi, welcome to the show. Well, overall, just wanted to start with your residential sales and collections, which are lower on a year-on-year basis. What explains this, and what is the targeted sales and collections for the entire fiscal that you ended the year with?
So basically, FY24 has been a year of acquisition for us. We had launched mainly two of our projects, which was Aradhya Avan, which is at Tardev, and Aradhya One Park in the last quarter of the last financial year. And the rest of the projects, realization had already gained momentum in the past quarters. That was the result. You saw a dip in the revenue. But if you've seen the overall contribution of the profitability, the profits have been shot up. We've crossed 300 crores of PAT this year, in fact. And what is the upcoming future looking like is we've acquired a lot of new projects which are going to be launched in the next coming quarters of next 3 to 4 months. So there are more than 4 projects which are due for launches, and that realization will soon start gaining in. And at the same time, if you see the business modality of our company has got mixed of redevelopment also, and we've taken a lot of DM partnership projects where the revenue does not come into our books. The straight profitability hits in. So that will also soon start getting realized because the project is just being launched, and few more DM projects are due in the pipeline in the next 6 months, which we would be launching.
All right, that's interesting because you did speak about Aradhya Avan and the project near Marine Lines. I'm looking at all your upcoming projects. That's Aradhya Avan, Aradhya One Park. There's a project at Goregaon West, the one near Marine Lines, the residential towers that you have. Together, they have a potential of roughly 10,000 crores going as per what you've told the exchanges. What is your launch pipeline apart from this looking like for FY25, and what's the potential revenue pipeline from all of this?
So next year, which is till March 2025, we anticipate to launch around 1 million square feet, which would contribute to around 4,000 crores of approximate sales potential. And on a year-on-year basis, the targeted pipeline should be nearly 1 million square feet of carpet area, which we are anticipating. And we've also even secured these kind of projects. So like the one which you're talking about, Marine Lines, the Marine Lines, we are done with the entire design phase. The approvals has been put up, and I think we are expecting in next 2 to 3 months time we should be ready to go and start the basic work at site. The sales will still take time because we would be launching it in a particular fashion. So I think Diwali would be the most feasible time, which is a year of launches for all the developers. So that's when we anticipate to launch that one. One Park is already launched. We've got great numbers on that project, where 300 plus crores of sales has already happened as of March 24, and we've clocked a lot more post that as well.
Your One Park is located where, just to get a sense?
It's at Ghatkopar East.
Okay, so when you're saying that the inventory sale has been good, or the sales have been good for that particular project, I think 300 crores is what you mentioned. What is this total sales potential, and are you seeing any sort of movement in terms of prices when you are selling these projects?
So the total potential is approximately nearly 1,200 crores, where I think by next year we should be clocking more than 600 crores of the total sales. The momentum is very, very strong. And yes, the pricing, see, it depends on apartment to apartment. A lot of these larger apartments, which is currently the trend of the market, are selling at a much higher price compared to the smaller units. So it depends absolutely on each apartment, the pricing ranges.
No, on an average, has pricing risen?
The pricing for us, because it's a gated community project, we are gaining much better prices compared to the competition, which are standalone buildings. So yes, the pricing for us has gained.
Right. You did speak about the redevelopment potential here, and speaking about around 4,000 crores of projects in redevelopment itself. The margins in redevelopment, are they better than regular? One presumes, because a lot of the stuff is done already.
So in redevelopment, what basically happens is the capex drastically reduces, and any money which is being put into the project goes in starting of the project. Usually what happens is, in a typical case, when a developer starts buying the landowner takes the money completely out of the project. So you need furthermore capital to be infused to start the project, which is permissions, for sales, for marketing, for admin related costs, etc. For us, margins are definitely good. We work on a 25% approximate net margin basis, under which we do not intend to take main projects unless and until there's an absolute security on the location, which is the top of the line in Mumbai. But nearly we've been able to secure at least 25% margins in all of our projects. It may be from a redevelopment, or certain places where we are even doing partnership models. There the margins are even further higher, because all the cost has been borne by the landowner, and we share a revenue on the top line basis.
Okay. The US, you have residential projects in Miami. Can you give us a sense in terms of how they are doing, and what is the further plan for the US? Are you making money there? If so, what are your margins and profitability?
So US, we've currently secured 3 projects, out of which one project is already completed, which was a villa project. We had constructed 2 villas, out of which one is in fact already sold. The second is almost on the verge to get contracted over there. So this project, yes, the margins are really good. Like, we are working on at least a 45% margin on that particular project. And the other 2 projects, we've just secured the land for that project. The due diligence is completed. Now the planning phase is going on. The launch should be anticipated to be start approximately in the month of March next year.
All right. And final question then, what's the current value of the unsold inventory that you're sitting on, and where have you deployed the money that you've raised recently, 543 crores?
So out of 543 crores, the money which has been coming to us is around 125 crores. The rest of the money is going to come in by July next year. That's the estimated timelines where they can convert this. And the money that we've infused is nearly around, say around 200 crores on a total project basis. Where certain money is still lying with us. We've kept the liquidity because, like I said, I've just acquired few more projects. The infusion is yet to happen in these, which will come in the next 6 to 8 months' time.
And the unsold inventory?
The unsold inventory for ready possession apartments is nearly negligible because, like our Ghatkopar project is 99% sold out. Our Aradhya High Park project, which is at Mira Road, Dahisar, that is 99% sold out. Ville Parle is 100% sold out. So we are sitting on negligible inventory as of today.
Wow. Okay, just talks about the demand in the Mumbai market, which is completely relentless as well. Thanks very much for joining in, Manan, and wish you luck for the projects ahead. So that's Man Infra. That stock is in focus. And in fact, talking about the real estate stocks, we have a lot of these real estate stocks buzzing today. Brigade Enterprises up 8.5%. Prestige Estates up around 3.8% at this point. So just watch out for that space. And separately, we had Apollo Tyres. The conference call is on, and those are some takeaways which were on your screen. They expect demand to pick up post the elections. We'll take a break. On the other side, Manisha Gupta will join in on our commodity segment. Stay tuned.
परे हो। मोदी आपका बच्चा है, आपने इसको बनाया है, आपने इसको पाल करके बड़ा बनाया है। कुछ कमी रह गई मैं ठीक करूंगा, अच्छा होगा तो आगे बढ़ाऊंगा।
We just barely managed the top line growth of around 4% in the last year. But there were certain reasons for that. And one of the major reasons was the challenge on the supply chain, challenge on the material, which was beyond our control because of various geopolitical happenings. We missed the guidance of 14,000 crore. So I don't know whether it's because of the election year or not, but yes, there was some more tenders which were deferred, especially in the metro and the rail sector. Where around 3,000 crores of orders were deferred, which will now happen sometime between June and September.
Welcome back, and joining us now on the show is Ajit Mishra. He's Senior VP Research at Religare Broking. Mr. Mishra, hi, thank you so much for joining us. And the focus on conversation is gold right now, because we've seen strong gains in the previous year and this year as well. We've seen a new all-time high, and we seem to be holding above $2,300 an ounce with whatever different fundamentals, events and data points that are coming in right now. What's your sense, first of all, on what you would watch in sense of global central banks, geopolitics, because these are a couple of factors which clearly have been supportive?
Yeah, good afternoon, Manisha. So yes, we have been seeing a steady run in gold for the last 3 years, including the current, performance that we are seeing. And in the recent report, we have highlighted like 6 key factors which are basically favoring this up move to continue in the current calendar year as well. So first and foremost is the inflation, which is still sticky, and we have not seen any sign of slowing down in US. Today we have the CPI data also scheduled. But at the same time, there are hopes that there could be one rate cut by the end of the year from the US Fed. So both these factors, like a sticky inflation, but at the same time, hopes of possible rate cut from the US Fed, is helping this gold to continue with their current momentum. At the same time, this geopolitical tension. So earlier it was Russia, Ukraine, and of late we started seeing that the Middle East tension. So that has also resulted in a sharp uptick in the demand for the safe haven that includes gold. And another important aspect that we have highlighted, that the demand from the central bank. This has something which we've been observing as a new trend emerging. Where China is leading from the front, especially in a scenario like this, wherein the global economic growth is also showing sign of slowdown. So, and lastly, that the investment demand is also helping this index, this metal to shine further. So all these factors put together are indicating that this prevailing momentum, which we are seeing for the last 3 years, continuing in 2024 as well.
Ajit, would you say that many of these factors are now baked into the prices? And from here on, what do you think that the gold prices will watch for? And is there any sense on where do you see the prices heading from here?
So yes, somehow, yes, all these factors have already discounted. But at the same time, we are still seeing that, issues are lingering, and we are still not sure when we are going to see that, inflation coming down in the US, and accordingly the reaction. But I feel that somehow it is already like they're okay with this kind of inflation, is what the recent statement from the US Fed chair indicates. So I feel that despite all the known factors, this momentum is here to stay, considering that this lingering tension, especially in the Middle East, that might continue to help this, and plus the global demand, especially from the China central bank, that will help this metal to continue to shine. Now coming to the short to medium term targets, we are eyeing 74,000 as an immediate target, and eventually around 78,000 in next 3 to 6 months. And we feel that instead of accumulating or buying at the current levels, one should gradually accumulate gold, especially after the recent run up. So until unless we break 65,000 mark, we feel that this tone is likely to remain on the positive side. And if we break 65,000, then this scenario might change. So as of now, it's something that one should look for accumulation on every dip, with 74,000, 78,000 being the probable targets.
Ajit, also when you look at the buying patterns within India, how are you looking at that? Because while of course we've seen jewelry buying, which continues to be a big chunk of Indian buying, but would you say that the ETFs, the investment buying also seems to be doing well now?
Yes, so in fact, when it comes to the global investment demand, the OTC demand is slightly on the higher side. The other demand, basically for the ETF and physical demand, they are also seeing kind of a uptick, but not in comparison to what we are seeing in the OTC market. But domestically, yes, since during the festive season, we usually see the uptick in the demand, and that might continue in the probable future as well.
How are you looking at Indian financialization in sense of gold continue from here on? I mean, do you see more products come in? Because even now, as we continue to talk that, as you said, OTC market, the physical market is more stronger. And when you look at gold as a part of portfolio for many of those, as a financial product is still under-owned.
That is correct. So, in fact, that we have the perception that, one should have only hold when they are risk averse or something like that. But I feel this is the best instrument if somebody is planning to diversify their risk, and especially in the market like this where we are seeing the equity markets also doing well. So, we usually recommend to our clients to at least based on their risk appetite, 10 to 20% should be gold in their portfolio. To diversify that, and now people have started accepting this, be it through souvenir gold bond or through ETFs. They started investing. So obviously, we'll see this trend, strengthening further in years to come.
Okay, all right, Manisha. Thanks very much for taking us through the commodities segment and precious metals in focus. We need to take a short break, but up next we'll talk technicals. Pritesh Mehta of Yes Securities will join us. Stay tuned.
The BRS is pulling out all the stops to revamp and revive itself on the ground. Realistically, what's the picture on the ground and how many seats are you targeting?
Well, our best tally was 11 in 2014. We are hoping to either match it or better it this time, only because I think 5 months ago when we were voted out, people did want a change, but now I think they've realized that they've been hoodwinked and they've been cheated by Congress. 10 years ago, a big man had cheated them across the nation. So I think the only party that really symbolizes the aspirations and is closer to the aspirations of people of Telangana is BRS.
What is your message to Revanth Reddy? Revanth Reddy, the Chief Minister of Telangana, says this election, Lok Sabha election, is going to be referendum on his governance based on the guarantees and the 100 days track record that they've had. Your message?
Well, out of the 6 guarantees, he was hardly able to fulfill one. And that too has been a disaster where people are fighting for seats and basically are getting into shouting contests and very ugly scenes. My request to the Chief Minister is please stop trying to fool people all the time, because you've already become the Chief Minister. Now it's time to set the ball in motion and govern the state. And I hope you govern for 5 years, because I hope all the 420 promises that his party made to the people of Telangana will be fulfilled. And I hope he gets a full term, because eventually, end of the day, in a democracy, nobody should continuously try to just set up false narratives and try to fool the people.
We are confident that we will certainly on our side try to take it forward. But typically, I'd be honest, because again, what had happened was we lost a lot of time in between because of changes of positions. I mean, what has happened has happened. So we are definitely very serious about pushing it. My expectation is going into the next term, if all goes well with us, it would definitely be one of our important trade priorities. And I must say, if we...
Welcome back. It's absolutely flat for the market right now as we speak. Mild cut from the previous close levels is what we're seeing on the Nifty. But it's also a bit of a tug of war between both bulls and bears. As you would see, every time there was a dip, it had been bought into. But every time subsequently there was a rally, that rally has been sold into, with the Nifty meandering around the unchanged line. What's doing well is the mid-cap end of things, which is up around 1% for that index. Broader market's doing a lot better as well. So let's talk about this, congestion that the Nifty is facing at levels closer to that 22,300 mark. On May 9th, the high on the Nifty was 22,308. May 14th, which is yesterday, the high on the Nifty, 22,270 before it sold off. And today is 22,297. What's interesting about today's high is that it coincides perfectly with the 50-day moving average of the Nifty, which is 22,297. And there is congestion between 22,297 to 22,350. I mean, if you would broaden out that range, and that's largely because both the 20 and the 50-day moving averages are placed right there. But could there be a case for an up move in the second half of today's trading session? There are two factors that point towards it. The first one, the India VIX, that's been cooling off. It was negative yesterday. Today as well went all the way up to 20.6, 20.7. From there, it's down to around 20.37. Secondly, we are seeing the advance decline ratio stay firmly in favor of the advances, even as the broader markets are doing extremely well. For the Nifty, 22,200 put has seen a fair amount of writing, telling you that 22,100 will be an important support to watch out for. But on the way up, the 22,300 call has seen an equal amount of writing, telling you that maybe around the 22,350 mark could be a bit of resistance, as we were pointing out between the 20 and the 50-day moving average as well. In the second half, if the market has to recover, it has to be through the Nifty Bank, which has seen a fair amount of writing at the 47,500 put. But importantly, it's also seen writing at the 48,000 call for the Nifty Bank to cross the 50-day moving average of 47,667, just below which it stands right now, will be extremely crucial. The one stock I'm watching out for, Ekta, is Biocon. You track the company, but you know, from an F&O standpoint, there's a high open interest build up. The stock's doing well. The open interest is now near 99% of the market-wide position limit, telling you that the stock may enter F&O band. So, irrespective of what the price tells you, you know, the F&O space is telling you that something's, going to take place in Biocon, given the sort of open interest build-up that we've seen.
Okay, interesting. Well, the numbers are today, and they do release their numbers post-market. So I think the street will be watching out for that quite closely. And they do generally hold their call in the morning of after the, which would be the next day. Now, we do have Pritesh Mehta, Senior VP Research, Yes Securities, joining in to discuss the technicals of the market. Pritesh, since we mentioned Biocon, wanted your view on Biocon and your overall take in terms of the markets and stocks.
Yeah, good afternoon. It's been tricky to take a call on a stock which is going to announce the earnings. But despite that, we can take a look at the structured view of the stock. So Biocon, in fact, entire pharma space is looking interesting. If you look at the ratio, pharma versus Nifty, it is outperforming. Within that basket of pharma stocks, something like, you know, Aurobindo, Lupin and even Biocon, they look interesting. In fact, when I look at the structure of Biocon, it is providing a follow through after bullish anchor column. It tells us there could be a continuation towards 365 levels in this particular stock, at least for near term.
All right, and individual stocks, what are you thinking of?
So when we talk about, you know, right now, see, we had seen a period of correction in market. And now when you look at the breadth of Nifty Bank, of the broader markets, they are reversing of bottom. It tells me it's not the right time to create shorts. In fact, we need to look for buying opportunities. So something like SAIL looks very interesting. SAIL of the metal pack, it's showing outperformance. Above 168, we can see levels of 184, 187 in next couple of days. And the stop loss would be around 159. Second stock which we like from the broader markets is Coromandel Fertilizer. So Coromandel International. This particular stock has provided a breakthrough from bullish shutter pattern, and I'm expecting a run up of at least 15% from here on.
Are you looking at Interglobe Aviation, Pritesh? I mean, that stock's been on a one-way rally. In fact, this year itself, it's seen a jump of 40%. The last 12 months, it's doubled. It's taken off and is in literally cruise control.
See, in fact, this kind of stock, we need to keep under radar. And any sort of dip will provide a buying opportunity. It is outperforming in a scenario where market is taking time, market is consuming time. Where your broader markets, after a couple of days of rally, they tend to be, flat. So this stock needs to be kept under radar. If we get this stock around 4,000 levels again, I think we can see a rally towards 4,700, 4,800 also.
Okay, all right. We're going to leave it on that note. Thanks very much for joining in, Pritesh, and giving us those updates. We need to take a short break, but we'll get you more on the markets. Lots more opinion on the other side. Stay tuned for that.
Trade. If there is one person who's really made a huge difference when it comes to commerce and trade. It is my colleague, the Commerce and Industry Minister, who is a candidate from Mumbai. I think his personal role in taking forward the Australia agreement, the UAE agreement, the EFTA agreement, the progress we have made in UK with the EU, with the Gulf, I think he's been really absolutely dynamic and creative in this. So in fairness, I should appreciate it today. On the Chabahar agreement, my understanding is my cabinet colleague Sarbananda Sonowal ji is today going to Iran. And it is expected that we would see the long-term agreement between India and Iran on Chabahar. We've been running it on the basis of ad hoc arrangements. We believe that as and when a long-term arrangement is concluded, it will clear the pathway for bigger investments to be made in the port. Right now, the port has not grown.
As far as the slippage ratio is concerned, we are targeting a number of around 1.20% for the slippage March 25 slippage ratio. As regards the gross NPA number is concerned, you have seen that the gross NPA has come down from 7% plus to 4.98%. We expect further it should be at around 4% in FY25. So for the guidance for March 25 would be on the deposit side 11 to 12% and advances side 13 to 14%. So the guidance for the financial year 25 is on the net interest margin side is that our net interest margin on a global level should be at around 2.95% and this net interest margin on the domestic side should be at around 3.35%.
Maruti Suzuki had first launched the Swift way back in 2005. This has been one of their highest selling models. They've sold over 3 million Swift cars so far. And now this is the 4th generation Swift that has been launched with significant upgrades. The biggest upgrade is the 1.2 litre new Z series engine. This is the best engine that Maruti Suzuki has got in its stable. It also brings down the CO2 emissions by 10%. It gives you better fuel.
Welcome back. Well, definitely a lively market when it comes to the broader markets. Just want to point out that Indegene is doing well today. It's had a little bit of a rocky start. It did go up on the day of listing. After that, there was a decline. So today it is gaining up around 2.5% for Indegene in today's trading session. Net is done well post-listing. And we do have a couple of other stocks which are managing to see some amount of upside. So IFL Securities, that would be one stock which has gained 10% this week already and up 6.5% at this point. Zomato too seeing a comeback today. So that stock is up 2.5%. But Radico Khaitan is in focus post its Q4 numbers. Mangalam, you've been doing the math on that one. Tell us more.
Well, you know, it's basically a descriptor of what consumption in India is like. It's the premium products which are doing extremely well. And in that, Radico Khaitan's ultra-luxurious products, which are basically, you know, the craft gins that they make along with the single malts that they make from India itself, are doing extremely well. So if you just take a look at the reported numbers, there has been a near 29% jump in their revenue, almost a 30% jump. And that's actually resulted in a near 55% jump in their EBITDA. That means the margins have improved from 9.5% to around 11.4% as well, and that's resulted in a 27-28% jump in their profit after tax as well. On an overall volume basis, the popular volumes are not doing too well, which are the lower price products, and which is why the overall volumes have actually declined by 1.2%. But if you look at the prestige and above volumes, that's seen a growth of around 14.2%, and that's actually led by 16% revenue growth in the prestige and above business as well, which now accounts for nearly a third of their overall revenues at around 503 crores for the fourth quarter. The company has given us an inkling into what FY25 is likely to look like as well. They've said that they will deliver double-digit premium volume growth in FY25, and that's not all. While, you know, the costs of some of their key inputs, which include grain-based alcohol or ENA, even glass bottles, continue to remain volatile, they will see some bit of margin expansion alongside reinvestment in A&P spends for the company for branding, etc., would be close to 6 to 8% of their IMFL revenue. So Radico Khaitan, basically the stock doing well because some of their premium products are doing extremely well, and that's reflecting in their margins, though it's mildly off highs. Maybe this quarter will be a bit of a blip, largely because of the elections related issues. And obviously, during a long election, a 7-phase long election, you'll obviously have more dry days in more parts of the country than there were earlier. So barring the first quarter, the remainder of the year looks good for the company.
Okay, all right. So that's on Radico Khaitan. Siemens is also in focus after reporting a good set of its numbers for September year ending 24. Vamakshi now joins in with the details on this. Vamakshi.
Well, absolutely. A good set of numbers coming in from the company, a beat across the board. When we look at the revenues, they've come in at 5,749.9 crores versus our poll of 5,544 crores. This is 4% above what we were expecting, and this growth is largely being led by the smart infra, digital industries, as well as mobility businesses. But even the energy business is seeing an uptick of almost 5%. The margins have improved for all segments, and resultantly we have an EBITDA margin of 15.3% as compared to what we were expecting of almost 12.6%. The net profit also has come in almost 41% higher than what we were expecting, and this is largely being driven by volume as well as price effects, as well as continued productivity measures that the company has undertaken. When we look at the capex that the company has said, they have announced that they will be undertaking total capex of over 1,000 crores in the medium term, out of which they've already announced some bit of capex back in November 2023, but they will be undertaking additional capex of 333 crores for smart infra and a switchgear expansion in Goa, and 186 crores for setting up train manufacturing facility in Aurangabad. They've also announced a demerger of their energy business, and it will be demerged into a separately listed entity, namely Siemens Energy India, and this will take place by calendar year 2025. But the disappointment this time around was in terms of the order inflow. They stood at 5,184 crores. This is a downtick of almost 9%, excluding the large locomotive order that the company received in the same quarter last year. This slowdown is largely mainly on account of the deferment of some large orders. There has also been a slowdown in ordering of industrial automation products due to channel destocking. Overall, we have a note coming in from Jefferies as well. They believe that the company will benefit from sizable power transmission capex ordering. They've gone ahead and revised their EPS estimates by around 2 to 19% for FY25 and 26, and gone ahead and raised their target price to 8,000 rupees per share. So overall, a good set of numbers. Some announcements coming in terms of capex as well as the demerger boding well for Siemens.
In terms of ordering, so there are two parts. One is the normal projects and standard business is doing well overall. We are growing overall. Our first half year has been good. If I look at the first half year, we expect to continue to grow healthily for the second half year. The challenge that we have is only the slowdown in one part of our business, which is in the industrial automation part of our business, which is where we expect that there will be a normalization in the demand starting in the October-December quarter. Volumes have gone up, and with the volumes going up, there is definitely an impact, a volume impact appearing in the margins there. In addition to that, there have been cost control measures that the company has gone into, has carried out, as also other productivity measures in our factories and other areas. In addition, we've had some special earnings because of sale of some property and some dividend that we received. So overall, our intent is to continue to grow the margins as we increase our digital component in the business. There will be an increase in margins as we increase the digitalization initiatives that we have launched here in the company.
Welcome back. Well, that's about Siemens. Just keep an eye on a couple of stocks, 3 stocks in particular. One is D-Link. We've spoken about, the price volume sort of breakout that has taken place in D-Link India in yesterday's trading session. And today follows up with another big volume-led up move that we're seeing on the price. The stock is up 11% and has moved to the high point of trade It's actually seen volumes already nearly 3.5 times what it sees on a 10-day average. Yesterday, this number was close to around 11 times. So a big move on D-Link India. So this is something that we'll keep an eye out on. The other one is Paradeep Phosphates. Just look at that one. Reported its numbers just about 20 minutes ago. The stock has rallied about 6% from the lows. The profitability has doubled year on year at 19 crore versus 9 crore. Of course, there's a big decline sequentially. So Paradeep Phosphates is the intraday chart that should come up for you. A big spike is what you will see mostly in the last 20 minutes post the company's numbers being reported. And the third one I'm looking at is Zomato. Now, Zomato had seen some profit booking over the last 2 trading sessions post its numbers. Brokerages saying that maybe the easy money in the stock has been made, but there was no taking away from the fact that the numbers were good, and now the stock is back to its winning ways at the high point of trade. Let's move on to some primary market action now. We'll talk about the 2600 crore IPO of Go Digit that is open in for subscription. Yash joins in with the details on this new debutant. Yash.
Well, Mangalam, after New India Assurance and ICICI Lombard, Go Digit is gearing up to list itself on the stock exchanges, becoming the third general insurance company to do so. The IPO opens today, closes on May 18. The price band is between 258 to 272 rupees per share. A fresh issue size of 1125 crore rupees, offer for sale of about 5.5 crore shares amounting to 1490 crore rupees, total issue size of 2615 crore rupees. As far as the selling shareholder is concerned, 99.98% of the total OFS issue comes from the promoter, that is Go Digit Infoworks. As far as the objects is concerned, the entire amount of about 1125 crore rupees raised through the primary issuance will be used towards enhancing the solvency at Go Digit General Insurance. If you look at the financials for the company as per 9 months FY24, the gross written premium was up 26%, net earned premium up 36%. Operating losses, importantly, they came down by 82% at an operating loss of 10 crore rupees. Net profit came in at 129 crore rupees versus 10 crore rupees. Combined ratio, importantly, was at 108.7 versus 109.1. Number of customers added went up by 22%. Policy issues went up by 10%. Now, just to give you a sense in terms of how small the companies as compared to the 2 other listed players, ICICI Lombard and New India Assurance, the total income of ICICI Lombard is 2.5 times. New India Assurance is 5 times bigger than Go Digit. ICICI Lombard issued 3 times. New India Assurance issued 3.5 times more policies than Go Digit. ICICI Lombard's gross weighted premium is up 3 times. New India Assurance is up 5 times more than Go Digit. ICICI Lombard's net earned premium, that is more than 2 times, and New India Assurance is more than 5 times as compared to Go Digit. Now, 2 important parameters. One is operating profit. Go Digit's operating loss was at 10 crore rupees. ICICI Lombard has an operating profit of about 1344 crore rupees. And the second important parameter to look at is combined ratio. Go Digit's combined ratio, as I said, is 108.7. ICICI Lombard is at 103.7. Despite these two being in favor of ICICI Lombard and the size being in favor of ICICI Lombard, Go Digit is coming at a valuation of 9.7 times price to book value. Compare that to something like ICICI Lombard, which trades at 7.95 times price to book value. New India Assurance is even lower at just about 1.5 times price to book value. Now, in terms of risks, there are 5 key risks that I pointed out. One is that the underwriting losses for the company may continue because investments in distribution and infrastructure, digital infrastructure, may remain elevated. Second one, dependence on motor portfolio. 61% of the premium comes from motor. Any problems in that particular segment could create problems at an aggregate level. Expenses of management guidelines from the regulator could constrain spending from the company, and dependence on brokers also could become a problem for the company. The fifth one, geographical concentration. 55% of the revenue comes from Maharashtra, Karnataka and Delhi. Any catastrophic incident in these states could create problems for the underwriting performance as far as the company is concerned.
Okay, all right, Yash, thanks very much for that. We'll take a short break, but we'll get you more on the markets. Stocks continue to be in focus, so we'll get you a lot more news. Stay tuned.
%, according to Maruti Suzuki. The average mileage that you'll get across the automatic and manual variants would be anywhere between 25 kilometers a litre to 26 kilometers a litre. High on safety as well. 6 airbags as standard across variants, even in the entry-level model. 3-point safety belts. You also have seat belt alerts. In terms of infotainment and connectivity in the car, you've got a 9-inch infotainment display, Apple CarPlay, Android Auto. You also have a wireless charger in front, 2 USB charging ports at the back. This is the first time that the Swift will get rear AC vents as well. They've also given LED lamps here in the front and the rear. Usually these are there in premium vehicles, but Maruti has made sure that they give this to their highest selling hatchback and make this a strong premium hatchback offering. Now, all of this coming at a price tag of 6.5 lakhs ex-showroom for the entry-level model, which is a manual variant. The prices go up all the way till about 9 lakhs. 2 new colors have been introduced by Maruti. One is blue and the other is orange. They've already started bookings for this new Swift. They have received bookings for over 10,000 cars so far. This, like other Swift models, were exported to Europe and other markets around the world. This car too will also be exported. So it will be a very important product in Maruti Suzuki's portfolio, and let's see how this really does in the market, because Maruti Suzuki has invested 1,450 crores in this model, in developing this new Swift at a time when hatchback sales are actually falling. But somewhere Maruti Suzuki believes that there is still strong demand for the premium hatchback segment, and one day in the next few years the hatchback segment will revive. With Bureau Journalist Pradeep, this is Parikshit Luthra.
Things have not changed from there. Industrials and capital goods, just to remind you, we've been overweight since October 2021, whereas most people started talking about it only last year. Where we added more recently have been some commodities, metals and cement. Though, I mean, we're not overweight there, but earlier we had very little there, so we've added some there. Most latest addition has been a bank, where we still, I mean, banking as a whole, we still remain underweight, but you know, after a bad phase, it's not looking quite so bad anymore. So some of the stocks are beginning to look a little better than they used to. Just as, I mean, we are now watching IT, that sometime this year, I think that will bottom out and that will give a good buying opportunity.
As I mentioned right in the beginning, you're here for the IPL tournament, which is going on in full swing. This is your first time leading.
Welcome back. You're watching us here on Halftime Report. Market doing market things. Absolutely flat for the frontline index. The mid-cap index doing well. So a good time to get in some words from the wise. In an exclusive CNBC TV18 conversation, Parikshit Luthra, our colleague, is speaking with Mark Mobius, Chairman, Mobius Emerging Opportunities Fund, of course, the big bull on India and the wise man of Wall Street, along with the Indian stock markets as well, investing.
They had humble backgrounds, or maybe worked as a carpenter for that matter, but through wise investments, through patience, through frugality, they managed to earn a fortune over a 20 to 30-year period. So what does this really mean, and what's the lesson in all of this for people getting into the stock market right now?
A very important point. You know, a lot of people think that, oh, I've got to have a college degree. I've got to go to a university. Oh, I've got to finish high school. All these things are not necessary if you are willing to learn. You know, the books are available in the library. You can go to any library. Most countries in the world have libraries. And now with the internet, it opens the whole world of education to anyone who's willing to buy a cell phone or a small computer. So the education aspect is something that's very critical, and you must not think that it necessarily means a degree. A degree is just a piece of paper. It's what you have in your brain, what you've learned, and what you practiced is the most important. I would say 50% or 60% of the people who have degrees normally don't go into the field in which they were educated. They go into something different. They could have done that without having the degree. So this is very important. Don't forget about the degrees and the paperwork. Think about what you're actually learning and how you're applying that learning to your life.
Right. You've also spoken and quoted someone to say that it's your attitude, not your aptitude, which decides your altitude. Is that very important in the current context?
Exactly. You see many people around the world that have a great education, formal education, have a great aptitude for a certain field, but they don't use it. They don't apply it. And therefore, they're not going to be successful. They don't have the right attitude. In other words, they don't have the attitude to be successful, the attitude to learn more, to keep an open mind, and to progress, to move forward. So that's why I say attitude is more important than aptitude.
Right. Now, speaking about the emotion portion, you've warned investors to avoid the emotion portion in the markets. Avoid a herd mentality, stay calm, be knowledgeable, study the markets well, study the stock well, and then decide your call. What would be your advice and context in the current environment in India and globally?
Well, you know, in the book, I mentioned the term emotion is the potion. In other words, the markets are driven more by emotion than by intellect or by rationality. In fact, that's the case of our lives. If you look at your normal daily life, you find that so much of it is driven by emotion. When it comes to investing, you've got to be much more rational. You've got to observe emotion. In other words, understand emotion, understand the crowd behavior, and use that understanding to invest. But don't get involved yourself in the emotion of the market. And I remember John Templeton saying the best way to invest is to buy when others are selling, are despondently selling, emotionally selling, and to buy to buy when others are aggressively selling, and to sell when others are aggressively buying. So this is the kind of thing that you've got to recognize when you're looking at a market.
Right. You know, Mark, coming back to the India scenario, there are, of course, a lot of things which affect the sentiment in the markets. And currently, there is a certain degree of volatility, a decline in the Sensex and Nifty that we've seen because of Indian elections. That is what several experts suggest. Do you think this volatility is indeed due to elections, or are there other factors at play? How should investors see this?
I think there's no question the elections are having an impact because people do look at the elections very carefully. Everyone is involved emotionally in one degree or another, and they tend to react emotionally in the market itself. So now there's an opportunity, because if you can look at the emotion in the market and recognize that perhaps the emotion, the direction of the market driven by emotion is wrong, then you should do the opposite thing. In other words, if everyone's selling, maybe you should be buying, and vice versa. Of course, based on the fundamentals, on the actual fundamentals of the companies in which you are investing. So yes, I would say that for India now, probably the Indian elections are having a big impact on the emotion of the market.
Right. We've seen at least 47,000 crores offloaded by foreign institutional investors since the time the elections began in India in April. Approximately $6 billion have been offloaded, Mark. What, according to you, would be the reasons for this?
It's probably because the uncertainty arising from the election. A lot of investors, not only foreign investors, but investors anywhere in the world, including Indian investors, tend to hate uncertainty. They don't want it to be uncertain. And of course, as you mentioned, the outcome of the election is uncertain. You know, some people say that that Modi will get a supermajority and that he'll be able to get more seats in Congress. Other people say no, he may not, and that creates uncertainty. So whenever there's uncertainty, people say, okay, I'm out of here. I'm going to wait until I find out what's really going to happen, and then I'll invest. So uncertainty is a big driver to this, and that's probably what's happening with foreign investors.
Right. Let me ask you about 2 to 3 scenarios. One is if the Prime Minister, the BJP, the NDA, they cross the 400 seats mark, as they have been suggesting and claiming that they will win big, they will win with record numbers. If they manage to do that, how do you see the markets reacting, and what will be the growth momentum and investment momentum and attitude towards India?
I think if they do that, the market will probably do well, probably move up, barring any other factor coming in. But I would say it would be good news for the market. And more importantly, it would be good for the economy, because then the policy objectives of growth and the adoption of technology will be very important. One of the key aspects now for India will be its ability to attract foreign technological investments, semiconductors, software, etc. There's an incredible opportunity for India to become the center for technical innovation and technical manufacturing. And that will depend on the degree to which the Indian government is able to attract these large manufacturers from China, from Taiwan, from US, Japan, etc. And that, of course, depends on the degree of bureaucracy and restrictions that the Indian government imposes. And my reading is that the Modi government will probably try to make it more attractive and loosen up these restrictions, which will attract more foreign investors.
You have led, of course, Australia in ODI and Test. What has been your experience leading, the Orange Army over the past few weeks?
Yeah, it's been fun. I think, first of all, T20 cricket, it happens so fast. You've got to make decisions quickly. Sometimes you finish your over and you remember you haven't chosen who's going to bowl next over. You've got to quickly think about it. So that's been one aspect. I think working with a lot of the Indian players I didn't really know super well before coming over has been great as well. Learning about what motivates them, what makes them tick, and just seeing the kind of raw talent of a lot of these guys has been awesome. So a little bit of a different experience, but most of it's the same. It's been a lot of fun.
Yeah, and nature of IPL is such that you get to, play with and work with people from different countries, cricketers from different countries, from different cultures. What is that like, and what is the learning from that experience, Pat?
Oh, it's great. In our team, we've got a couple of South Africans. We've got Glenn Phillips from New Zealand. Even a couple of the coaches have played all around the world. So it's good. I think you realise that people from different cultures might even speak different languages, but kind of when it comes to cricket, everyone's pretty similar.
Yeah.
And it's kind of the one thing everyone bonds over. But even some of the overseas players who we've played, for Australia against, sharing some of the stories of the great matches we've played over the years is always a bit of fun as well.
So do you foresee SRH going ahead and winning the IPL this time round?
Of course, that's why we're here. Absolutely.
Is it a gift to self in the birthday month, which is May?
Yeah, I mean, that would be great. Yeah, we've obviously, SRH have won it once before. So first goal is to get to the top 4, and then anything can happen in the finals.
So you are such an inspiration, Pat, and India is a country where cricket is a religion. I believe every nook and corner, even the place that we are sitting in right now, every nook and corner will have an aspiring cricketer to make it to the top 11 in the country. What is your tip to them? What is your formula? What is the Pat Cummins formula to make it to the team?
Well, I think, what I always say is just, we all started playing cricket because we love it, and if you love it, you end up training more, you end up playing better, you play with more freedom, you're not uptight. So I always just say, whatever keeps you loving the game of cricket, and keeps you playing for those right reasons, I think is going to give you the best chance as well.
उत्तर प्रदेश में आपने अभी कहा कि आप सीटें बढ़ाएंगे पिछली बार।
Stocks open firm but pull back even as the market breadth remains positive. Utilities, industrials and real estate are the big gainers, while auto financials and FMCG dragged today.
Bharti Airtel reports a mostly in-line quarter, but subscriber additions surprise, while Shree Cement manages better than expected realizations, but guides for a more moderate 8 to 10% growth in FY25.
Siemens shares jump after it beats street estimates on almost all counts. The company also lines up a capex of 1,000 crore rupees and says it will demerge its energy vertical into a separate listed entity.
Thermax and PB Fintech are amongst the stocks that react positively to their inclusion in MSCI's Global Standard Index following the quarterly review, but most F&O stocks see muted moves due to prior positioning.
Metals shrug off the imposition of higher tariffs on Chinese imports. Copper holds near two-year highs on tight supply in the face of rising demand. Hello and welcome. You're watching Business Lunch. I'm Nisha Podar. With me, as always, is my co-anchor Sonia Shenoy. Hi, Sonia.
Hi, Nisha.
So the choppiness in the market really continues. Let's take stock of the market at this point in the trading session. And Nifty 50 has lost a lot of ground and is off the high point of the trading session. And in a tight range, it has been choppy, but almost flattish at this point at 22,200 levels at the moment. It's also more than 100 points lost when we talk about Sensex, and Bank Nifty is the one which is underperforming the most today with 0.45% downtick. But a spot which is really shining in trade today is the mid-cap universe. It is seeing buying and 0.8% up, and that's also revving up the market strength overall, Sonia.
Oh, absolutely. And you know, the good part is that there is a pullback, right? I mean, there were days really when the market was just falling, and that was a bit disconcerting as well for a lot of the investors. But now there's been a pullback for 2 days in a row. So let's see which way things go. But plenty of stocks to talk about and plenty of things to focus on in the market. So let's start with that. Let's focus on the elections as Mumbai goes into polls on the 20th of May. Prime Minister Narendra Modi is due to hold a roadshow in the city later this evening. CNN News 18's Yesha Kota gets us up to speed with all the happenings from the ground. Yesha, over to you.
Preparations are in full swing for Prime Minister Narendra Modi's roadshow in Mumbai. This is his first roadshow in Mumbai ahead of the elections that are going to be held on May 20th. His route in Ghatkopar is in fact starting all the way from LBS Marg, and he'll be passing through this route and ending it at the MD Bhatia School, which is approximately just 50 meters away from here. Like we can see, there have been hoardings of Prime Minister Narendra Modi that have been put up. Apart from that, there are flags of all the parties supporting BJP, that is that of Shiv Sena as well as NCP and RPI that have been put up. Apart from that, there are huge cuttings of Prime Minister Narendra Modi and this huge statue of Lord Rama that's also been put up. In fact, to ensure that the security arrangements are in place, the Mumbai police has taken a stock of the situation along this 2-kilometer route. Right here in Mumbai, Prime Minister Narendra Modi would be campaigning for the BJP Northeast candidate, that is Mihir Kotecha. In fact, in today's entire schedule, Prime Minister Narendra Modi is set to begin his day at Nasik, following which he'd be in Kalyan Dombivli to campaign for Shrikant Shinde, the son of Chief Minister Eknath Shinde, and following which he'll end his day post 4:35 in Ghatkopar, wherein this 2-kilometer road show would be held, which is where we actually see excitement building up in Mumbaikars to catch a glimpse of the Prime Minister. In fact, this is his first visit in the week to Mumbai just ahead of the election on Monday. The second visit would be on Friday, wherein he'd be addressing a gathering at Shivaji Park.
All right. Thanks so much, Yesha, for that update. And yes, 20th May, a big day for Mumbai. Now, 5 constituencies of Bihar will also go to polls in the next phase on the 20th of May. And ahead of that, my colleague Santya caught up with the RJD chairperson Tejaswini Yadav and also discussed the prospects for the Rashtriya Janata Dal in this year's election and more details on the election euphoria. Take a listen.
We're going to surprise everyone and we're going to win majority seats, and in result it will happen that NDA will not form a government in Central. So it is one-sided now. People have been asking questions for 10 years what you have done for Bihar. You have only cheated, you have only promised, but you have not delivered anything. Nothing. 0. Out of 100, they get marks 0. And they've been asking questions about employment, about the industry, about the agro industry, about the flood issues, about our poor people, about the expenses are going high. The Modi government is not doing anything for poor people.
Right. You spoke about employment. You have said that Agniveer will be scrapped if you guys come to power. Will you guys come up with a new recruitment system for the forces or bring the old one back?
The old one, the way it used to run.
About farmers distressed, an important issue
we'll
for...
give 10, about 10 foods we will be giving MSP.
Any chance of going back with Mr. Nitish Kumar? Because he has, if I can say that, broken up with you guys on 2 occasions. Any chance of joining hands with him again? Ever?
See that party credibility is not there. So I don't think so. This thing will come up and this option will be there.
How many seats for India Alliance in Bihar?
Majority seats.
Okay, as India enters the last lap of the elections, Network 18 travels to the heart of the Hindi heartland of Uttar Pradesh with a group of business leaders, investors and ambassadors to get a glimpse of democracy in full swing. Amongst the 14 key constituencies in Uttar Pradesh, which will go to polls next week on the 20th of May, include Lucknow, Amethi, Rai Bareli, Jhansi, Barabanki, Faizabad. And we hit the road to meet leaders like Rajnath Singh, Smriti Irani, Ashok Gehlot and lots of many others.
All right, so it's all about elections in the country. A big queue there for the market as well. All right, we'll take a short breather on the show, but when we return, we will focus on Google's new AI offerings and much more. Stay tuned to Business Lounge.
बार से
उत्तर प्रदेश में सीटें बढ़ाए मतलब अगर सब कुछ अच्छा रहा तो 80 की 80 हो सकती है।
अरे तो बहुत ही बड़ा बयान है आपका। रिकॉर्ड 2014 का ब्रेक होगा जी, 71 और 73
हो सकता है। हम सब कुछ अच्छा रहा तो 80 की 80 भी जीत सकते।
इसका मतलब आप अखिलेश को कन्नौज में हराएंगे, अखिलेश जी को, डिम्पल को मैनपुरी में हराएंगे, उनकी पूरी फैमिली फिरोजाबाद, आजमगढ़।
मैंने संभावना कहा है कि हम 80 की 80 कर सकते हैं। हमारी सीटों की बढ़ोतरी होना निश्चित है।
राहुल गांधी और प्रियंका गांधी जी का कभी हाँ कभी ना, कभी लड़ रहे हैं कभी नहीं लड़ रहे हैं, अभी कुछ सुनने में आ रहा है कि शायद अब नहीं लड़ रहे हैं। इसको कैसे देखते हैं आप?
देखिए, ये लोग आत्मविश्वास गवा बैठे हैं। अपनी पुश्तैनी सीट से भी लड़ने का आत्मविश्वास नहीं है। अगर नहीं लड़ना था तो इतने समय तक सीट क्यों पेंडिंग रखी? किसी कार्यकर्ता को दे देते तो कम से कम वो जनसंपर्क तो कर सकता था। ये कंफ्यूजन जो है कहीं न कहीं लैक ऑफ सेल्फ कॉन्फिडेंस को दिखाता है।
सैम पिट्रोडा जी ने जो है इनहेरिटेंस टैक्स की बात की, जो हम लोगों की जमा पूंजी है, जब हम अपने लोग पूरा बचाते हैं अपने फैमिली के लिए, जब हम उसको अपने आने वाली जनरेशन को देंगे तो उस पर भी टैक्स लगेगा और ये टैक्स बहुत बड़ा टैक्स हो सकता है। तो क्या आप कहेंगे कि बीजेपी अगर आएगी तो इस टैक्स को कभी नहीं लागू करेगी?
भारतीय जनता पार्टी क्या करेगी, हमारे मैनिफेस्टो में साफ हमने लिख करके लाए हुए। अब उन्होंने कहीं सगुफा छोड़ दिया तो मैं भी वो झंडा लेके घूमूंगा, ये सवाल आपके मन में कैसे आ जाता है? भारतीय जनता पार्टी की विचारधारा साफ है जी। हम अपनी विचारधारा के आधार पर कार्यक्रमों को लेकर के, मैनिफेस्टो को लेकर के देश के सामने जाते हैं। कृपा करके ऐसे महाशयों के विचारों को हम पे मत थोपिए भाई।
मोदी जी, राहुल गांधी ने एक बात और कही है। वो कहते हैं कि जब वो सरकार अगर उनकी आएगी तो वो एक नेशनल एक्सरे कराएंगे। इसी से जुड़ा सवाल है, इसीलिए मैं पूछना चाह रहा हूँ, एक नेशनल
Welcome back. You're watching Business Lunch on CNBC TV18. Well, let's focus on tech giant Google as shares of Alphabet closed higher on Wall Street after investors digested a slate of new AI offerings that were unveiled at Google's developer conference. Amongst the offerings are new AI-based search tools and a new Gemini model that they call Project Astra, which Google hopes will soon become a universal AI assistant for users. Ashmit is here to tell us more about that. Ashmit, over to you.
Well, I'm coming to you from Mountain View, California. I'm at the site of the Google campus, at the site of the Google I/O 2024. Sundar Pichai and his team had promised some breakthrough announcements. They've made a few of them. We'll take our viewers through them one by one. The biggest announcement, of course, was Veo. This is the new AI generative tool that was announced today. What this does is that it turns textual prompts into videos. Now, what's important is that this comes on the heels of OpenAI's Sora, and that had created huge tidal wave, so to speak, as far as the content creation space is concerned. What can this do? This tool of generative AI turning textual prompts into videos, videos being generated. Veo generates videos to the tune of 1080p. These are high-resolution videos we're talking about. What does this mean? There were talk of how this may revolutionize the content creation space, the media industry and production houses going forward. That was just one announcement. The other, of course, was integration of Gemini with Google Search. This, Google says, will help customize, curate results as per the individual needs of users. So whether you want to plan an itinerary for a trip that you may want to go to, or whether you're looking for a restaurant based on certain budget considerations, this product will do that for you. First available in the US and then subsequently in the rest of the world. There is also talk, there was one of the announcements made, was integration of Gemini with Android. This again will help improve your Android experience. At least that's what they're pitching it as, that whether you want to summarize a video, whether you want to draw inputs from a PDF file, that can be done via this customization between Gemini as well as Android. And finally, on the question of deepfakes, etc., that is one issue where they have spoken about open sourcing of watermarking. This watermarking of synthetically generated content is something that has long been spoken of in terms of addressing issues of deepfakes and misleading information. So important directions being given by Google on the way forward.
All right, that was our colleague Ashmit giving us the full lowdown. In fact, CNBC caught up with Sundar Pichai, who is the CEO of Alphabet and Google's parent company, and spoke to him about Google's new venture project, Astra. And listen into what he had to say on this launch and the way forward.
Project Astra itself is one, right, to be able to process the real world in front of you and constantly process it and answer it intelligently. We are building, you can go to Gemini and ask it to plan a trip. In search, we announced multi-step reasoning. You can write a very, very complex queries. Behind the scenes, we are breaking it into multiple parts and composing that answer for you. So these are all agentic directions. Very early days. We're going to be able to do a lot more. I think that's what makes this moment one of the most exciting I've seen in my life. Project Astra is something we are working to bring to Gemini, but we'll do it sometime this year. It will be quality driven, just like with Google Lens. We are going to test it out, give it to more people, but then roll it out widely.
Okay, staying in with the AI space, it is the most powerful word in our world today. Its transformative potential is unparalleled. TCS has conducted a comprehensive global survey on the state of the AI adoption and its impact on businesses. The study surveyed nearly 1,300 CEOs from 24 countries. Reema is here with some of the key findings. Reema, over to you.
Thanks so much for that. So as you pointed out, the survey was extremely comprehensive and exhaustive. But for the sake of brevity, I'm going to limit it to just about 3 questions. The first question that the survey asked the 1,300 CEOs is the transformative impact potential of AI and how it compares with past disruptive technologies like smartphones and internet. Well, here's what the report throws up. They say 54% believe the impact will be greater or equal to that of the internet, while 59% of them believe the impact of AI on business will be more than that of the smartphones. So AI's influence will be at par or even exceed the transformation brought on by the advent of internet and smartphone. The second question was on jobs, because this is a very sensitive topic that has garnered a lot of attention. So the study asked that what will be the potential impact of AI on jobs, and here the senior executives are fairly divided. So 47% of them believe that more roles will be eliminated because of AI than be created. Now the third question is the impact that AI will have on productivity, and here only 12%, okay, I repeat, only 12% believe that AI is not going to have much of an impact on productivity. 40% believe that the impact on productivity will be incremental, while the balance 48% believe that there is going to be a dramatic increase in productivity due to AI, ranging between 2 to even 4x. And finally, with tightening IT budgets, the need to demonstrate the return on investment is very high. But right now, study shows that there are not enough metrics to track the KPIs which measure the success of AI. So 72% of the respondents, the CEOs surveyed, believe that they need better KPIs to measure the success of AI. But that's not the only challenge that CEOs are facing. The study asked what are the top 3 challenges that executives are facing, and they're saying the first one is the current IT infrastructure, second, customer expectation, and IT service providers. And generative AI comes with its own set of challenges, top of mind being security, privacy, ethical and responsible use of AI, talent development and IT readiness too are the important challenges that they're facing. And let me end with 2 other key findings. One, 86% of the senior business leaders have already started deploying AI to enhance the existing revenue streams or create new ones. And majority of them, nearly 70% of them, want to use AI to boost the top line rather than just focus on cost optimization or improve the productivity. So the focus is actually on using AI to increase the top line. Back to you.
All right. Thanks so much, Reema. Quite a detailed report and answers many questions. Of course, the entire industry is evolving as AI also evolves in its use case. We'll slip into a short breather on Business Lunch, but when we return, the Biden administration has decided to impose higher tariffs that could impact Chinese imports. We'll get you all the details on the other side. Stay tuned.
बात सिर्फ कास्ट सेंसस की नहीं है जो कि वो करते आए हैं, उस पर भी मैं आपका मत जानना चाहूँगा, मगर बात वो कहते हैं इससे आगे है। बात कास्ट की नहीं, बात जस्टिस की है। और वो कहते हैं कि हम जो है एक सोशियो इकोनॉमिक सर्वे लाएंगे, एक इंस्टीट्यूशनल सर्वे लाएंगे और उसमें देखेंगे कि किसके पास किस जाति और किस उस वर्ग के पास क्या है, कितना धन है, कितनी इंस्टीट्यूशंस में भागीदारी है, और उसके बेसिस पर हम इस पूरे सिस्टम को रीडिस्ट्रीब्यूट करेंगे। इसको आप कैसे देखते हैं?
सबसे पहले तो इस देश में जो लोग अपने आप को राजनीति के एक्सपर्ट मानते हैं, जो लोग देश के उतार चढ़ाव को बड़ी बारीकी से अध्ययन करते हैं, सबसे पहले उनका दायित्व है कि वो ऐसे लोगों को पूछे कि जिस परिस्थितियों का वर्णन आप कर रहे हो, अगर ये सही है तो 50, 60, 65 साल तो आपने राज किया भाई। ये मुसीबत के जो जन्मदाता आप हो और आपने अब तक ये बर्बादी लाई क्यों? पहले उनका जवाब मांगो भाई। नंबर 1। नंबर 2, एक्सेल का मतलब क्या है जी? मतलब हर परिवार में जाना, घर घर छापा मारना, अगर किसी अनाज के डिब्बे में किसी महिला ने अपने गहने छपा के रखे हैं, उसको भी एक्सरे किया जाएगा, उनके गहने ले लिए जाएंगे, जमीनों का हिसाब किताब किया जाएगा और फिर उसको रिडिस्ट्रीब्यूट करेंगे। ये दुनिया में एक माओवादी विचार ने सब किया हुआ है, दुनिया बर्बाद हो चुकी है जी। ये पूरी तरह अर्बन नक्सल उस सोच का सीधा सीधा प्रगटीकरण है और इसलिए मैनिफेस्टो आने के 10 दिन तक बाद भी ये जो जमात आए दिन लिखापट्टी करती है ना, वो चुप रही, उनके प्रोटेक्शन में चुप रही है। तब मिलके मेरी जिम्मेवारी बन जाती है कि देश को जगाना।
Welcome back, and straight to the top global story today, and it's some important updates coming in from the world of trade now. And the Biden administration has decided to impose tariff hikes which would impact $18 billion worth of Chinese imports. In fact, CNBC's Megan Casella gets us a roundup of the move and its details.
Biden administration is hiking tariffs on roughly $18 billion worth of Chinese imports. Now, these are going to be focused on what the White House calls strategic sectors. The list includes steel, aluminum, and battery components, which will face 25% tariffs. Solar cells and semiconductors will face 50% tariffs, up from 25%. And electric vehicles will see their tariff rates quadruple to more than 100%. Now, most of these tariffs will take effect this year, but some will be phased in over a year or two in order to give U.S. industry time to adjust. Now, this move comes as a result of the Biden administration's review of those tariffs that President Trump put in place in 2018. Officials said the conclusion of that review was that China had not sufficiently changed any of its behavior. They cited IP theft and overcapacity concerns. So as a result, they left all of those tariffs in place while adding these new ones. The key word the White House is emphasizing with these measures is targeted. It's why they say they feel this move will not contribute to inflation and why they believe it will not dramatically escalate tensions with China. Now, the White House economic director, Lil Brainerd, told reporters the goal with these tariffs is to ensure that the administration's investment so far in specific industries would not be undercut by unfairly priced Chinese imports. White House officials also emphasized that this is not a political move, but Brainerd did highlight Pennsylvania and Michigan, two key swing states, as areas that will benefit from these actions.
Okay, that's all the time we have on Business Lunch. Midcap Radar comes up next. Do stay tuned in.
आपको लूटने की ये तरकीब हो रही है। और दूसरा पार्ट है डॉक्टर मनमोहन सिंह जी वगैरह, उन्होंने हर बार कहा है कि भी जो भी संपत्ति होगी इस पर पहला अधिकार किसका होगा। तो हिसाब किताब बहुत साफ है, वो क्या करना चाहते हैं।
मोदी जी, अगर एक सवाल मैं ये समझना चाहूँ कि ये जो तीसरा टर्म होगा आपका, वो पहले दूसरे से अलग कैसे होगा?
पहला कार्यकाल मेरा कैसा गया, तो मैं सामान्य मानवी की जो जरूरतें थी उनको मैं एड्रेस करना चाहता था। अब मुझे देश को तीसरी आर्थिक महाशक्ति बनाना है। लेकिन ये जब मैं 11 से 5 पे लाया, उसी की कंटिन्यूटी है जी। ये मैं 5 वर्ष और निकम्मा और 3 वाला अच्छा, ऐसा नहीं हो सकता जी। तो पहले मनमोहन सिंह के समय पर 11 तक थे, हम जोर लगा करके 5 पर ले आए, अब जोर लगा करके 3 पर ले जाएंगे। तो हम हर चीज में कंटिन्यूटी करना चाहते हैं। अब जैसे बिजली, हमने बिजली पहुंचाने का बड़ा अभियान चलाया, बिजली पहुंचा दी। अब मेरा लक्ष्य है पीएम सूर्यघर योजना और 0 बिजली बिल, और मैं हर घर पर सोलार सिस्टम लगे, और मैं सिर्फ बिजली का बिल 0 चाहता हूँ, इतना ही, मैं 3 चीजें चाहता हूँ। एक, हर परिवार का बिजली का बिल 0 हो। दूसरा, अतिरिक्त बिजली जो हो वो बेचे, कमाई करे। तीसरा, जमाना इलेक्ट्रिक व्हीकल का आएगा। मुझे आत्मनिर्भर होना है एनर्जी के सेक्टर में, और इसलिए मैं चाहूँगा जो इसके पास भी स्कूटी हो, मोटर हो, जो भी हो, उसका चार्जिंग अपने घर में ही हो जाए और सोलार से हो जाए। मतलब आज उसका जो ट्रांसपोर्टेशन का महीने का 1000-2000 रुपया खर्चा आता है, वो भी 0 हो जाए। ये त्रिविध बेनिफिट नागरिक को और देश को, पर्यावरण का बेनिफिट, देश को आज पेट्रोलियम इंपोर्ट करने का जो अरबों अरबों डॉलर जा रहे हैं बाहर, वो बंद हो जाएगा। तो मल्टीपल बेनिफिट वाला योजना। अब जैसे स्टार्टअप हब, मैन्युफैक्चरिंग हब बनाना है, मुझे इनोवेशन हब बनाना है, यानी मैं एक बिल्कुल नए एरिया पर देश को ले जाना चाहता हूँ, और बड़े कॉन्फिडेंस का, और विजन मेरा क्लियर है, मुझे कोई दुविधा नहीं। मेरे पास बताया है नेक्स्ट 100 डेज में, 4 जून के बाद 100 डेज में मुझे क्या काम करना है, अभी से मेरे पास क्लियर है। 5 साल में क्या करना है, क्लियर है। 2047 में विकसित भारत बने, क्लियर है। इसलिए मैं कहता हूँ 24/7 फॉर 2047, ये मेरा मिजाज है।
Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Well, we are at that juncture where Nifty is falling a little bit more, but it's quite flat with some negative bias. So 24 points lower on the Nifty right now. That's been the case for a while. Quite volatile today. But what's doing well is the mid-cap side of things. So that index is up around 423 points. Bank Nifty, that is the one which is lower in trade. 242 points cut off there. So that is a big loser in trade today, but a lot of broader market movers, and that is something we'll discuss in greater detail. FMCG, autos, banking index, consumption index, all of them lower in trade today. So we'll discuss that. But Power Finance, that is the stock in focus on the back of its fourth quarter numbers. The revenue is up 20% and the net profit also rises 18% on a yearly basis. In fact, my colleague Abhishek Kothari spoke to Parminder Chopra, the chairman and managing director of the company, and began by asking her about the implications of RBI's draft paper on provisions for power projects. Let's listen into that conversation.
See, I think that RBI has always been focusing on prudence while talking of the project financing. So if I talk about the concerns on the PFC's accounts, so you would be knowing that we are following India's accounting standard and not the ICAP. We have already switched over to that. So in NDAs, the RBI has clear-cut directed that any difference between the ECL and the IRAC has to go to as impairment reserve. So first of all, I would like to say that on the front of affecting the profitability, we don't foresee any impact on the profits of the company, as this is going to be as an impairment reserve. The second part, yes, I agree that that is going to adversely impact on the capital adequacy as well as on the loan growth. But you know that PFC, while declaring the results, we have also shared the capital adequacy above 25%. And that to Tier 1 capital around 20%, 23%, as against the RBI norms for 10% as the minimum tier capital. We don't foresee that this is going to have a major impact on PFC, either on the front of maintaining the capital adequacy or on the loan growth. There is another reason that when we analyzed our portfolio, that 25% of our total portfolio is the projects under implementation. Out of this 25%, around 45% is the projects under generation, where we have a longer tenor and there could be impact of the extension in DCCO, which RBI is talking of having the additional provisioning of 5%. So on overall basis, this is not going to have much impact, and the details are yet to be, these are being examined, and I think the details will be worked out when more clarity on these guidelines or the final guidelines come out.
Well, yes, this is a draft consultation
Yes.
that they have put out. Will this cause slowdown in the, fresh capex that is being built up in the power sector?
There could be some effect, but as far as I know, that from the PFC's point of view, we are having sufficient cushion on the capital adequacy front, and our focus is on the distribution sector and the renewable sector. Renewable, which has a comparatively smaller gestation period, as you know, and the distribution sector, where most of the loans as of now are backed by the government guarantees. So we are not foreseeing much impact on those lines.
How are the DISCOMs dues shaping up as of now?
After implementation of the LPS, you know that there has been a tremendous improvement in the liquidity across the system. If we talk that before introduction of the LPS, there was outstanding dues of 1,39,000 crore of the various GENCOs towards the DISCOM. That has diluted to the extent of 73%. So only a minuscule portion is left. Apart from that, the current dues, if we talk, after the introduction of the LPS, around 9 lakh crore billing has been done by the GENCOs to the discoms. And I'm happy to share that we have not seen any major defaults in that. So the liquidity across the value chain in the power sector is improving a lot. On the dues of the discom sector towards, if you ask about the lenders like PFC, so we are not facing any issue in realizing our dues from the discoms still now.
Will this draft regulation, if implemented, that will increase the cost for power industry as a whole, and if the norms comes into effect?
There will definitely be some impact, but how far it is going to be impacted, it all depends on the market dynamics. We are talking of 5% provisioning, and in case that goes beyond 2 years, maybe another 2.5% provisioning over the life of the loan. When we disburse, definitely it's going to have immediate impact, but that provisioning, since these are the long-term financing which we are providing, so we are not seeing